in the second half of the year. The way things are going, if the tariffs issue isn't resolved soon, and I'm talking about the next few weeks, then it's going to bake in a recession in the second half of the year. And in terms of the stock market, I think you're making a very good point here. It's not very likely we're going to go back to forward PEs of 2022. I mean, if we right now we're I think about 17, and obviously the issue is also earnings. I think we're going to recover, but 6,000 is still what I'm thinking. But I'm changing my mind as often as the president's changing
maybe
my
not.
mind.
The Euro CEOs, I don't know, but technical damage to the markets too. And I don't know why any rally wouldn't be met with some people saying, wow, this is my chance.
Yeah, no, you're right.
To get out, and I don't know if it would hold any type of...
Well, it wouldn't be straight up and then...
Do you think the market, so we heard Jamie Dimon, and I've heard other people say the market in general is overvalued. Was overvalued, is overvalued. PE-wise.
Yeah, I mean, with the benefit of hindsight, that's absolutely true.
What is the PE now? We don't know what the E is.
Well, we don't know what the
least
E
20.
is. It's going to depend on the economy, obviously, and then it depends on the tariffs, which then depends on what the administration is going to do next, which has turned out to be almost totally unpredictable.
Joe Danny, thanks. You're young this morning.
When we come back, we've got insights from the CNBC CEO Council on President Trump's tariffs and the potential economic impact. First, though, take a look at the biggest Dow pre-market laggards this morning. Caterpillar leading the way lower. It's down by about 4.9%. Goldman Sachs, American Express, 3M, and Home Depot rounding things out, but Goldman's off by 4%, Amex down by 3.25%, 3M's down 3.5%, and Home Depot down by about 1.5%. Squawk Box, we'll be right back. Some new insights from CEOs on President Trump's tariffs and the economy. This is courtesy of the CNBC CEO Council. In a new poll, a flash poll that was just taken, 2/3 say they expect a recession this year or next year because of those new U.S. tariffs. Just 14% say that they do not see a recession coming. More than 50% say they think that recession will be moderate or severe. And about 1/3 of them say that they expect they will have to cut jobs this year because of the new White House policies. And I think that's the big issue and big question facing the general economy at this point.
You know, they maybe have some data to back it up, but in general, they're in the same boat we are. They don't.
Yeah, but when CEO confidence drops, that's when
they can be
hiring,
self-fulfilling.
yeah, right, exactly.
Coming up, what should you be doing with your money and your portfolio in the midst of all of this? Some important information for individual investors. We're going to bring you that after the break. Squawk Box returns in just a moment.
Good morning and welcome back to Squawk Box Live from the NASDAQ market site in Times Square. I'm like in shock that it's only perfect 666. There are the futures. The NASDAQ pared its losses. It was from the get-go when the futures opened last night. It was really ugly, harrowing after Thursday and Friday. But that is significantly better levels than we saw with the S&P now down less than 100 and
This actually wouldn't put the S&P into bear market territory if it were to open here, but we're flirting with it. We were down 17.5% as of Friday's close. And again, the losses over 3 days have been the steepest that we've seen.
Usually, if you feel this unsettled and you really want a bottom, you don't get a bottom.
Right.
Usually.
Right. You're going to stretch it out.
Treasuries, it could be false, could be, I'm not even gonna say it, got picking bottoms. Anyway, there's the back about 4% on the 10-year.
Meantime, let's talk about the individual investor right now, because there's the question, should you be doing anything with your portfolio amid all the volatility? Sharon Epperson joins us now with some answers.
Well, you know, Andrew, over the weekend talking to female executives on Wall Street, business owners, doctors, lawyers, everybody's talking about the markets, worried about their money, worried about their retirement savings. And what we're seeing is only a small percentage of 401k balances are actually trading. That's as of last week, and that's after the April 2nd tariff announcement. But it was still 4 times more than the average week. That's according to Alight Solutions. Money was coming out of large cap U.S. equities and target date funds, and money went into stable value bond and money market funds. Total 401k balances at the end of Friday were down 7% on average. So that means someone with $500,000 in their 401k had $35,000 in paper losses in a week. So for many investors, building a cash cushion is top of mind, and financial advisors say money market funds are an important mix in retirement and investment accounts if you plan to retire in the next 5 years or are already retired. Money market funds are investments, not bank accounts, and can be held in retirement accounts. And top money market funds owned by JP Morgan, Invesco, and Schwab are currently yielding 4% or more. You can also add cash to high yield savings accounts for emergencies, as well as a buffer to cover higher everyday expenses due to tariffs. The national average savings account, though, is only yielding less than 1%. But top yields at some online banks like Bread and Everbank are 4% or more. You can find out a lot more strategies about managing through this market turmoil by scanning the QR code right there on your screen, or going to cbc.com/money101 to sign up for my Money 101 newsletter.
So financial advisors, they do always recommend staying the course through market volatility. That's the lesson.
Yeah.
But is that sound advice in this? I mean, this is a very unique situation.
It is a unique situation.
And there's the other question, which is what your time horizon is.
Exactly.
So if you're a retiree,
Exactly.
what are you supposed to be doing right now?
It's very dependent on where you are in terms of what your financial goals are. And so what the financial advisors from the CNBC Financial Advisor Council that I talked to have been talking about is to really look at what the data is showing and not necessarily try to follow some type of policy narrative. So if you know that there's going to be an economic contraction, and you know that asset classes that do better during that time might be something like gold, maybe you consider getting into something like gold. That was from Ivory Johnson, one of the council members. But another person said exactly what you were talking about earlier, which is you need to have an investment policy statement. And if you don't have one, this is the time to create one so that you know why you're investing, for how long, what your goals are going to be. I think that's really, really key. And the other part is to reassess your risk tolerance. You may need to make changes. Some people may need to build cash because they're in retirement or they're close to retirement. If you're retired, financial advisors are saying you may want to have at least a year's worth of cash so that you don't have to go into your 401k or your retirement accounts to then deplete those to pay for everyday things or to pay for things as the market's going down. So I think building up that cash is really going to be key for people.
Sharon Epperson, thank you.
We've been spoiled. I mean, there were 10-year periods where the market stayed down and didn't go up, but I don't think we've had any really since 1980. I mean, from 70 to 80,
Yeah.
I mean, it hit 1,000. The Dow hit 1,000 and then didn't get back for 10 years.
Well,
but like right now, I
you said you love working though, so you're. So,
I love
you know,
working.
if you
No,
love
but
working,
I
you're
think the
fine.
markets will be higher than we'll hit new highs either this year or next.
Okay, well that would
If
be
it does-
wonderful if that does
If
happen.
it, but
but
even
people
if
are
you're
really worried.
but if
and
you're
they're
if
saying they're
you're
not gonna
if
be
you're
able to
facing
retire.
your time, but we haven't done a 60-year. We've never done a 60-year reset in total
Right,
global
and
economic
again,
policy. So maybe not.
If
Maybe
you want to keep working and you get to keep working, that's one thing.
Right.
If there are
Oh, yeah, I'm
layoffs that
never-
come from a
yeah, I'm
global
not
recession
worried.
that come down, if people lose their jobs to boot with some of those things.
And so
You're talking
many
about
people are
much
out of
bigger
work
issues.
already. So
Right.
it's difficult
But
to get.
You look at a long-term chart, it's very rare that you have that 10-year period where, wow, I made no money in 10 years. Usually it goes to higher highs and higher lows. That's the way, unless it really is. But we've had pandemics and financial crises and mini depressions, and we still seem to keep. We're headed to 100,000 on the Dow. It would seem eventually.
Yeah, but so many people are saying we've never seen anything like
Yeah,
this
that's what I
before.
mean. 60-year change, but is it really? And we'll see how long it
And we'll
lasts.
see. Now, we should point out that the futures are coming back from their worst levels. Take a look at it now, and you'll see that the Dow futures are down by less than 700 points. They were down 1,500 points last night, 1,700 points at one point. The NASDAQ still down by 260 points, again, off its worst levels. The S&P 500 down by 75. This is still additive to the declines we saw last week. In just 2 days, we saw the Dow down by 7.8%, the S&P down by 9%, the NASDAQ down by 10%. So these are additional losses that are coming, but they're not the worst levels we've seen. The VIX has come back down as well. I think I last saw it at 47 after trading at 52 earlier this morning. We'll continue to watch that too. And when we come back, we're going to dig into China's response to President Trump's tariffs. That is coming after a break. In the meantime, some news from Thailand this morning. The Thai Stock Exchange is banning short selling for the rest of the week. That index was closed today for a holiday, and it's set to reopen tomorrow morning with adjusted circuit breakers to boot. I guess anticipating some pain that could be headed their way. Squawk Box will be right back.
Welcome back to Squawk Box. Over the weekend, China's foreign ministry saying that, quote, the market has spoken when it comes to President Trump's tariffs. And for more now on how China is responding. I want to bring in Mary Lovely, a senior fellow at the Peterson Institute for International Economics. Good morning to you. We're all trying to make sense of what may or may not happen here as these negotiations, if that's what they even are, play out. To the extent that you think that the Trump administration or the Chinese government has the better hand in terms of what happens next, and if there's an off-ramp, what do you think happens?
Well, we know that the first thing that happened was that the Chinese government decided to levy its own 34% tariffs on U.S. exports. So if there is going to be a negotiation, and the Chinese still hope there will be a negotiation, the president of China, Xi Jinping, wants to go to those negotiations with some ammo in hand. There has to be something to bargain with if there's going to be bargaining. So we're hoping that there's a deal somewhere here if you're concerned about what these mean for U.S. consumers and U.S. businesses. But it's not really clear. As far as we can tell, the Chinese have no understanding of what the Trump administration would accept in a deal. The Chinese are not sure what they'd be willing to give. So we're still very, very far away from a deal.
Mary, the thing that I can't understand is who has more leverage in all of this? Because as the markets here in the United States continue to drop, and that's not to say that they're not dropping, obviously, in Asia and around the world as well, but you have to imagine that there will be a tipping point where constituents of this administration and members of Congress in the House and the Senate start to say, no mas, we're not doing this. And so there is going to be a double pressure, I would imagine, on this administration to make a deal. The question is that double pressure, if you will, exist in China, or do they have more patience than we do?
Well, the Chinese, as we know, have been trying to revive their economy. They've had very weak domestic demand. They've been using both monetary stimulus and fiscal stimulus. They have more to give on the fiscal side, and they're already beginning to use it. Manufacturing is a significant share of their economy, but exports to the United States are not. It's less than 3% of GDP. That 3% does matter. There's a lot of softness, particularly in the factory sector, and that represents a lot of jobs. But China has already decided this is not where its future lies. It has been shedding jobs and so-called labor-intensive activities for years, and its plan is to continue. They want to move up the value chain, as we know, into higher tech type of manufacturing as well as services. So there are many Chinese who see this as inevitable, something they're going to do anyway, and they're right now behind their president in terms of not giving in to what they see as U.S. aggression.
In terms of an off-ramp, is there something you think that the Chinese could offer President Trump so that he could claim a quote-unquote win and that they could claim a win? What does that even look like?
Yeah, I think that what we know is they're negotiating in a very low trust environment. The Chinese did sign a deal with President Trump in his first term, the so-called Phase 1 deal. Both sides view it as not successful. So there isn't a lot of trust here. So what would a deal look like? Certainly the Chinese are ready to make bigger purchases of U.S. exports. It could be in agriculture. They certainly would like to buy more advanced equipment. So they will always say we would buy more from the U.S. if the U.S. would let us. The Chinese would like to invest in the United States and see those investments routes closed. We're certainly looking at what happens with TikTok to see if there can be any kind of mutually agreeable solution to that issue as a bellwether.
That's another 75 days.
And fentanyl.
We can talk about fentanyl, but I do want to read you right now because it just literally crossed the wires, if you will. It really crossed Truth Social. President Trump just posted this, and I'll ask you about it. Listen here, if you could. Quote, oil prices are down, interest rates are down, the slow-moving Fed should cut rates, food prices are down, there's no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abusers of them all, China, whose markets are crashing, just raised its tariffs by 34% on top of its long-term ridiculously high tariffs, plus, exclamation point, he says, not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. I want to ask you your reaction to that, but I want to offer one piece of context, which over the weekend he was specifically asked about interest rates and gas prices and the like, and said that he was not trying to push them down, meaning that he was not happy that that was what was happening. So here he is.
That it wasn't a plan.
That wasn't a plan. So here he is now effectively suggesting it is a plan, even though over the weekend he said it was not a plan. Mary.
I mean, it's a little bit of what are you going to believe, me or your lying eyes? We know that this will be inflationary, particularly the way the tariffs were designed. There are very high tariffs on countries that, frankly, the U.S. should and needs to be importing from, both to keep U.S. manufacturing competitive and to keep consumers enjoying a particular lifestyle. So we've seen very high tariff rates, for example, on all your garment manufacturers, even as we were trying to reduce our dependence on China. So I think the president really has mischaracterizes Chinese tariff rates. There are many complaints that we have, valid complaints against Chinese trade practices. Stated tariff rates are really not the big one. It's really hidden barriers to U.S. exports, the failure to stimulate their economy in a way that would keep them on their track to becoming a major consumer of their own goods, fear about export surges, particularly in EVs and other sectors. So this just seems to me to be backward looking. I think it's not looking at what's going to be happening over the next few months. So I expect that we'll see if not the tone, certainly at least the content of President Trump's tweets changing over the next few months.
Okay. Mary, we appreciate your perspective. We're going to keep our eyes on all of this, as you can imagine. And you can, I love the line, you can believe me or my lying eyes. So there you go. Thank you.
Welcome.
We have some reaction from some of the biggest investors in the world on President Trump's tariffs and the market response. In a rare post on X, Stan Druckenmiller saying, "I do not support tariffs exceeding 10%. He was responding to someone who posted the interview that Stan did with us on January 20th on Inauguration Day. In that interview, he had said that as long as tariffs stay in a range of about 10%, he thought the risks were overblown relative to the rewards. He said he didn't want to be known as Tariff Man, but given the huge fiscal deficits we face right now, there have to be some ways to raise some money for that, and he was thinking of the tariff money going to that. Now, interestingly, we are hearing the administration now talk about starting to pay out funds to farmers and others who are getting hurt by these tariffs, these immediate tariffs, and that is what the Trump administration did in the first Trump administration. That would take some of the money that's being raised and funnel it back there instead of going to deficits. Last night as well, Pershing Square's Bill Ackman posting on X saying, "To state the obvious, it does not help our country and our president's negotiating position to be trying to strike deals while our market is collapsing. Whoever is recommending that idea to President Donald Trump should be fired now." Later, he blasted the Commerce Secretary, Howard Lutnick, writing, "I just figured out why Howard Lutnick is indifferent to the stock market and the economy crashing. He and Cantor Fitzgerald are long bonds. He profits when our economy implodes." On Saturday, Third Point CEO Dan Loeb posted what he called a thoughtful piece from the American Enterprise Institute that criticized the formula that the Trump administration used to impose tariffs on other countries. And you are hearing more pushback as the declines have started to add up. We talked about how the NASDAQ 100, the Russell 2000, and the Dow Transports all closed more than 20% from their all-time highs, so they're in bear market territory. You also had sectors that are in bear market territory at this point. Materials, communication services, tech, consumer discretionary, all of them closing on Friday more than 20% from the all-time highs, and then you add these losses this morning. We're off the worst levels of the session.
Not anymore. We are.
We are. We're off
not
the worst levels, but we're not continuing to
After the
improve.
Truth Social post,
Yeah.
I don't think China's over there looking at, oh, well, it went from minus 650 on the Dow to minus 875. And they probably, I don't know, reading that from Trump probably wasn't taken very kindly by China, but I think I think they've got real concerns about what happens.
Hearing that post makes it sound like there's not going to be a reversal today.
Not for China.
For sure.
Not anytime soon,
Not anytime
feels like.
soon. NASDAQ futures now down by about 415.
China's
S&P
different.
futures off by 112. And yes, there are a lot of people who have said that China should exist in a very
Yeah.
different place than the rest
In
of
the
the world.
EU and Australia.
Yeah.
And it's 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. Our top story: global market sell-off. The futures have been down at one point 1,700 points. Then most of the morning, before we got in, 1,400, 1,500. Just a moment ago, they were down about 650 now, down about 800. The S&P would have been in bear market territory. We don't know where it's going to close by 4 o'clock today. Treasuries also seeing a lot of movement, under 4% now on the 10-year. And look at the 2-year, all the way up to almost 3.6. In Europe right now, take a quick look. All green, all red there, pretty significant.
There were
pullbacks.
losses. Germany was down by as much as 10% earlier today. Then we were looking down 6%. Now you can see down 4.5% for most of these markets. So they've come back from the worst levels, but you're still talking about pretty significant declines. Volatility has run very high. Just when we started the show, it was at 50. The VIX was at 52 or so, and I think it has improved. Last I saw it was 47, but again, these are some massive increases in volatility and that measurement of fear.
Overnight in Asia, I don't know if we've checked that as well.
That's where they closed. Yeah.
Those are pretty big numbers as well.
Joining us right now to talk more about this is Bob Diamond. He's the CEO of Atlas Merchant Capital. He's also the former CEO of Barclays. And Bob, lay it on us. What do you think?
It's wild. Becky, I think this is profound. It's profound an act of economic self-harm, as I think I've seen in my lifetime, or at least in my career in financial services. 11% of the U.S. economy is imports. 40% of those imports aren't finished goods; they're parts. That gets confusing, but I think you would know what I mean when I say that has a big impact on the supply chain, because it gets very, very confusing. And if this is sustained or permanent, then it would require pretty massive change in terms of the supply chain. So I think the impact is huge. 11% of our economy is like 3.3 trillion. That's the imports. And when we look at other periods, people point to 1930. At that point, imports were, I think, around 3 or 3.5% of the economy.
Before Smoot-Hawley.
It's profound,
Yeah.
and it's self-imposed.
We already have heard this morning that Jaguar and Land Rover is halting imports for now to the United States, even though it's the second biggest market. I think a lot of confusion about what the end goal is, what the end game, and the latest rhetoric we've been hearing from the president himself, both in his post on Truth Social this morning and what he said last night on Air Force One, makes it sound like this is not as much of a negotiation, that he sees this as a permanent structural change. If it is a negotiation and they were to come up with something, let's say this week, would the damage be undone?
I think you can undo the economic damage. I think this can and should be dialed back. When you look at the levels prior to the first inauguration of President Trump, tariffs were like between 2 and 3%. It's really hard to get exactly where they are now, but they're probably, with these moves, 22, 23, 24%. So that's a massive increase in the amount of tariffs. And I think they do need to be wound back. The last time I was on, we talked a little bit about tariffs being used for economic reasons, maybe to balance, make trade more fair, where it's adjusting.
The president would say that's exactly what he's doing.
Yeah. Well, it doesn't seem to be at all. And I think many people have pointed to the equations or the math or the calculus or whatever it was to use. Frankly, it looked like amateur hour. The impact of that on smaller countries versus larger countries, or real trading partners versus those that don't really have the money to the dollars to invest in the U.S. So it didn't seem logical to me. And I think we've moved beyond the economic reasons that are justifiable for using tariffs. into something that is non-economic. And I think the impact on our friends and our allies, Canada is probably the best example, that's going to be a lot harder to unwind. Can we unwind the economic impacts? Sure. I think we should move quickly and do that.
Stan Druckenmiller, we were just talking about his post on X overnight, just saying that he's not in favor of tariffs above 10%. You sound like you fall in that camp.
Yeah. Well, I wasn't smart enough to pick out that number, but I go back to, one of the things I researched during this period is where were tariffs prior to the first Trump administration, or prior to this administration, inauguration. And it was about 2.5%. And they're now about 22, 23, 24%. On 11% of the economy, that's a tax bill of $700 billion immediately. That's going to have an impact on prices going up, production going down. It calls into question whether we're going to have stagflation, which is where no one wants to go.
Yeah, and I think that's the big question. Pain in the stock market is one thing. When does that translate into actual pain in the economy? Does something break? It's been orderly to this point, steep but orderly. But what do you watch for to see that moving into the broader economy? We did have a flash CEO survey that we completed with CNBC. With a group of CEOs who are on our council, and I think a third of them said that they now envision that they will have to lay people off this year.
Look, the Fed's in a tough spot, and I saw the piece that you posted just before I came on, President Trump saying that we should lower interest rates. The Fed has rates now at about 4.25. The markets are discounting 3 or 4 cuts this year
I think
to
it's
bring them
5
down.
now, actually.
It's probably moving this morning, right?
Yeah, as of Friday after the jobs report.
But it's a tough job for the chairman because you cut rates and inflation starts going up, and the impact of the tariffs on inflation is real. So they have inflation, and they also have a debt level that all of us say is the darkest cloud hanging over the U.S. economy. Now, you guys know from my times here, no one's more bullish on the U.S. economy, the resilience of the U.S. economy. But this is a very profound act of economic self-harm. And the question I ask is which Americans are benefiting from this right now? I don't see it.
I don't know about inflation. Stagflation is tough enough because it's mutually exclusive usually. You got real slow growth, you don't have inflation.
Well, prices are going to go up, Joe, so you're going to get
That's
some
not inflation.
inflation.
That's a one-time increase in certain prices. That doesn't mean, unless there's retaliation, it doesn't. Inflation is a second derivative. It's going up 4%, 4%, 4%, 4%, or whatever, 9% every year. A one-time increase with what we're looking at in terms of, a sharp slowdown in economic activity. This could be like a place where you worry about deflation.
But again, try explaining that to consumers. Like,
Right.
don't worry,
well,
it's transitory.
They feel it in their wallet, whether it stays in it. But oil. You don't think oil ripples through the economy at 50?
Yeah, I think when you're looking at the positives and the negatives,
it's positive. I just mean it's going to be hard to make the case that we're really going to have hyperinflation in a recession.
By the way, crude is just barely back above 60, so the lower third staying there.
You got to work hard to orchestrate.
We're also coming into
inflation is almost impossible. That's why it's so rare.
We'll see. But I think we're coming in, and I don't think that's the main point. The main point here is this was a self-made problem. I think we've taken the tariffs way too far. It's no longer economic. It's about a bit resentful.
Right.
And I think we have to be careful. My own sense is we need to begin winding those back, or the impact on the slowdown in the U.S. economy will be real. Now, this is a great economy, and going into this, the balance sheet and the risk taking of corporates and the private sector was pretty strong.
Isn't so great. That's probably another thing in the back of their minds. At $37 trillion, they think the stock market was a debt-fueled bubble that really didn't include the middle class in terms of jobs and everything else. That's in the back of their mind. That's what they're thinking.
But what's important what's important to Americans and what's important to middle America is a lot more about the economy and jobs and inflation and recession. than it is the stock market.
That's true, and I think that's unfortunately giving them confidence that they're on the right track too. Don't you think? They're saying Main Street is different than Wall Street. Main Street and Wall Street are totally tied.
Yeah, because it's the reflection of the broader economy.
And because people own
Yeah.
in their 401ks and everything else.
Bob, thank you very much for coming in today. Bob Diamond.
Coming up, key stocks, not companies that make keys, although they could be one of them, right? These are important stocks and sectors on the move this morning. Big tech taking another hit. Well-known consumer names also lower. We'll run you through some of those stocks. And then later, former National Economic Council Director Leo Brainerd will join us. Squawk Box coming right back.
I'm Dominic Hsu, and we're going to try to get you up to speed on what's been happening because things have been moving relatively quickly over the course of the overnight session here for futures. I do want to point out that we have now dramatically moved off the lows, the implied lows of the session so far for the opening for the U.S. markets. But we want to bring you up to speed on some of the big banks that are moving in the pre-market. They're, again, off-session lows, but names like JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, all off roughly 1 to maybe 2.5% or so, much better than they were at one point during the course of the morning so far. Another place to keep a close eye on right now is what's happening with U.S. consumer-related stocks, right? Names like Tapestry, Starbucks, Carnival Corp, Wynn Resorts, and Lululemon still down, but moving off their worst levels of the session. Tapestry down 5.5%, and then Wynn Resorts down 2.5% as well. So keep an eye on some of those travel and leisure consumer discretionary related names. Technology, also a huge focus. Those so-called Magnificent Seven names, the mega cap ones that drive a lot of the market narrative. Tesla shares down roughly 5%, Nvidia down 3%, Meta Platforms down 2.5%, and 2% losses for Alphabet shares as well. If you look at some of the other part of that complex, you can take a look at Amazon down 2.5%, Apple down 3%, and Microsoft down 1%. That's your Mag 7 check. The China trade also becoming a big focus as well. Overnight in Asia, the Shanghai Composite closed down 7%, the Hang Seng in Hong Kong down 13%. But the Crane shares China Internet ETF ticker KWEB down 5%. Alibaba and JD.com, the US listed shares, also down between 5 and 7% as well. So a lot of movement, but again, Becky, well off the worst levels of the overnight session. So we'll see if that momentum can hold itself as we head towards the opening bell, Becky. I'll send things back over to you.
All right, Dom, keep coming back to us. Keep us up to date on this. We are watching this really closely. We appreciate these updates. And by the way, folks, we still have a big lineup still to come on Squawk Box. We're going to be covering recession risks and the future of interest rates with former St. Louis Fed President James Bullard and former Fed Vice Chair Leo Brainerd. Lee Cooperman on the market reaction to the tariffs, and at 8:40 a.m. Eastern Time, we've got senior White House trade advisor Peter Navarro. Squawk Box will be right back.
happy with it.
Welcome back to Squawk Box. We have insights now from CEOs on tariffs and the economy, courtesy of the CNBC CEO Council. In a new poll, 2/3 said they expect now a recession this year or next because of the new U.S. tariffs. 14% said they don't see a recession coming. More than 50% said they think a recession will be moderate or severe. And about 1/3 said they expected they'd have to cut jobs this year because of the new White House policies. Joining us right now for more on the recession risks and the Fed fears, former St. Louis Fed President James Bullard. He's now Dean of the Mitch Daniels School of Business at Purdue University. And before we even do those numbers, let me just ask you your reaction to the tariffs thus far and what you think they portend.
Yeah, thanks. So I think the main thing is that this has dramatically raised the risk of a Smoot-Hawley type outcome. So Smoot-Hawley was 1930. Other countries retaliated, global trade collapsed, and the Great Depression was on. So I think that's really what has people worried about this. It doesn't have to work out that way, but this unilateral move, abrupt, is setting up a situation where you could get a dramatic downturn in the economy. So Wall Street is marking up its recession probabilities, and I think that's appropriate. So I think some things we could talk about here, though, are what's the game theory between the three blocks here, EU, US, China? How would that game theory play out? I think that's something Wall Street should be talking about. And what's the chance that this will stick through the courts? Because I think this is probably executive overreach compared to what Congress. You can do things like this if you want, but you probably have to have Congress weigh in on that.
Dean, before we even get farther than that, let me just ask you about the prospect of contagion. So as these markets continue to fall, if they do continue to fall, is there a breaking point? Forget about what you think that portends for the economy in the future, but for the economy right now, do you look at private credit? Do you look at the banking system? Do you look at any other part of our economy that you think could be impacted by what we're seeing in the markets today, tomorrow, Wednesday, Thursday, Friday?
Yeah, I mean, unfortunately, the effects are immediate because it affects expectations about investment globally. And we've talked about it before on this show. I mean, who wants to invest when you don't know what the rules are going to be? And so major projects are all going to be delayed all around the world until until you get some clarity on how this is going to play out. That affects output today in the U.S. and around the world, and so yeah, it's a very dramatic impact.
Hey Jim, the president putting on Truth Social today a statement that he thinks the Fed should be cutting rates right now. Markets are baking in at this point 5 rate cuts from the Fed this year. Do you think the Fed should cut rates?
Yeah, I think Chair Powell got the right balance. He wants to make sure that any price disruption doesn't feed through to inflation expectations, and then you'd have an inflation problem on your hands. There's no reason really for the Fed to do anything right now. The hard data right now is satisfactory, and so we'll see how this plays out going forward. So, and you've got, as you guys have been talking about, the negotiation angle, so other countries could react possibly relatively quickly within a few months, and you'd get more clarity on the outcome here.
But your advice is no cuts for the next several months.
Yeah, I don't think I would react. So the problem is if you react right now and then this gets resolved, what do? You put rates back up? So I just don't, and I don't think this is really about 25 basis points on the Fed funds rate. This is about the global trading arrangements. So it's not really, monetary policy is not really the focus here. Also, rates are down anyway.
Right.
10 years down below 5%. So you've got some natural cushion coming from other sources.
A weaker dollar can be something that people actually like sometimes, Jim, but if it starts being disorderly, it can just feed on itself and be a total disaster. Are we anywhere near that yet?
I don't think so. Not based on what's happened so far. I think you've still got this flight to safety going on in global markets, still the reserve currency, and so in that sense, I think the dollar's okay. Usually, when a currency really gets into trouble, is if global markets think the country is, sort of mismanaged. I would say I don't think we're in that boat. This is a policy that is trying to gain retribution for years of other types of trade policy. But I think right now, I think the dollar's okay.
And what's your favorite canary in the coal mine for the economy itself? And we already saw some junk bonds, premium spike, worrying about recession risk. Is there anything else you'd be paying attention? Because the economy on Friday, I mean, looking back a month, the jobs picture is better than people thought. I mean, we're not dead yet.
Yeah, that's right. And I do think that the initial conditions coming into 2025 have been very good. And so in that sense, you're starting from a good position as opposed to starting from a weak position. So that part is good. And some of these other developments, like the lower 10-year and other things, do cushion things a little bit. But there's no doubt about it. This is a very extreme move by the United States, and it does threaten the Smoot-Hawley outcome, and that's what markets are pricing in.
Dean, I just want to go back to the idea of there's the Smoot-Hawley issue, which could last a very long time. One of the things that happened back then was the Fed also sat on its hands, as you remember, so maybe things are different this time around. I'm questioning or concerned about the immediacy of what's happening now, which is just the plumbing of the financial system. Do you have any concern about that at all in terms of what we're looking at straight ahead of us?
Well, if you got into a serious downturn, which we're not in yet, this is all in expectations here, but if you did get into a serious downturn, you would have to worry about financial stability elements and where that was going to go. I'm surprised credit spreads moving up. You'd want to demand more protection for lending to less credit-worthy firms. So all of that's happening. But all of that I would regard as kind of a natural dynamic when the outlook is very cloudy. But none of that is the core problem here. The core problem is you're trying to change trade policy very abruptly and globally. And it's very unclear how this is going to play out.
Steve Bullard, we want to thank you, as always, for joining us, especially on a day like this morning. Thank you.
Great.
Coming up, British automaker Jaguar Land Rover responding to U.S. tariffs. We'll have a live report from London next. And take a look at some of the airline stocks. UBS downgrading Delta, United, and Alaska Airlines from buy to neutral in cutting the price targets of all airlines. UBS citing rising recession risk and tariff impact on demand for the sector. Squawk Box will be right back. British automaker Jaguar Land Rover responding to U.S. tariffs. Juliana Tattlebaum joins us from London now with more. Good morning.
Joe, good morning. That's right. Over the weekend, the UK luxury car maker Jaguar Land Rover announced that it's halting all shipments of cars to the United States for the month of April. The company says this is a short-term action while they assess their medium and long-term strategy in response to President Trump's tariffs, the 25% levy that he's placed on all auto imports. JLR says that the U.S. is a highly important market for them, but JLR, which is owned by Tata Motors, generates 1/4 of sales from the U.S., but has no manufacturing capabilities there. So clearly they stand to take a substantial hit from tariffs given the complexity of the supply chain and the fact that they have no manufacturing capabilities in the United States. For the UK overall, the US is the second largest export market for the UK's car industry. So this is a big deal for not just JLR, but the wider UK car industry.
Indeed. Juliana, thanks. We're just hearing now in the past few minutes Volkswagen confirming it is holding back Audi cars that have already arrived in U.S. ports, but it was after April 2nd. And they're holding them back because of the newly imposed tariff of 25%. In a memo to dealers, it said it would hold those cars in port for the near term and would impose an import fee that's going to be determined later this month.
So they're going to hold them in port, waiting to see if something gets
They're
worked
going
out.
to wait till tomorrow at least to see whether.
Let's see what happens this week at least,
Right.
to see what happens with it. Volkswagen, I think, originally was putting last week already some new fees that it was describing as a tariff fee. So if you're wondering if this is going to get passed on to the consumer, maybe that's the most straightforward way to for consumers to see what's really happening.
Now we're waiting. They're waiting. Everybody's waiting.
But and that's fine for if it happens for a matter of days. Not so fine if it lasts beyond that.
Right.
That's when you see a real shutdown in the economy. All right, when we come back, Lee Cooperman, the chairman and CEO of a mega family office, will give us his reaction to the market sell-off. He'll also talk about what he's doing with his investments right now. As we head to a break, though, check out the chip stocks this morning. Taiwan Semi is leading the sector lower. It's off another 7.25%. NVIDIA shares right now indicated off by 3.8%. AMD down by 3%. Micron, Intel, both down by more than 3.5% as well. And we'll continue to watch this. Squawk Box will be right back. We told you earlier today, Bill Ackman took a shot at Commerce Secretary Howard Lutnick yesterday, accusing him of profiting as the economy implodes. Well, just moments ago, he walked that back a bit, just posting on X. This is what he said: "It was unfair of me to lash out at Howard Lutnick. I don't think he's pursuing his self-interest. I am sure he's doing the best he can for the country while representing the president as Commerce Secretary. It is not an easy job, and we don't know how the sausage was made. I'm just frustrated watching what I believe to be a major policy error occur after our country and the president have been making huge economic progress that is now at risk due to the tariffs. I would love to be proven wrong and watch this approach to tariffs and/or their resolution be enormously beneficial to our country and the global economy." Right now, Dow futures off by about 840 points. S&P futures down by 125. The NASDAQ off by 480 points. And joining us right now is Lee Cooperman. He is the chairman and CEO of Omega Family Office. Lee, you picked a heck of a morning to call in to be talking to us or to be coming in on the Zoom here. I think your advice, you summed it up in one sentence. I would be careful.
I would be careful. I think I was on the program about a month ago, and I said that everyone looks at the world, they're very comfortable with the market at 23 times earnings. And I think both those are a function of growth rates, interest rates, and confidence. I think there's too much confidence in the system. Multiples of 23 times are far too high. And we're correcting that right now. And it's very clear to me that the president has decided the best way to get inflation and interest rates down is to take a recession. And recessions tend to have certain recurring patterns to it. And I think we're heading to a recession. And if not, it's academic anyway. Because there's one fail-safe approach I have, and that is when stocks come out with, when companies come out with a disappointing statement, the stocks open down, but they close the day unchanged or up. And we're not seeing that yet. So for example, in the last 2 weeks, we've seen Federal Express have disappointing results, Nike having disappointing results, and a bunch of other companies having disappointing results. The stocks all went down and stayed down. So what I'm looking for is companies to come out with disappointing statements. Stocks trade down and close the day unchanged or up. And that tells me that the market is discounted the negative outcome.
You've said you think we are headed into a recession. You think things are coming down, that we haven't bottomed yet. I think you were saying you would not be surprised to see a 25% decline from the highs for the S&P 500?
I would say, yeah, but more important than the 25% and more important than the recession is let the stock market do the talking for you. In other words, the companies, like I said, had disappointing earnings were Delta, FedEx, Nike, Lennar, DB Homes, Jeffries, MSC Industrials, all for different reasons. And the stocks all went down. The best evidence that the recession slowed down is discounted is if the stocks rise at the end of the day. And we're not seeing that yet. But if you went to classical recessions tend to last about 6 months. They go down about 25%. But I don't know that we're in a garden variety recession yet. I think you have to be very careful.
What do you think about the tariffs themselves? If they're held in place, what that could mean over the longer term, if they're negotiated down to lower levels?
More inflation, less growth. I think they're a mistake.
And are you looking to the Federal Reserve to cut rates? Would that bring relief to the market?
We already cut rates. The 10-year government bond is below 4%.
Yeah, that's the market talking again.
Yeah, the market is ahead of the Fed. And I think the Fed may loathe to cut because they don't know what the outcome of the tariffs are. If these nations back off and they go to reciprocal tariff policy and tariffs aren't the issue, then the Fed can look very foolish. There's no signs that the Fed has been too restrictive. Up until February, the market was very strong, and there was a lot of speculation in the market. There's no evidence that the Fed was too restrictive. If anything, I think the Fed has created this problem by having zero interest rates for 10 years. It led to a lot of foolish policies.
Jim Cramer was saying last night that he would be cautious as well because we have not heard from Europe yet, and that there could be another leg down if Europe responds the way China did.
Yeah, I would just say things are very uncertain, period. And yeah, you got to decide how much risk you want to take. I don't want to forecast the bottom. I want to see the market bottom on its own.
Let's talk about some individual stocks because a lot of the names in your portfolio have been front and center in the news. Some of them because of this tariff news. Maybe we start with Apollo. That's been a long-term stock for you, a big holding. It was down 20% on Friday, down 20% last week, and I think down 34% for the year to date. What do you think about the business?
I think they're very well positioned. But again, I'm not into it at the current time. My best stock that I mentioned in the program last time was Mr. Cooper, which did a very intelligent deal. Been a very big winner. It's helped me a lot this year. And we continue to like it.
What do you think of the Rocket proposal to combine with Cooper in an all-stock deal? I think it's 11 shares of Rocket for 1 share of Mr. Cooper.
We think it's a very intelligent deal. Rocket is the originator of mortgages, and Mr. Cooper does some origination, but they're mainly an MSR holder. So you're creating a real powerhouse of a company, and we think the multiple can rise. And Mr. Cooper, which we're more familiar with Mr. Cooper than the Rocket mortgage, Mr. Cooper management has done an outstanding job. We're very confident in them.
Lee, what happens with mortgages and with the housing picture? Obviously, rates are down, and you could be looking at adjustable rate mortgages at least that hit 5.5% soon, just based on what we've seen with some of these things. Is that good news for the market, or is it a lot harder if we head into a downturn, a recession? Is that a lot harder for people then to be able to put up the money for any of this?
No, I mean housing is typically countercyclical. The problem with it is that people have refinanced. This extended period of zero interest rates have led to demand being pulled forward. And so there's not a lot of refinancing to be done. But I suspect that housing will lead us out of this demise in the economy. I have no question about that.
Lee, let's talk about KBR. That's another one of your stocks, and it feeds into defense and supplying there. There have been some concerns about the efforts at DOGE and whether that's going to hurt stocks like KBR. For the 1 year period, it's down 26%. I think it was down 7% on Friday. What's your take?
Well, look, there's never a stock that's down without a reason. There's never a stock that's up without a reason. Okay, our job is to figure whether the reasons are reasonable or wrong. And we think that the market is over discounting the KBR issues. And we don't think the Department of Defense will be cutting back spending anytime soon. Not in the world that we see. We all know that. Well, I've said
Go ahead.
in the past that in bear markets, he who loses least wins. I expect to give back some of my profits in the last 3 years, but we're not. We pay taxes. We're not selling, and we're liquid, and we're being very careful.
Okay, so being careful but still having confidence in the market and not selling out of things?
Yeah, the world's not coming to an end. Interest rates, stocks are very cheap relative to interest rates, and I would say that we've been here before. Recessions last about 6 to 8 months, and bear markets last about the same amount of time, and they go down about 25%. And I read a statistic recently, very rarely has the market persisted to stay below its 200-week moving average for a very long period of time. The 200-week moving average is about 4,600. And a 17 multiple on 250 in earnings is about 4,250. The way the market is moving, it's not far away.
Lee, you remember the last time we had like a secular bear or like a 10-year period where people didn't make money in the stock market? It's kind of rare. We haven't, we've been spoiled, I think, since like 1982 or so. Do you think that what's happening right now could get us into a mess like that where equities do nothing over a decade? Or do you think 2 years from now, a year and a half, 2 years, will we be at new highs in the averages, or you just can't make that determination?
I started my Wall Street career on February 1st of 1967. The Dow was 1,000. And 15 years later, 1982 was 1,000. And I made my money picking stocks. I can very well see us in a period of time where price earnings ratios are coming down and the market does nothing. And I would be prepared for that period of time. You know, Warren Buffett makes a comment. When people are very happy when stocks go up, he's not too happy when it happens because he can buy less of it. He'd rather see stocks go down that he likes, so he can buy more of it. I'm not quite in that camp, but I understand his viewpoint. I do think we're in a store for an extended period of lackluster performance in the equity market. I think that what the change out there is real.
Lee, do you think that this is a point, though? I mean, you've said it may not be a bottom. Is it something that could turn around pretty sharply, pretty quickly if the president were to change and ratchet back the tariff policies?
Sure, you get a short-term rally, but right now I would say a good bottom is not in place. So I would sell strength in the market and only buy weakness. And I'm not really buying much weakness because I don't really trust the environment. There's a lot of things that bother me. You know, I've talked about this in the program. I thought multiples were too high in the market. The other thing I've said is that the debt buildup is very concerning to me. And the president has clearly decided to deal with that debt buildup. And you can't correct 30 years of economic mismanagement overnight. So I think he's doing the right things, but he's moving too fast.
Okay. Lee Cooperman. Lee, thank you for joining us this morning.
Good luck. Thank you very much.
Thank you.
We're all going to need some of that luck.
Hey, coming up, fears of a global recession pushing crude prices lower now, trading right around the $60 level. Carlisle's Chief Strategy Officer of Energy Pathways, Jeff Curry, will tell us why oil could slip even further. And then at 8:40 a.m. Eastern Time, White House Trade Advisor Peter Navarro on the market reaction to President Trump's tariffs. Squawk Box coming right back. prices dipping below the $60 level. It's the lowest that we've seen since April of 2021. There you can see where crude is trading, $60.43. Joining us now, Jeff Curry, Carlisle, Chief Strategy Officer of Energy Pathways. There's a lot that goes into why we're here, Jeff. How much is tariffs? How much is other surprises on the supply side of things?
I would put 2/3 of it is demand, concerns around the trade war, and then a third on OPEC. Remember last week, they surprised significantly to the upside with a bigger increase than what the market had thought. You also had, the Russians allow the CPC pipeline to go online. So you had supply events in there as well as the demand concerns.
I mean, you never want to try to look at the silver lining of something that's causing so much pain in other markets. But when does, number one, how low could crude go, and when does that actually become at least a partial offset to some of the things we're worried about? I mean, it filters through to everything price-wise if it's $50 a barrel.
I mean, if you want to call it a silver lining, you got low oil prices, low interest rates, and a weaker dollar out of all of this. But there is a point where they go so low, they start to create new kinds of pain. And, we look at the U.S., it has energy dominance because of the profitability of these oil companies. But you're sitting in WTI terms at $60 a barrel. That's below the break-evens of some of those shale guys at 65. You go down below 55, you're now below the economics of the Permian. The administration has made it clear they want to get into that 50-55 range, which, from our perspective is going to create, problems for many of these producers. And, Joe, you and I have been doing this a long time. We know oil doesn't like to do three-point landings at anybody's price. And, the potential for this to overshoot into the low, the mid-40s, I think is quite high. The market's oversupplied if you assume you're not refilling supply chains for what's going on in Iran, and this continues on. So the potential for this to overshoot to the downside, I think, is pretty significant.
The potential, but it's not your forecast right now?
No. But, I think at this point, nobody really has a forecast. I think what you're witnessing is a lot of liquidation, and the market's going to try to figure out the economics of it, in the coming weeks. But right now, I'd argue it's liquidate everything first and then start to figure out the economics second.
How about all the other commodities that you saw? What about copper?
On copper, you've liquidated a lot in the U.S. recently because of the fact that they did not apply the tariffs to copper, and you brought in a lot of copper under that expectation. So you've seen a huge retracement in copper. I think when we look at the longer term, the fundamentals are still there. I think everybody buys into that longer term fundamental story because you see it in the back end of the prices. However, it's got some headwinds just like oil and the rest of the commodities do right now.
What's happening in those other two spots we always talk about with oil, China and Russia? And Russia escaped the tariffs, yeah?
Yeah, but you look at the fact that they brought on extra supply. You take that OPEC increase, last week. A lot of people thought it was a warning shot across the bow for Kazakhstan cheating. Well, the next day on Friday, Russia allowed the CPC pipeline to come online, or not be shut down. Which then that takes away that explanation, which, the question is how much supply are Russia and Saudi going to bring on? Which then you can bring into the question, is something going on in Iran? So I think that's the way to think about Russia and Saudi. But then there's the question you point out about China. I can point out China's the largest oil importer in the world, and they just levied U.S. oil at a 34% tariff. That's a lot of oil demand coming out of the U.S. that's going to be pushed back. The one thing about U.S. exports that are very different from other countries' exports is that when we look at them, they're fungible. They're raw materials, things like oil, things like agriculture. These are fungible commodities. You think like soybeans. China can get them from Brazil. It doesn't have to take them from the U.S. China can get oil from OPEC. It doesn't have to take them from the U.S., which takes away the strength of negotiation with these raw materials. And so that's one thing that needs to be kept in mind is that protection of the U.S. energy dominance here, it becomes more difficult when you have competing supplies out there. Also, one point I want to emphasize, what are the lawmakers that are breaking ranks in the Republican Party right now? Texas, Nebraska, Iowa. These are the sectors that are going to get hit hard in this if you actually see the retaliations take place.
That's interesting. They're the ones who are starting to break ranks, where you're starting to hear some speaking up. And Grassley and some of the other senators, at last count, I thought there were 7 Republican senators who would side against this. That raises questions. I don't know if you've done the guesswork to try and figure out how likely it is for Congress to intervene, Jeff.
No, I haven't sat down and done that as of yet. Like going back to the point, everything's liquidating. But I would argue, to your point, the sectors that are going to get hit hard in this are the ones that are big exporters, which are energy and agriculture. And those would be the sector. In fact, you saw that the soybean farmers came out this morning, wanting bailouts, which is part of the reason why you have, Iowa and Nebraska pushing back significantly on this. So if you saw,
you get bailouts, that uses the money that you'd be potentially making from these tariffs.
Right, but why destroy the sector that's driving your export?
I'm just saying it's not going to go to the things that the administration has laid out and said we're going to use it for these other purposes. It's going to have to go to help the people who are getting hurt.
Yeah.
So
Exactly.
if we want to squeeze China, Jeff, then how do we squeeze them? We can't do it with energy and agriculture because, as you say, it's fungible. Who's got more staying power, China or the United States?
Well, the question is which, the consumer, which one's going to get hit harder from this? Given the fact that most of the imports coming from places like China they're not fungible, like the consumption that China has from the U.S., which is fungible, means that the consumer can't substitute out of it, which means that tariff is going to get passed through the consumers in the U.S. more directly than it will to the Chinese consumer, because that Chinese consumer is consuming a raw material like soybeans, which they can just go directly to Brazil. Right. So you ask who's going to be the big benefactor from this? It's going to be OPEC and it's going to be Brazil. It's going to be those alternative suppliers.
Interesting.
Wow.
Okay, Jeff. Very good. Good to have you on, and we'll obviously want to talk to you again in the near future, I think. Thanks.
Excellent. Well, thanks for having me.
You're welcome.
Okay, meantime, JP Morgan CEO Jamie Dimon out with his annual letter this morning. He says the economy is facing, quote, considerable turbulence. He said the short-term effects from tariffs likely to have, quote, inflationary outcomes, and, quote, whether or not the menu of tariff causes a recession remains in question, but it will slow down growth. He reminds readers that stagflation in the 1970s didn't stop the trend of rising rates, noting that even though interest rates have come down recently, this trend could still reverse. Dimon says even with the recent declines, equity valuations are still well above their historical averages. On trade, Dimon says, quote, where the United States is treated unfairly, we should demand those agreements be fixed. He says America first is fine as long as it doesn't end up being America alone. So some wise words from Jamie Dimon on this Monday morning.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and the market's kicking off the week in sell-off mode after President Trump's tariffs continued to rattle investor confidence after last week's two-day sell-off that wiped out more than $5 trillion. The futures this morning indicated off once again. We're off our worst levels, both of overnight, the futures, and this morning, but you're still looking at the S&P down by 2% this morning. Dow futures are down by 1.8%, the NASDAQ down by 2%. NASDAQ was down by 10% last week. This adds to those losses. The S&P it closed on Friday down 17.5% from an all-time high, so you're getting close to bear market territory within about 0.5% from this. Dow again off by about 1.8%. It was down by the least last week, 7.8%. The Russell 2000 was hit even harder last week. It is now looking at another 2.7% decline this morning. Small businesses obviously having more trouble with the ability to offset those tariffs. Year to date, the Russell 2000 is off by 20%. And then metal prices, let's take a look. I know copper was getting hit hard earlier this morning. Now it's down, but only by about 0.75%. You're also looking at gold slightly higher. It's up by about 0.25 percentage point, and silver prices up by about 2.9%. And then the auto stocks have been hit hard this morning as well. Tesla, the hardest hit at this point, it's down another 6.25%, but GM shares right now off by 4.3%. Futures market moving swiftly to price in 4 quarter-point rate cuts, but will the Fed act? Steve Leisman joins us right now with more on this front. What do you think, Steve?
Fed Chair Jay Powell and several other officials have said publicly they cannot ride immediately to the rescue of these markets and the economy despite these surging recession risks. And you can see why in the flash CNBC Fed survey that we did over the weekend. The recession probability, it's not just JP Morgan. The average of the 29 respondents now, 56%, and that is up 33 points for the fastest rise we have ever seen when we've been doing this since January. The GDP forecast down 1.7 percentage points to a pretty anemic 0.7. And there's that CPI forecast, 3.6, a very uncomfortable place, up a full percentage point since January. Well, here's the Fed's dilemma. Inflation and inflation expectations remain elevated, and the Fed is not going to want to give up a hard-won inflation progress it's had fighting it over the last couple of years, so it won't be pleased with this inflation outlook. And Fed Chair Jay Powell took a tough line on Friday, saying the Fed has an obligation to keep tariff inflation contained to just these one-time price increases. Well, what could bring the Fed into play? Well, a sense that the market turmoil is creating systemic risk at the banks, but there is no evidence of this yet. Rapid moves like this, however, can create some trouble. Beyond that, the Fed would need to be convinced the risk to employment is worse than the risk to inflation, but uncertainty could stay the Fed's hand. Constant Hunter writing in, high uncertainty means low investment, which will be a main catalyst for GDP to fall, even if some or all of the April 2nd tariffs are reversed. Then we ask people how long they think these tariffs are going to be around. And you can see the answers are all over the place. Some think they go away after 3 months. Some say 3 to 12 months. 17% said 1 to 2 years. 24% said through the president's term. And 24%, probably the most honest of all, say they don't know. With other shocks, the Fed could act preemptively. But the president tying the Fed's hands with a much larger than expected shock to the system that promises higher inflation and weaker growth. And a rate cut, it would seem to do little to solve the problems created by the tariffs. One concern, the president's top economic lieutenants, they all hit the major airwaves yesterday to sell this plan, and the market is still set to sell off again sharply this morning. I think, Becky, that's a dangerous situation where the Treasury Secretary cannot calm markets.
Well, and Steve, the president himself posting on Truth Social this morning, once again suggesting that the Fed should be cutting rates, so ramping up the pressure on that front.
I have not spoken to a single former, current Fed observer who thinks the Fed should be cutting rates into a major increase in the price level. You would have to be so sure that there is no knock-on effect, no secondary impact from these tariffs, and the Fed just cannot be sure here. You would not want to compound what looks to be a growth problem with an exacerbated or worse inflation problem. I think the Fed, if it's needed, and we're not near this place yet, Becky, could come in with a liquidity statement or a liquidity injection if that's needed. If there are banks that have some problems, the discount window remains open. The Fed would like to solve any liquidity problems that way for sure. But right now, the Fed has to hold the line on rates, I think, because of the coming inflationary impulse to the price level.
Steve, you just talked about discount window, liquidity. It all raises the prospect of the possibility that there's some kind of black swan event we don't really understand inside the system when it comes to the plumbing of the system. Now, the banking system is a lot stronger than it used to be, but of course, so much of the lending structure in America has moved to this idea of private credit, but private credit is still to some degree associated with the banking system. Do you see any kind of plumbing issue that we need to be concerned about?
No, I have not yet. The one issue to watch are high yield spreads went a little higher. I've made some calls this weekend. There are no obvious issues that are out there. You remember that word, Andrew, opacity, we used to use a lot during the great financial crisis?
Yep.
Which is a fancy way of saying no one knows where the heck the losses are. That was a problem. I think there's an opacity problem right now that may have to do with the tariffs. And if you think about it, you don't know which companies are going to be hurt by these tariffs. You don't know which companies sell to the companies that are hurt by the tariffs. You don't know which banks are lending to the companies that could be hurt by the tariffs. That's why you have this pullback. It's like sell now, ask questions later. And there's interesting discussions on our air all day long of people who are saying this company is affected, this company isn't affected, and we're trying to figure that out now. Another issue, you see foreign stocks selling off. Well, U.S. Entities hold about $13 trillion in foreign stock. So it's not just their issue, it's everybody's issue. The other thing that happens is start to model in a recession and the kind of job losses you might have there. And this crazy, crazy notion that somehow it's beneficial for the fiscal deficit to have a recession because it brings down interest rates. If you just modestly model in the decline in revenues that happens when we have a recession, along with the demand for increased federal spending, it is a lunatic idea to try to bring down interest rates and solve the deficit problem with a recession. I don't think that's happening, but that's one of the things going on out there in terms of the discussion on social media right now.
Right.
Steve, thank you.
Okay, coming up on the other side of this, we're going to talk to Acting SEC Chair Mark Vieta on the agency's priorities in crypto regulation. Right now, let's take a look at crypto prices as they have come under some pressure. You're looking at Bitcoin right now sitting just at about $76,000, $76,500. And then you can look across the board. Others are down even more. Some down closer to 10%. And when you look at MicroStrategy right there, of course, super correlated. That's off about 10%. Coinbase off about 10%, maybe a little less than that. Robinhood and Riot platforms. Later today, or I should say later in the broadcast, we've got White House Senior Trade Advisor Peter Navarro. So if you got questions, we've got questions to ask him about all of what's happening inside the White House on the tariff sell-off, the impact on the economy, jobs, and manufacturing. He'll be with us literally in about a half an hour from now. You don't want to miss that conversation. We'll come right back. Welcome back to Squawk Box. So I want to talk about the health of the markets amid the recent volatility, crypto regulation, and so much more. Joining us right now is the acting SEC chairman, Mark Ueda. It's great to see you this morning, and maybe you can help us through what's going on. But before we get into the tariff piece of it specifically, I'm trying to understand the sort of plumbing piece of the markets right now, which is how much do you think that the investor class, which is not just the investor class, but retirees, everybody associated with this, needs to worry about the plumbing of the system, the idea of contagion, and what that either looks like or doesn't look like right now?
Well, last Friday we saw the largest amount of equity trading volume that we had in the history of the markets. And from what we can tell so far, everything worked exactly as designed. And one of the things that we have constantly tried to do since the financial crisis, since the Dashboard crash, and other incidents, is to learn from those events and to build an additional resiliency into the market plumbing.
Is there a demarcation line, though, in your mind, in terms of just about how quickly the market could fall? I mean, I was talking to some folks over the weekend who said, you know what, if it dropped another 15%, that would not be an outrageous situation. It could drop another 20%. If that were the case, peak to trough, that could be close to 40%, maybe even more. What happens then? Meaning, do you think you fully understand where, to the point that Steve Leisman was making earlier, where all of the losses really are and what that ultimately means?
Well, our primary focus is on having an orderly market. So we do have things such as the circuit breakers.
Right.
We also have the limit up, limit down requirements for individual symbols. So in terms of, do we have a fair and orderly market when we have this volatility?
Right.
We're confident of that. Now, as far as the valuations go, that's ultimately up to the investors.
Right.
Not up to government regulators. Investors are right now pricing in all of the new developments that are coming out and what that might mean. And so the markets are designed to deal with that. And so therefore, if you have these terms of bouts of short-term volatility, that's what they're designed to handle.
How correlated, we talked about crypto and we were showing Bitcoin down into about 75,500. Obviously correlated with things like MicroStrategy and stocks that are very correlated. But there is this view that within crypto land, there are these holders, people who've been holding crypto for a very, very long time. Some of it's come off because there's sort of a correlation with the NASDAQ and the like. But also, again, if crypto were to drop in an even more material way, does that change the dynamic because you get into a margin play, a margin call kind of play?
Well, I think that's been one of the biggest questions over the last, I would say, decade or so, is the increase in correlation between asset classes. And there was a time where you would have definite different results between fixed income and equity. We've seen a convergence of the results there. That's been one of the big questions with respect to crypto. Is this a new asset class that will have uncorrelated returns, or at least a greater amount of uncorrelation that you see in the public markets right now?
And then the other question I think has to do with what might be described as the shadow banking system. So much of the credit in America has moved off balance sheet from the big banks to what's called private credit. So the Apollos, the Blackstones, the BlackRock, all sorts of folks who are not necessarily regulated the same way that the banking system has been. But they all have connections in one way or another to the sort of regulated banking system, and how you think about that.
Well, there's a very big difference between a lot of these private credit shops and the regulated banking industry. In the sense that many of them are fully funded in essence by equity pieces, by long-term investors. In some ways, the liquidity mismatch that one might have in the banking area can be less of a factor for private credit funds. Now, with respect to the interlinks between the fund industry and the banking industry, that's one reason why the banking regulators are there. They have prudential authority over bank lending arrangements. They also have prudential authority in terms of other aspects like payments. So therefore, we rely on the banking regulators to make sure that we do not have at least systemic issues on the banking side of the house.
What's your relationship right now like with international regulators? Meaning, historically, folks who are running the SEC, folks who are running the Federal Reserve, would call their counterparts in Europe, they'd call their counterparts in China overnight to make sure everything's okay. In an environment where we're basically telling a lot of people to, pound sand, are they taking our phone calls? Are you in touch with them? What does that conversation look like?
Well, that is one of the biggest differences that we've had since the financial crisis, was the creation of the Financial Stability Board. That is a forum which allows us to regularly meet, talk with our international regulators. I've had numerous conversations since taking office as the acting chairman with them, with folks over in Europe,
Right.
Hong Kong, Japan, other important
And have you
countries.
talked to any of those folks over the weekend?
I've not personally talked with it, but we have our staff who is in constant contact with our global counterparts. They're watching, for instance, our staff was watching developments over in the Hong Kong market over the weekend, for instance.
Right, I was going to say Hong Kong down 13% in a day. Japan, we haven't used any of our circuit breakers here, but Japan did use circuit breakers overnight. Is that where you watch for signs of stress that make their way through? Like, what do you think as you see those types of things?
Well, what happens in Asia oftentimes and Europe can be an early warning as to what could occur in our markets. Right. So what our staff does is we look at those developments and we make sure that with respect to the various market centers, with respect to all of the clearance and settlement, for instance, and the plumbing, so to speak, that they're up and ready, and that they're making sure that we do not do everything we can to minimize the risk of a market outage.
One other question that I think a lot of business leaders think about is what kind of public statements they can and should make or not, but also what would draw the ire not just of the president, which is one piece of this that is sort of harder to ascertain, but to the extent they would draw your attention about what kind of risks they need to be identifying publicly or not in this moment.
Well, first, as far as any public statements that business leaders make, basic rule of the SEC is make sure they're not false or misleading. Now, with respect to material risks, these are things that already SEC filings require. You need to talk about the material risks, including, for instance, supply chain risks that one might have that go into whether it's your annual report on 10K. Now, if there are further material developments, sometimes they'll be required to file things on what we call a Form 8K or a current report.
Does everybody have to file an 8K just because everybody's business just got a lot more complicated and there are more risks to disclose to the public based on the tariffs?
Yeah, largely it depends on the materiality.
Well, I would say there's a lot of businesses.
But do you expect a lot of I guess the question is, are there all of a sudden a whole series of pre-announcements that have to take place, or does the boilerplate language that exists for most companies that talk about trade and the like and things like that, does that cover where they really stand in terms of identifying material risk?
You have to read things in conjunction with the overall information environment. So we have these material risks out there, but more common is there'll be an earnings call, there'll be an analyst call with the CEO or the CFO of the companies, and they will talk about potential impacts to the extent that they have made, for instance, a forecast or a forward-looking projection before, and if they have reason to think that that needs to be updated based on changed circumstances, what you will oftentimes see them do is put out some sort of corrective disclosure.
One other thing that I've been thinking about, and I don't know where you stand on this, because you're going to say we don't regulate these folks, but given what the government's been doing and this administration's been doing, it would not shock me, and I hate to speculate, if we were to find out that a whole bunch of people who work in Washington as our elected leaders, one way or the other, ultimately sold stocks last week, or potentially worse than that, shorted the market. My question to you is what you think the responsibility of the SEC is in those contexts.
Well, we have responsibility on insider trading regardless of whether they're inside or outside of government. We have a very clearly established body of law for those who engage in acts that are prohibited by the insider trading.
But if somebody had access to the list of the tariff plan the day before the plan and decided to sell out of equities or to short the market or to do something else that I haven't thought about, right? Would that be considered inside information to you?
It potentially could. You'd have to take, again, there are two basic duties, what we call the classic insider trading theory of law, as well as the misappropriation theory of law. There are various elements of that. If those elements are satisfied, they can be subject to insider trading liability.
And do you think that also encompasses crypto? So if somebody were to decide that they were going to sell out of Ethereum or Bitcoin or of XRP or something else, would that come under your jurisdiction?
Well, I know my predecessor, Chairman Gensler, made it pretty clear that Ethereum and Bitcoin are not securities that fall within our purview. So if it involved either of those two, it would not be insider trading because it does not involve the purchase or sale.
What about an
of security.
ETF of that?
So an ETF would be a security, and then one would have to, again, go through and take a look and whether or not they've satisfied the various elements that we need to do to bring an insider trading case.
Interesting. Chairman, thank you for coming in. It's nice to see you.
Well, thank you for having me.
Appreciate it.
Mr. Chairman. All right, market flash for you folks. Take a look at shares of MicroStrategy, which is now known as just Strategy. That company said that it had an unrealized loss on digital assets in the first quarter of $5.9 billion. During the quarter, it bought more than 80,000 Bitcoins at an average price of just under $95,000 a piece. That stock reacting, it's off by just over 10% to that today on this news. Obviously, these were the losses that they had seen through the end of the first quarter, so that does not include the losses for the month of April, too. We'll continue to check that out. Take a look at the price of Bitcoin right now. We've been talking about it this morning. It's been under pressure just like with equities. It's kind of correlated to the equity market, and I think this morning it's trading just above 76,000. 76,719 right now.
Still to come, is the market forcing the Fed's hand or trying to? Former Fed Vice Chair Larry Brainerd going to join us to talk about the impact of tariffs and what the Fed may or may not do. And then White House Trade and Manufacturing Advisor Peter Navarro is going to join us. Squawk Box will be right back.
Welcome back to Squawk Box. Take a look at right now at U.S. equity futures. We are in the red this morning, close to 900 points off on the Dow right now. NASDAQ looking to open down about 500 points. The S&P 500 looking to open down about 132 points on the back of the continued anxiety and nervousness about what all of these tariffs ultimately mean. And the VIX now at its highest level since March of 2020. 2020, back in the midst of the pandemic. Mike Santoli joins us now with more. Mike.
Yeah, we're having to go pretty far back in time, Andrew, to find some comps for what's going on right now. Here's the S&P 500 index fund. It is worth noting the S&P futures you guys have been tracking is up a couple of percent from the overnight lows. Also, the volatility index did briefly print around 60 before coming back down. That somewhat mimics what happened back in August in the yen carry trade sell-off. You had this overnight spike in the VIX, and then it was a little bit of a crescendo of the fear and the selling activity. So this is going to get us down. We're, 4,900 plus is the equivalent S&P 500 level. So we did get down around here back in the spring of last year, kind of wiping out a year's worth of gains. Now, some levels people are looking at in terms of even more longer-term sort of structural support, if we get there, is in the 47 to 4,800 range. 4,800 is the peak in 2021 at the very end of that year before we had that bear market. You have this really long-term moving averages coming in there. So the point being, we're kind of cutting into going back pretty far in time, I guess is the way to put it now. When you always have these agitated markets, you've been pointing out the potential for these stress events. We're seeing credit spreads widen out, but not in a completely alarming way beyond what we're seeing in equities. Here we go. With the 10-year Treasury yield, look, it's at 4%. And I think a lot of this, people looking for silver linings say, hey, the yields are down, rates are down, oil's down. Well, rates are still 30 or 40 basis points above where they were in September, and that was not as bad a growth scare for the economy as we're having right now. It's worth asking just exactly how much downside you can expect in yields and what the scenario would have to be to get them there. And the rest of the world buys a lot of our bonds as well as our tech stocks, so it's worth keeping in mind. Now, they get the money from the trade deficit. That's a pretty circular situation. Finally, take a look at Robinhood shares. Retail traders have been pretty resolute here until Friday when there was a bit of a rush out. They've really been trying to buy the dip all the way down, getting kind of chopped up in the short term. This is a 2-year chart of Robinhood, a proxy for that as well as for crypto. And you're seeing it's really lost that massive fourth quarter of last year spike, but it's still well above where it's been for a while. It's not clear to me that you want to see the retail traders continue to try to buy it down. Maybe capitulation means that those folks start to turn negative as well, guys.
Mike Santoli, with a little bit of a history lesson this morning. We'll see where things go for the rest of the day. Appreciate it.
Fed Chairman Jay Powell said that President Trump's tariffs are larger than expected, making it harder to say what the appropriate path forward will be for Fed action. Joining us right now with the tariffs' impact on the Fed is former National Economic Council Director under President Biden, Lael Brainerd. She's also a former federal vice chair. And Lael, already this morning we have heard from the president himself posting on Truth Social, once again putting pressure on the Fed to cut rates right now. It's clearly a more difficult position for the Fed to be in. How should they respond?
Look, I think the Federal Reserve is in a bind here. We heard the chair say it, that these tariffs are much larger than were expected. They're going to be much more disruptive. It'll really lead to massive changes in supply chains, and we know from the pandemic that means very persistent inflation or persistent higher prices. Those higher prices could come before any signs of real slowdown in the labor market, and so the Fed is going to have a difficult time. Don't forget, consumers' inflation expectations have already jumped up on the expectation of tariffs. They are coming off the experience of having lived through high inflation, so they're going to be much more sensitive to it. And so the Federal Reserve is going to be very sensitive to any possibility that those inflation expectations could stay higher. And so they're going to be reluctant to provide a lot of support to the economy before they actually see slowing.
Jeff Gundlach pointing out last night that the 2-year U.S. Treasury yield, around 3.5%, already is suggesting that Fed funds are about 75 basis points too high, that they would like to see that come back down. This morning, the 2 years at 3.629%. But he doesn't think that the Fed actually will cut rates unless the losses are substantially greater than what we see right now. Would you agree with that?
So I think that it is a very difficult position for the Federal Reserve when you get very strong inflationary pressures coupled with the possibility that the economy could slow a great deal, which is, of course, what the stock market is telling us. Now, the market, as you said, is getting out ahead and anticipating that the Fed is going to have to cut at some juncture. But if those cuts come late, because the inflation comes early, you could still see a very significant downward move in the economy, in the labor market, certainly among consumers. We've already seen their sentiment plunge, and it is likely to go down further as they think about what's happening to their 401ks, as well as the prices they're seeing in stores.
In normal times, the Fed has a pretty straightforward formula. It's going to be looking at things like the labor report. The one we just got on Friday was very strong from a month ago. It'd be looking at things like CPI to try and figure out CPI and PPI, where the inflation levels are. But when you have a crisis like this, the situation on the ground is moving a lot faster than the data will reflect those normal data points that you're watching. Where does the Fed look? What are the alternative data points that they might be reading at a time like this?
Well, I think you're right, first of all, that the last payrolls report, which was good, was backward looking. I think people are expecting the CPI report to be pretty good, but they're not going to take much comfort from it because those tariff price increases haven't started working their way through. But if you look at the increase in the weighted average tariff rate to something like over 22% from where it is today, that's $3,800 of lost purchasing power for the average family. And that is a very complicated equation for the Federal Reserve to navigate through. You know, it is not even clear right now what those tariffs are going to be. There is so much uncertainty out there. Businesses have pulled back. Obviously, the Trump administration has in mind that they're going to get significant amounts of revenue from these tariffs. So maybe that base of 10% is locked in. That's already a tripling of our average tariff level. And then on top of that, higher tariffs for sectors like auto, steel, semiconductors, possibly lumber. And then we just don't know what's going to happen with the very high tariffs on countries like Vietnam, China, the EU, Europe, and even little Lesotho.
I guess the Federal Reserve probably doesn't like being put in the position of coming to the rescue for policy moves that are put on so quickly without much time in advance. Is it fair to say that the Fed would be reluctant to jump into the rescue right away?
Well, I think the difficulty for the Federal Reserve is it has to make policy on its dual mandate, which is inflation and the labor market. And if inflation expectations and inflation are moving up quickly, and the slowdown is not coming for some time, they are going to be in a very difficult bind because they are going to want to lean against those inflationary pressures, and that gives them much less ability to come in to support the labor market before they see any signs of weakening. So this is one of the most difficult scenarios for the Federal Reserve, and it's made all the more difficult because the White House has left so much uncertainty, and you know the markets are reacting to that uncertainty because there is no clarity on what those ultimate tariff levels are going to be, and the tariffs that they have announced are jaw-droppingly large compared to what most people expected and any historical experience dating back all the way to Smoot-Hawley.
Lael Brainerd is the former Fed Vice Chair. Lael, thank you for joining us this morning.
Thank you.
Right up next, we're going to hear from the President's Advisor on Trade and Manufacturing, Peter Navarro. He's going to join us right after the break.
Big conversation.
We'll be right back. President Trump posting on Truth Social this morning, oil prices are down, interest rates are down. The slow-moving Fed should cut rates. Food prices are down. There's no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, whose markets are crashing, just raised its tariffs by 34%, on top of its long-term ridiculously high tariffs, plus not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. And a number of countries reportedly reaching out to negotiate tariffs with President Trump over the weekend. Joining us now with the latest, President Trump's senior trade and manufacturing advisor, Peter Navarro. And given the backdrop, Peter, of what we've seen, the tumult in the markets, and the S&P could theoretically be in bear market territory. And I know you make the distinction between Main Street and Wall Street, but obviously they're interconnected. So to get the real story on how many countries are calling and on whether the president is actually agreeable is important, because we've heard all these countries are making the phone call, but then we hear that maybe the president isn't interested at this point. Can you clear that up?
Sure, Joe, but let me first take you back in a time capsule, because this feels a lot like the day after the election in 2016. And I don't know if you remember that day, but I was on the set with you. The futures were dead red down. And I made the prediction that the Dow would hit 25,000. And Andrew's head exploded. It's like, well, but you correctly point out, that wasn't that heavy a lift. And we did hit that, not in 4 years, but in less than 2 years. And what I'm seeing, Joe, is a beautiful situation where we will hit 50,000 on the Dow, and we're going to have a broad-based recovery in the S&P 500. The market's trying to find its bottom now. The thing I would say to retail investors is don't get panicked out by all of this. And what the president could have added to that fine truth was the fact that the biggest tax cut in American history, the broadest base tax cut in American history, is coming within a matter of months. So any discussion of recession seems silly when you factor that in. Plus, the Fed is not going to do its job, but the long bond is doing it. We're lowering our oil prices, which is just amazing.
Right.
And here's the one other thing I want to say macro-wise, Joe, because look, this is all about people worried about global recession. That's what they're worried about. The restructuring that's going to happen, Joe, globally, is going to start with China and Vietnam and Germany, heavily export-dependent countries. They're going to have to engage significant fiscal stimulus to reorient their economy. So that thing is going to go on. And meantime,
they're much bigger. I think they're much bigger than most people thought. And I think from policy institutes on both sides of the aisle, the methodology that was used has been universally derided as being non-serious. I don't know whether you know exactly who came up with the formula, but it allowed you to at least characterize most of these countries as being their tariffs well above the reality of the situation, so that when you say that we're going to do half on them, it was much higher than anyone anticipated. And I think you'd have to concede that this was not the market reaction you were looking for. There's a way of maybe incrementally trying to accomplish some of the things that the president wants to do in a reasonable, serious way. And this just almost across the board has caused what you're seeing in the stock market, and a lot of head scratching and head shaking on whether anyone really knows what they're doing in this case, Peter. Can you just acknowledge that?
Sure. No, I can't, because here's what I'm seeing. You're throwing a lot of stuff at me. First of all, the methodology was perfectly sound. It was done by the Council of Economic Advisors based on long-term studies that are in the academic literature. And the people taking pot shots at us are the same people that always take pot shots
the American Enterprise Institute, Peter.
Of course. Joe, come on. The American Enterprise Institute has been against
conservative. Larry Lindsay.
Let's not get buried down in those weeds now. You asked me a serious question.
Was the president willing to negotiate? What we have here is a national emergency based on massive chronic trade deficit caused by systematically higher tariffs and non-tariff barriers. So when you ask if we're willing to negotiate, the president will always listen. But let's understand what the problem is. When you have a country like Vietnam, let's take Vietnam. When they come to us and say, we'll go to zero tariffs, that means nothing to us because it's the non-tariff cheating that matters. Let's do Vietnam, Joe. They sell us $15 for every $1 we sell them. About $5 of that 15 is China transshipping to Vietnam to evade their tariffs.
Why don't you just go after those shippers?
What does Vietnam do? They dump into our markets, killing our shrimpers, our people who make metal brackets, kitchen cabinets, agricultural products. They engage in intellectual property theft. They have the biggest number of cases aside from China at the Department of Commerce on the dumping. So the point is, anybody who wants to come to talk to us about lowering your non-tariff barriers. Vietnam has a 10% VAT. Europe has a 19% VAT. We can't compete against that.
So,
We have
Peter,
tried
help
at
us
the
then
World Trade
understand-
Organization to get, Andrew, let me just make this point. We have tried at the World Trade Organization since the 1970s to get VAT tax relief, and they've told us no every single time. We've won case after case at the World Trade Organization on things like our agricultural products, pork, beef, and other, and corn.
Peter,
and they
I think
just
the
blow
thing
us
we're all
off.
trying to understand is then if there are going to be negotiations and you're saying zero is not enough, what is enough?
Zero is a small first start. Okay.
Okay, so
what is
but
enough?
then what is enough? And let me ask you, but related to that.
But let me answer that question. Let me answer. Let's take them one at a time. We got plenty of time. So what is enough? Okay, you take any given country, they're like fingerprints. They all cheat us in a different way. So here are the things they cheat us on. Some of them engage in currency manipulation. Some of them have a hefty VAT tax. All of them dump into our markets. All of them engage in heavy export subsidies and government subsidies. All of them put up these phony technical and phytosanitary barriers to our ag products and our autos and everything in between. Many of them steal our intellectual property. A lot of them run sweatshop labor, including forced child labor. They have pollution havens. So when you say to me, Ed, what do we want from them? We want fairness. We don't want them to kill American workers by inundating us with this non-tariff cheating. And it would be really refreshing to have the media talk more about that. This zero tariff thing, it's a misdirection. No, it's a misdirection. It's the non-tariff
What
barriers.
that suggests
The
is that there's
non-tariff barriers
going to be
cheating.
a lot bigger challenge in terms of actually then getting to yes, if you will, or finding the off ramp where a deal is made. Given that we're not just talking about getting to zero, we're talking about getting all sorts of other policies inside each of these countries changed. My related question, I don't know, maybe they're unrelated, related, is you have talked a lot about how tariffs, and the president's talked a lot about how tariffs can be helpful as a tax, effectively, as a way to raise revenue here in the United States.
Tariffs are tariffs, and they do raise revenues. They will. I see them as a tax cut, Andrew, because they're going to help pay for the biggest tax cut in American history. Every dollar that we extract from foreigners who are cheating us is going to go to the American public in the form of debt reduction and tax cuts, including, for example, in our auto industry. Anybody who buys an American-made car is going to get a healthy tax cut. We were given $7,500 away for EVs made partly in China. That's crazy. If Donald Trump gives away money for American-made cars made in Akron and Flint and Detroit, that's gets our manufacturing
Peter,
base
just stick with me though for a second.
Sure.
Either we can collect those revenues, and by the way, there's other people who think it'll be a tax on the American people, but let's just put that aside and assume that you can collect revenues. Either you're collecting revenues and that's the goal, or you're negotiating with these countries to get to not just zero, it sounds like anymore, but something very different than that. But those two goals seem to be at odds with each other.
Not if you look at it as a movie rather than a snapshot, Andrew. The goal here ultimately is to have people make things here. Remember, the president has said early
But
and
if
often.
that's- but again, if
hang
that's
on,
the
let
goal-
me finish the thought, Andrew.
Sorry.
Why are you interrupting? Let me just finish the thought. The president has said early and often that the best way to avoid tariffs is to just come here and produce. I mean, if you look at our auto industry, right? We're an assembly line for German engines and transmissions right now. That just doesn't make any sense. In World War II, we won that war with our so-called arsenal of democracy. We can't do that anymore. We've got parts all spread all around the globe, and if COVID taught us anything, those supply chains are not resilient. They're not reliable. So I take your point, but I'll tell you, we're going to get to a place where America makes stuff again. Real wages are going to be up. Profits are going to be up. And look, it bewilders me right now in the sense that if you're just looking at this chessboard, it's the market's going to find a bottom. Time to layer in. And if you look at all the good things that President Trump is going to bring you in terms of tax cuts, deregulation, lower energy prices, lower interest rates, and the world restructuring in a way which is going to be healthy. I mean, how many conversations have we had about China moving from an export-dependent parasite on the world to an economy that actually serves its own people rather than keeps
Peter, you
its
talk about tax cuts. Do you know anything about letting the top marginal rate go back? Are you a proponent of letting that go from 37 back above 39.6 to try to pay for some of this other stuff? Because you know how many small to medium-sized corporations pay taxes at those rates if they're
Joe, that was not my lane. I let Scotty
well, you just said we're going to cut taxes. That's not
invested.
You add all this together.
No tax
you add all
on
this
tips.
together, and it's not
no
looking.
tax on overtime. No tax
Okay,
on
got
Social
that.
Security. Tax breaks for if you buy.
But
a
if you
domestic
raise the
auto,
top rate, that's not a Republican or a conservative
You're
tenant.
asking
I don't
the
know
wrong guy.
whose idea was that. So
Ken-
the tariffs are all your. So you own the tariffs, then.
Joe,
I don't know if I'd want to know that.
you're going
or
after
not
me
either.
for something
Right.
that I'm not
Okay.
involved in. I can
Can I
talk
ask you-
tariffs till the cows come home. Hey, Becky,
Okay,
how are
well,
you?
let's talk a little more about the tariffs because this idea of who's getting hurt immediately. Oil prices, oil's fungible, they can go elsewhere to buy oil. Things like soybeans, corn, wheat, that can be picked up from other markets too. Brazil is very happy to step in and supply some of those things. Farmers here are already getting hurt, already asking for relief like they got under the first Trump administration. If we are raising these tariffs, taking that money and simply turning around and paying the people who are getting hurt with it, how does that benefit the economy, particularly if it leads to a downturn in the economy that costs people jobs?
Because, Becky, it brings home our domestic manufacturing. I mean, that should be patently obvious to you. That's the whole point.
That takes
We
years.
bring
because
here.
Are we asking
It
people to be
doesn't.
patient
See,
for
that's,
years?
that's another one of the debates. How long will this take? Brian of the UAW stands up on Liberation Day, almost steals the show from the boss, and he says he's lived through this whole thing. He watched the factories go away, and now he knows that the factories are underutilized. There's brownfield investment that can be made in auto parts factories that are still there, and it won't take long.
No, but
And
they
in
would,
the
even
meantime-
brownfield will take 18 months to 2 to 3 years, I think, Peter.
No, no, no.
That's the question. That's a long
Look,
time to get things
look,
back.
I
on
remember what I did working in the pandemic, and we were looking at PPE N95 masks that were going to take 6 months to get factories done. You know, did it in 2 months. GM got us ventilators in 14 days. So don't tell me that America doesn't have the wherewithal to move things there. We can do stuff. But look, the big picture here, let's not lose sight of the big picture. We got a $1.2 trillion trade deficit this year. We have since the trade war began, when the world declared war on us back in 1979, we've accumulated $18 trillion of money we've had to transfer into foreign hands. That's about 2/3 of an annual GDP. That is totally unsustainable. And what we need to be able to do is stop that for our national security, our economic security, and the way to do that is to get our manufacturing back, and that's what we're all about. And let's understand the problem. We charge us systematically higher tariffs, but the bigger problem is the non-tariff cheating. It's just That's
Peter,
the
let me
world lives
ask
on
you
that.
this.
They suck our blood on that.
Peter, let me ask you this. Elon Musk, who the president has described as a genius repeatedly, basically came out over the weekend and said that he at least implied two things. One, that he's not in favor of these tariff program the way it's structured currently, suggesting he wants it, he wants 0-0 across the board. But he also took a shot at you and took a shot at you personally. Have you spoken to him?
No, but we'll speak. I'll probably see him today in the Oval. It's no big deal. Here's the thing. It's like Elon.
Well, what do you tell
Musk,
Elon? Why is he? If Elon's against this, then he's so
Andrew, again,
smart.
let me finish. Let me
Go ahead.
finish here. I'm just about to tell you. Look, Elon Musk and his Doge team is making a contribution to America in terms of waste, fraud, and abuse, and that's a very good thing for this country and the American people. When it comes to tariffs and trade, we all understand in the White House, and the American people understand, that Elon's a car manufacturer. But he's not a car manufacturer, he's a car assembler in many cases. If you go to his Texas plant, a good part of the engines that he gets, which in the EV case is the batteries, come from Japan and come from China. The electronics come from Taiwan. The tires come. What we want, and the difference is in our thinking and Elon's on this, is that we want the tires made in Akron. We want the transmissions made in Indianapolis. We want the engines made in Flint and Saginaw, and we want the cars manufactured here. It's like this business model where BMW and Mercedes come in to Spartanburg, South Carolina, and have us assemble German engines and Austrian transmissions. That doesn't work for America. It's bad for our economics. It's bad for our national security. We want them to come here, and with Elon, it's fine. He's a car man. He's a car person. That's what he does, and he wants the cheap foreign parts, and we understand that. But we want him home. We want him home.
Peter, you
for our
expect
national security, economic security, and everything's good with Elon.
you
It's no
expect
problem.
deals near? Do you expect deals near term, or is this like a? If the market really gets in its mind that this is a 6-month or a 1-year exercise, I don't know how much stabilization. I don't know if your 50,000 prediction is going to come. I mean, do you expect deals to be announced this week with the president?
I expect the market to quickly find a bottom. I expect
Without
the
any
smart
deals
people,
from the president, or without any? Is it possible
Yes, Joe,
he
because
says
what
let's
we're
do a
doing-
30-day hiatus on some of this,
I've
and let's
told you,
talk it
Joe.
over with all of our trading partners to see if we can get somewhere before we do it. Is that possible?
All right, hang on. Again, let me finish these thoughts here. I mean, first of all, it's the president's decision. Second of all, I've told you that the most important thing is for countries to come to us not offering zero tariffs, which is disingenuous because it won't get us anything, particularly with countries like Vietnam. What they have to do is tell us they're going to drop all their non-tariff cheating. And as you said, that takes a little time here, okay? We got a $1.2 trillion deficit. But in the meantime, Joe, hang on. Let's not lose sight
Peter, I just want to
of
ask
all
you
the
about
good
breaking
things
news.
that
We're
are
about to
happening
end the
here.
show. We're about to end the show, and I just want to ask you about some breaking news. The EU's von der Leyen is saying that we are now ready to negotiate with the U.S. on tariffs. We are ready for a good deal, but ready to take countermeasures. We will set up import surveillance task force. Is this a negotiation that you think will bear fruit, that we could see lower tariffs as a result of?
Let me say the Financial Times is going to run an op-ed of mine today, online and print tomorrow, which addresses some of that. And what I would say to the EU, when you make those announcements, would you be very careful to tell us you're going to lower your non-tariff barriers? EU, drop your 19% VAT. EU, respect the WTO's decisions to let us sell us our pork, our corn, our beef. You don't do that, EU. You dump stuff in here. You're using export subsidies. You steal from the American people every which way as possible. So don't just say we're going to lower our tariffs. That's a good small start because you know your tariffs are higher than ours. But the bigger problem, this is the thought I want to leave with everybody. The bigger, by orders of magnitude, is the non-tariff cheating, and that's got to stop. So that's what we want to hear. You start talking that language, we'll see what happens, as the boss says.
Peter, thank you very much for joining us today.
That was
Folks,
a
that
pleasure.
does it. for us today. Make sure you join us tomorrow. Right now, it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are sharply lower again after one of the worst two-day sell-offs in recent market history. Both oil and the VIX flirting with 60 today. We'll watch for those countermeasures from the EU this week. We've got a batch of sell-side downgrades. Of course, Q1 earnings on the way later this week. Let's begin with this global market sell-off, Jim, which continues to deepen as the president stands pat on this tariff plan. $11 trillion in market value wiped out since Inauguration Day. You wrote this morning, not the washout at this point that you think the market deserves.
I was really hoping that we would get something in the, say, 9-10% decline. And then you could say, well, wait a second, maybe we're close to the worst case. I think I'd be pretty clinical about it. I think that the way you want to look at it is what multiple do you put on the new earnings estimates for the S&P? And I think that the S&P, people thought, we thought it was going to be 270, 280. Now it's going to be 230. I think you have to put a worst case 14 times because markets have tended to bottom at 14 times earnings. And that gives you a 36% downside from here. And I use that worst case because that presumes that nothing's going to happen other than the man we heard right before, Peter Navarro, continues to win. Peter Navarro, obviously in the ear of the president, right before he came out with the tariffs, with a much sharper tariff than reciprocal. I think that there are two camps in the White House. I know the president would not necessarily want this characterization, but it's what I see. There's a camp that just says, listen, we've got to be a little more nuanced about all of this. And then there's a camp that's winning right now, the Navarro camp, which just says, look, this is not a negotiation. It's about vanquishing the China. It's about building here or else. And whether we have a recession, well, we won't, because there's going to be the giant tax cut that comes from the tariffs.
Except that most of the executives I've spoken with over the weekend, and I would assume the same for you guys, think we are potentially going to have a recession.
Absolutely.
And the market is clearly saying that. Oil falling perhaps below $60.
Right.
The 10-year at what, 4 or below that.
No disagreement.
There it is.
No
and I mean, it becomes a self-fulfilling prophecy. People are pulling back to a certain extent in terms of making decisions or allocating capital. They're sitting on their hands. And by the way, I come back to this basic notion of this policy, whatever you want to call it, in and of itself, which is it a negotiation or is it revenue raising? Are we in favor of free trade, or are we really trying to eliminate trade deficits? Because they're completely different things.
Of course.
And right now, it appears that we want to raise revenue and get rid of trade deficits.
Right.
Even though we really can't necessarily convince countries where people have nothing to buy stuff from us. When I hear Howard Lutnick say, as he did yesterday, that Vietnam should buy $200 billion worth of our stuff, it's nonsensical.
Well, but
they have a $430 billion GDP. They don't.
Well, I think
they're never going to.
It is nonsensical. It's not what Navarro is saying. Navarro is saying, okay, look, and I hate to be just one camp or the other, but it works, Carl, because it's reality. Peter Navarro's long-standing view is just that we can't negotiate with Vietnam. It's not worth it, because what there really is, they're a proxy for China, and that they recognized and were able to get around the tariffs by manufacturing things in China and then moving it right to Vietnam right before it finishes, by the way, including Apple. And I think for the point of view of our viewers, they have to understand that Apple is the paradigm of what Navarro is trying to fix. They bring it back here, they're fine. If they don't, look out. They are not going to be able to make their numbers. He's not that specific, but it's the only way to translate it. Maybe we can listen to Peter, because Peter right now is in charge. He's in charge.
What I'm seeing, Joe, is a beautiful situation where we will hit 50,000 on the Dow, and we're going to have a broad-based recovery in the S&P 500. The market's trying to find its bottom now. The thing I would say to retail investors is don't get panicked out by all of this. And what the president could have added to that fine truth was the fact that the biggest tax cut in American history, the broadest base tax cut in American history, is coming within a matter of months. So any discussion of recession seems silly.
So that's what David is saying. You've got this dichotomy. I mean, this is a man who's not talking about negotiating. He's talking about raising a lot of revenue. I think you're saying, David, in the interim, we've got inflation, because there's bargaining, but everybody has to pay higher prices, and ultimately a recession if there is not some sort of accommodation made. But you know,
Just
Peter
everybody
Navarro's
I spoke
obviously
to this
he's gonna
weekend
move.
was in somewhat of disbelief. No, I'm not saying I spoke to 50 CEOs, but I probably spoke to 7, Jim. You
Right,
probably
I
spoke
did
to more
maybe.
than I did.
Yeah, I got sick of them.
Now, all of them are people I've had long relationships with, so they feel free to speak as freely as they want.
Yes.
Obviously, I'm not going to share their names. They were in disbelief, and they're trying to understand, well, is this a negotiation or is this not? The more days that go by, it doesn't appear. But even if you were to turn around 180 degrees and capitulate conceivably to the market reaction and everything else that's coming here, it's not clear that you would create any level of confidence any longer. And all of this is self-inflicted at this point, all of it.
Right.
None of this needed to happen, and so I think people are trying to work their way through it. What if you want to build something right now in this country? Let's say you even wanted to build a factory. Well, can you do it? And think about, well, what are my input? How much is it going to cost me? And where am I going to find the labor? You know, all the things you need to do. And by the way, in 2 years, is the policy going to be changed?
No, and I think that the
Why not?
Wait, no, you don't think the policy will be changed?
No,
or
no, I'm saying you
don't?
can't build fast enough to equal this policy. You can't, and I think that what Peter is hoping for is to bring China to its knees while you move. Now, as of last night, one of the largest importers in the world, canceled all its direct import orders to China because right now there's a battle, and this is not alone. There are a bunch of importers who are saying to the Chinese, we don't want the product unless you eat the tariff. This is huge. It's going to change how people feel about whatever valuations they're using and whatever earnings per share people are using. You have to pull your forecast because right now the battle is we're American companies saying we're not going to pay the tariff.
Well,
Chinese companies saying
We could go back and say, look at the Taiwan issuing export credits.
yes, but right now there's going to be a freeze in orders, and I think people don't understand that.
There may be a freeze in orders.
There
is a
is.
freeze in sort of in trying to figure out where you and how you want to allocate. By the way, to the extent that you're actually thinking you're going to be facing more difficult times, what are you going to do? You may actually start to lay people off. You're certainly going to look for opportunities to cut costs.
We have a hiring freeze on the tape this morning over at ABN AMRO.
Sure.
Anybody who's counting on any kind of capex, non-residential construction would look at copper today, Jim, and say, "Is that telling you that we're set for a capex boom?"
But how about this? How about if the ultimate goal is to get people, when it comes to the stock market, to focus on domestic companies? Now, this is not painless.
Okay, I'll listen to you.
I'm just saying.
I'm about to get all over you, but I'm going to listen to what you got to say.
Because it's not my view.
Okay, tell me.
You can attack this view, of course.
Okay.
What happens if the view in the White House is to say, you know what? There are so many under Biden, the companies that benefited the most are the big international companies like Mag 7. Now it's time for the other 490.
We've heard Besson saying this, right? It's time for the other 493, and take a look at the equal weighted S&P. I mean, he's been listening to Mike Santoli. Great. So what?
Has he?
My point is that that's the argument somehow.
Just kidding.
That somehow that only 7 companies have taken the S&P up. It's, by the way, not true.
No, of course it's not true. What I'm saying.
They were a big part of it, though.
I'm trying to put people in the heads of the people in the administration who are saying not to worry and who didn't like the analysis that I did with you about Black Monday.
Oh, that guy, and I said that this is going to get written up, and it did over the weekend.
It was not, but all I said was, if you bottom fish on Friday, you sleep with the fishes on Monday. So far, you'd be sleeping with the fishes.
Well, I mean, we can add to your name, Jim, comments over the weekend by Ackman, and this morning by Cooperman, and Druckenmiller, and Bob
Miller is
Hogan.
interesting, but I mean, I think Elon Musk is more interesting than all of them guys.
Versus Navarro?
In part because my understanding, and he's made it clear, is he's really deeply concerned about what manufacturing here in the U.S. is going to look like for him at the 2 key plants that Tesla has.
Right.
They do. Now, we pointed out that Tesla is, perhaps the least impacted by some of the tariffs. But that said, I think as much as 35% of what goes in there is coming from other countries.
And how about
they obviously
China?
do sell
How
in
about China?
markets around the world. And I think it is notable in Musk coming out against Navarro in a significant way.
It is.
I really could care less about some of the other people that we hear from sometimes, but Musk, you have to listen to him. When he says to Navarro, you haven't built
Anything.
anything.
Took a big shot at Harvard.
Yes, that too. But That's important. And so, I don't know where that goes. I don't know who has the ear of the president specifically.
So do you.
Well, you think it's Navarro and not Musk.
I know so.
And not Musk.
That's right.
And is there anybody...
You think those tariffs, you think those were from Musk and Lutnick?
Is there anybody saying, well, conceivably we're going to have a recession as a result of this? We're seeing it happen in real time at this point. It's not clear exactly how long, if ever, this is going to take place. When Lutnick talks about millions of screws for an iPhone, is that really something that is realistic? Is that something we're going to all expect and want? Why not go the route of trying to develop the businesses and manufacturing capabilities we need in this country through tax credits and things of that nature, Jim?
I think that there's a belief that unless you move swiftly, Congress is actually going to get involved. As long as you blitz everything, then you can roll China like you rolled Paul Weiss. I think that's unrealistic. I think China's very powerful, but I do believe right now there's negotiations, let's say with Amazon. Amazon has a lot of stuff that is made, that's branded, and I don't think that stuff's coming in. I think that stuff's frozen until they come up with negotiations.
What about even if, let's say they roll off reciprocal, right? And let's say these negotiations do bear some fruit.
Right.
How much scarring has there been to U.S. brand equity and the street's view of Trump? Will he have the street after that?
Well, I think that one of the things that we're talking about and why it's so difficult to say you should buy it here is that I think Navarro's in charge until we have a considerable decline in the market. And then maybe Navarro loses his...
Well, he's only in charge because Trump agrees with him.
Well, no,
but when does he capitulate? When does the president... That's what everybody wants to know, if in fact it happens. If it doesn't happen, at least I can plan, and, well, it's not going to be good, but I can plan. Everybody right now is just, well, I don't know what to do.
Even if he were to capitulate, does anyone expect him to stay the same?
Navarro doesn't want negotiations with Vietnam. He thinks Vietnam's a backdoor.
Listen, Jim, you can't have both. You can't have free trade and raise revenue.
He's not
You
for
can't
free
reduce your
trade.
deficit and...
Free trade?
We're just
free trade?
It's not about that, right?
Thank you.
Okay.
When we come back, we'll talk about what Jamie Dimon said in his annual letter today about tariffs and U.S. leadership broadly. We'll get to some of these downgrades and declines, cuts to year-end S&P targets, with Dow futures still down, not quite session lows, but down 900. Stay with us.
I think what the market doesn't understand with tariffs is what does it look like through the entire economic model of a company like ours? You know, we've been able to negotiate, to navigate the last tariffs. We can navigate these tariffs even if they're 46%. Is it more difficult? It's more difficult. Is it going to change the outcome of the company? We don't believe so, but we also don't believe they're going to be 46%.
That's RH's Gary Friedman talking to Jim on Mad Money Friday night. Interesting, really interesting conversation, Jim.
Yeah, thank you. I do believe Gary did what you were supposed to do, or thought you were supposed to do, which is shift out of China, build in Vietnam. He's been gradually doing that. I think that he, as well as other people, felt that that was the direction of what Trump wanted. That's no longer the case. I think that Trump might have felt like that, but it's not working anymore. So I don't think the tariffs go away. I think that in my discussion with the administration, they think that Gary should be building everything in North Carolina. And I come back and say that's unrealistic. And they come back and say, well, what does it matter then? And why are you so focused on how companies will do? And I come back and say, listen, I want to stay the course. I want to come out here and tell people to stay the course. And I don't want to feel like I'm in such a situation where you need to panic people, and I don't think you need to. I think they can stay the course, but they have to understand Europe's going to retaliate if we don't give. And understand that also you shouldn't realize your losses because it's not 2007.
Well, right, but then if Europe's going to retaliate, a pattern of escalation is not helpful.
No,
at all.
I'm
it
not
doesn't point to
disagreeing.
negotiating. Now, Kevin Hassan said yesterday on that there are 50. We've been approached by 50 different countries to negotiate, Carl. I don't know.
We're on the lookout for readouts from all of those countries.
Because everybody in the market right now is trying to focus on the fact that are we going to get something said that indicates a willingness to truly negotiate. But I think Vietnam is a perfect example.
It is.
It's got 9.6% tariffs overall, 5.5% when fully adjusted for everything else. We put a 46% tariff on the country.
Because it's a backdoor for China. And no, that's what they're telling me. And I come back and say, did you hear Gary Friedman? He did exactly what you said to do in 2016.
And it's not about
and they said,
trade
no
deficit.
one told Gary Friedman to
Not
move
as
to
though the
Vietnam.
Vietnamese are ever going to buy 150 to $200 billion worth of art.
Just like the islands with penguins are not gonna. That's the same logic.
Lesotho with the diamonds. I mean, they have no money in that country, and we tax them big. But this is all about the same thing, which is that we don't care as it currently configured. We just want to shut down the countries that are, whether they can make it or not, we just want to shut
Even
them.
if you believe the policy is correct, the idea of taking this kind of short-term pain for gain that will be seen over years to come, with given the state of our political system and everything else, is just, it's unrealistic to expect that can work.
Right, but let's say you're someone at home and you're watching. Do you want to sell right here? Knowing that a lot of stocks are down 50% already? Do you want to recognize that perhaps there can be a blink and a shift? Elon Musk comes out and says, look, this is ridiculous.
You just said your bear case would be 14 times.
Absolutely.
Well, let me tell you something, you idiots. Good morning. I'm not talking about you, I'm talking about them. If they were smart enough, they would have said this market was way overbought, and that you should be protecting your money. But they would not. They just kept pumping it and 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 pumping it. Now they're whining and crying. I know when I see things that are way overbought. They have no idea. They've never seen, it's like they'd never seen a bubble before. And we had all kinds of bubbles. We had the .com bubble. We had the cannabis bubble. We had the AI bubble. The .com bubble, I mean, stocks ran up thousands and thousands of percentage points in a short period of time. And, you know, look at them. They all knifed and became hardly worthless. Only a few survived. And you'll see another bubble. They'll pump another sector. And all of a sudden, you know, you go, wow, man, these are up 2,000 or 3,000%. What's the deal here? In a year. How did this stock run up 250% in 6 months? PLTR is a great example right now. This guy one time said, and we're at a good spot, 50% pullback. He said, my company ain't worth buying. He said that. There's much better companies out there to buy. And this stock tanked to $5 after he said that. But people still wanted to buy it because they thought it would go up. I'm going, you people are idiots. And then now, look where it ran. And they were pumping this thing, what? 2 or 3 years here. $5.84 all the way up to $125. That's a 2.5 thousand increase. And they were wanting it to go to 140. And I'm going, are you people nuts? $20 to 125 in a year in a couple of months. Within 2 years, it's up over 2,500% from 584. Now we're at the 50% pullback. I mean, this is a strong buy. I had 67. Where are we at here? I mean, this thing's ready. I don't know if I'm going to buy it. Bubbles happen all the time. Yes, they do. Bubbles happen all the time. We have 6 more minutes left, and I am going to go into the kitchen, and I'm going to warm up my water. And I think I took care of the ants. I had a big war with them yesterday. And I got me some spray and some other shit and laid it out and said, come on, boys. Let's see who's the tough one now. And I just went in there and I didn't see no ant. So any stocks that you really like, that you've done well with, I'd take good gander at them right about now and just watch, see what happens this week. These people on CNBC, they have no clue what's going on. They're warmongers. But I've argued with them for the last 2 or 3 years under the Biden regime because they became very, well, I don't know, political and biased. Their true colors came out, and I don't want to listen. And that's why I like Schwab so much. They're not. I mean, they're acting a little bit political now, but they try to keep politics out of it. They're not, because there's a lot of progressive liberals now that are multimillionaires and billionaires, just like how they weaponize the federal government. Books are coming out now talking about it. How it was weaponized. Put on my slippers. I got my fancy socks on. I just hit my ingrown toenail. That didn't feel good. So I'm gonna get my water warm. I got 4 minutes. I think I can get this done in 4 minutes. Then I'm gonna have one heck of it. I feel really, really bullish. Like we're at a real good spot, but we'll just have to wait it out here and see. I got my 3rd day dump, where we dipped more than 1,000. I scalped SPX yesterday for almost $1,000 this morning. I mean, not SPX, but ES. I can't wait to get my glasses back. It's really been miserable wearing these things. /ES is back to 540 right now, so I'm going to be watching it right at open. I had a high of 1,700 this morning. I got out around 16. There'll probably be a downward reaction at first. If you listen to CNBC, CAT's down what? Let's look at CAT. They were talking about CAT this morning. And we got bank earnings coming up. Oh yeah, see, CAT's they know it. They know why they're promoting it. We're at the 200 EMA. Still overbought. About 120 bucks. It's up 100%. Well, not, yeah. Still way overbought. But we bounced off the 200 here back during the Biden crash. Well, I think it's going to happen. We're going to hit this 200, bounce up, then pull back, and maybe come back and hit the 200 SMA like we did here in all the stocks. It could repeat itself. And Boeing. There we go. We're off to the races. Let's get her done. One day out in the sun. Let's take a chance and have a little dance. We got a head and shoulders, yum, yum. We could drop some more, you little dirty whore. Let's find out, yeah. Watch the VIX. Yeah, see cat. Oh man, let's look at my watch list. Did anybody watch my video or tune in yesterday to my stream? Tesla had a little bounce this morning. Google had a little bounce this morning. AVGO's at 142. This one's still way overbought. Nike. Woo! God. Apple, boy, if it gets to 150, I'm loading the boat on it. We're at a double bottom on Apple, high or low. Hands off my booty, please. Goodbye. Dow Jones down 1,200, so this is the third day. Give it a little bit more time, and I'll walk the line. I'm going to see the SPX on the yearly here. Weekly. Let's clear this out. So we got a double bottom on the weekly at 215. Oh, that's Tesla. Oh yeah, I mean, this is really looking nice. SPY is. I'm gonna look at the option here. This here's the S/ES. Meta, watch Meta too. Today's the 7th. Let's see what the 8th. 8th is kind of high. God. These things are expensive. What are they trying to do to us? They're too expensive. I'm going to go make my coffee and come back in a second. I ain't paying this kind of price. That's just nuts. I don't believe it. Jesus. Options are just way too freaking expensive. Am I looking at $20 for a damn option? I might have to just buy shares. It's nuts. I can't believe that. Yeah, this makes, I'm gonna wait for him to pull back. I'd rather buy a put. Put's cheaper. Huh. Well, that kind of sucks. I want to make some money today. God. $70 for a frickin' option. This is nuts. You got to go way down here for you can even look at a price you can afford. Wow. 5150s. Look how far down they are out of the money. Nothing makes sense about this, unless somebody else can tell me. It's crazy. This is nuts. Might as well just take the day off. I'm not going to spend $4,000 for an option. I can't get any sense out of this. What? I mean, I gotta go way out of the money. $5,100. I mean, look at my time. I don't think I've ever seen anything like this. I'd start trading penny stocks again. I'm just so far out of the money, I'm afraid to buy them. Right there's at $50. I'm gonna go make my coffee and come back and rethink your. I don't know. I think this is disgusting. Boy, she's on early.
Take a look at some of the movers on the stories here. Diane King Hall is with us, host of Morning Movers, looking at the airlines, one area that is getting some downgrades, and of course there's pressure across the board.
Yeah, and the airlines have been hit hard recently amid worries about a weakening consumer, and so now you have UBS downgrading their views on both United Airlines and Delta Airlines. We'll start with United. They've gone neutral on United Airlines. Their new price target is 59. That's all the way down from 107. A far cry from obviously what their views were before and where United was trading. You look at that chart, United, the top performer, among the top performers last year in the S&P 500. Definitely a different story this year.
Maybe these airlines will start being better priced.
Of analysts who are concerned about weakening economic backdrop and increased recession risk. These are some of the key reasons for the downgrade. They expect the tariff to have an impact
and to pressure international travel, to add overall strain to just the outlook for United Airlines when it comes to their earnings. They're worried about both domestic and corporate travel. They're projecting that domestic leisure travel will face headwinds. We've already heard even the airliners express concerns about that. They're also expecting corporate travel to soften. They're expecting to see deterioration in total revenue per available seat mile and just overall revenue in the second quarter and the second half of this year. They're also anticipating weakness in both premium and international travel. For United, that's a key driver for the company, a key earnings driver. So in other words, they just see limited upside from here for United Airlines, excuse me. Similar story for Delta Airlines. Going neutral on Delta Airlines, Nicole. They're dropping their price target to $42 a share, down from 77. That does still suggest some upside from here. But again, you're seeing pressure on both of these stocks this morning. Their downgrade rationale is similar story here. Weakening economic outlook, increasing risk of recession, and just this rise in tariffs and what that will mean for the airlines.
Yeah, and really so much of it is about sentiment, how people are feeling. Will they have a job? Are they facing inflationary pressures? And as you noted, these airlines have spoken and said they are concerned about domestic travel. We don't necessarily have the bounce back in the business travel. There was a lot of that. And I will add, Diane, that, for example, the cruise lines today,
Option prices are coming down some here.
After hitting these incredible highs. So the question is the sentiment of the consumer and when that gets broken.
And also, I mean,
SPX.
cautioned about this. They've lowered their guidance in March.
I'm gonna give this a shot. Now, this is
They
risky.
reduced their first quarter revenue growth projections. They lowered that to between 3 and 4%. That's all the way down from earlier. The projection was between 7 and 9%. So they were already worried and cautious about the consumer because we'd already seen some flagging. We saw some of that in the sentiment data. So by the numbers, you can see why they had to reduce that. And now we're seeing analysts, especially in this broader market environment, reacting to tariffs, becoming less constructive on the airlines. Because if you're, if the pocketbook of the consumer is weakening, an airline ticket is not easy, especially when it comes to
strike
leisure travel.
We're
at
going to
$5.
get a lot of news this week.
Get my order ready here. $5. I'm in SPX 5100. We're at 640 now. Scalp these suckers fast. $6.70, $7. Take some profit off the table. Oh, damn, it ain't April. That's supposed to be an A, not an S. Come on, you. $8.40. Yippers. I'm out. Thank you very much. I got one left here. Old MacDonald had a farm. Jimmy's getting rich. They are now at 9:10. Hope I don't fall in a ditch. Meow, meow, meow. I'm out at $9. Meow, meow, meow. $9.50, yeah. I don't know how he does it, but he did it. That's all that matters. Jimmy did it. He's relentless. I'm not sure how he does it, but he did it. He did it. You don't mess around with me, do you understand? They're now at 10:30. Meow, meow, meow. I want everybody to keep their politics in the bureaucrats' room, and if it's negative. repeat, but keep all politics in the bureaucrat room if negative. Tesla hit the 200. AMD bounced off triple bottom. NVIDIA called down here off the 83 in the video. We have SMCI at resistance now. The VIX is pulled back to the 63, so we'll see if it wants to hold here or bounce back up. This is way elevated. What'd you get, Yoko? Okay, I'm going to just kind of give it a few seconds here before I get back in them. Damn, gummit. These things went to 1400, 1650. I really do believe today's the day to make some good money. Okay, we're going to find out right now. I don't want to short nothing because I think these idiots on Wall Street have it totally wrong. They're $17.90. Even Mark Cuban came out and started crying and whining. They want you to spend your tax money, not theirs. We've got a double top on Dow coming up. We kind of broke it pre-market. Sasquatch has a positive rating on Dow right now. Bernstein maintains outperform. Evercore maintains outperform. We got Morgan Stanley says Dow's overweight. So all these downgrades and upgrades are coming in right now. What was that? Damn, SPY just broke the double top. Jeez, these things are at $2,000. Oh my gosh, I just left $2,000 on the table. $2,300 on the table. My. Oh, I would have held down, babies. Damn it, damn. I was really upset this morning to see them options up so high, and then when they dipped, and I was so far out of the money. Now these things ain't that far out of the money. They're still out of the money, but not as far as they were. The 5150s I was looking at this morning, they're now at 1420. And I jumped in the 5100s. I did a pretty good video this weekend, I think. They're pumping airlines. There's Lulu. Lulu's flagging out. I gotta check my phone. I gotta take my blood pressure. I didn't have breakfast but a couple bananas today. I slept like a baby last night, even though I had a swing. And I don't swing very much. But I think I'm going to start really throwing the money in here. But we could get another pullback after we have this initial first breakout, and then we come back and retest and maybe have a newer low. Not today, but I mean, this ICCT has been one hot cookie. Another new high. Oh yeah, GME. Let's see what it's doing. I want to see how this pump's doing. Right to where I said it would go in the video last night. $24.33. Well, Apple big time bounce here. We got a snake on the VIX. Breakout, pullback. Just kind of be careful. Apple had the double bottom. We're at the 200 right now. NVIDIA new high. NVIDIA is cheap. So we're maintaining the double top. We came back and pulled back. So it's either, I'd like to see it pull back again, but we're at the squeeze point right here. And these are at the 5100 strike. Ugh, God, I wish I stayed in them. I hate to go down lower and buy these now. I'll just wait. Actually, just a big old pull back and jump right back in them. But we're retesting this the second time. It should bounce up. But I think it's best for me to wait. Get ready, we're flagging out here. Man, look at that. $500 already. These things are going to fly. There's $1,000 off that candle. 2,000. No, not 1,500. Right there. Yeehaw! Magnificent. Get that grade score out, buddy. You said you were going to give me A's today. Get it out there. Woo! $3,000 on that. My 5100s are at 67.80. Fuck. I nailed it. Shit. Unbelievable. I said I was excited today, and I meant it. Unbelievable. And you got CNBC saying, what are we going to do? Unbelievable, the 104 Woo! Short these suckers here. What'd you think about that, Chris? What'd you think about that, Rob? Were you in them? Richard, were you in them? You made back them losses if you were. Richard! My best friend, no offense, but my best friend was named Richard. When I lived in Hawaii, there's another Richard that worked with me, and I hired him on. He was white. And everybody thought it wasn't right for me to hire a white guy. And I said, so he was sitting all the way across on the other side, and I yelled, Richard! And everybody just kind of started laughing, and after that they became friends with him. Being a haole in Hawaii and being in charge is not a fun job. I ain't gonna take orders from a white honky. The haole. I said, you better, or I'll fire your ass. Fuck, $142 a piece. Imagine I bought these first at $5. Magnificent, where's my A+? You said you were going to give them to me. Paging Magnificent. Unbelievable, that's what you are. From here on out, I am the master trader. You'll do what I say and when I say it. That's what you are. $120. I'm gonna be a millionaire. That's one of the worst things I've seen in my 21 years of trading. To be so far out of the money and then to be so high in the money. At 51.50s, $3 to frick, almost $7,000. Get ready, folks. We dropped to the 200. Okay, get ready. Here we are. And I'm going to be looking at, well, shit, they're so damn high now. The 5,300. Let's get that one out of here. So that. Okay. Prepare ye in the name of the Lord. It'd be nice if it hit this right here. But we're going to see if we can bounce off the 63. I'm out of the puts. There we go, right here. 5300s. At $8.20. Calls. This is off the 63. Get one more. I said we might go down to that top of that candle right there. $7.50. I gotta use the restroom too, dadgummit. I'll take my phone with me. I got 2 contracts. Read what Art just wrote. White House just said they aren't confirming that's true. Okay. Well, if that's the case, then I'm going to sell these. I'm out at 1170. That's what you are. Come on, you idiot. Now I can go to the restroom and come right back. And get back in it. This is going to be a fun day for me. Already done about 3 weeks trading here. 3 weeks worth of work in less than an hour and a half. Hour. I'll be right back.
Paris complex globally, which is steel, iron ore, and scrap. So it's been spicy and interesting. Probably in our view, a lot to do about nothing to some degree, Nicole.
Well, go ahead and explain what you think could be happening here in the world of metals, steel in particular.
Well, in the United States, we don't make enough steel to support our consumption here. We've been steel short since probably the middle of the 1980s or early 1990s. We've been an import-dependent country for a long time, and there are steel mills set up around the world, and certainly mercantilist countries like China that move steel through these other countries and into the United States, and that, at the end of the day, hurts the domestic manufacturers here And if we don't make the things, I was listening to Alan, the prior gentleman who was on the show, and he seems to think that things like steel and building things in this country are low-tech industries, and I would argue that they're extremely high-tech industries. If you look at a modern steel mill in this country, we have the most modern, carbon efficient, labor efficient steel mills in the world in this country, and you know it takes something like 0.3 man hours per ton to make a ton of steel now in the United States. Then go back 30 years, it was 10 man hours per ton. So we're efficient, we're good at it, and it's a very high tech space. So the idea that we don't need to manufacture things here isn't true. If we don't make steel in this country, then we can't make the things or build construction or do infrastructure projects, make appliances, make automobiles or anything else. And so our view on the tariffs is they're constructive for manufacturing and bringing manufacturing to the United States. And net, if you look at the price of steel today, it's just about near the 5-year historical average after the tariffs.
So a recession is possible or no? And how does that fit into the steel prices and the strength of steel?
Well, a recession would always be possible, Nicole. We don't predict here. We've actually built a business on not predicting things. But what we do know is that the infrastructure in this country, the household formation in this country is way behind. There's an enormous amount of demand for housing and construction. Our business is particularly oriented toward construction, and save self-inflicted shocks in the markets. There's a lot of pent-up demand in this country, and that should help the steel business.
And when you look at the different mills across the country, the capacity versus abroad, how do you expect that to change possibly?
Well, the mills in the United States have been adding capacity over the last several years. They've in the history of the United States, we've been fairly trade protectionists on steel for the last 140 years. And the mills have had a good run in this country in the last 7 to 10 years, and they've taken that money and they've reinvested in infrastructure here. And we're adding capacity, especially for flat-rolled steel, rebar, construction products, because our construction economy is strong, and the mills are adding capacity to support the domestic manufacturers that make construction products good.
Okay, we're back down here again.
The more, if you will, the better franchise they have protected by,
We're back down here again at support. And I think about getting in these here again. And it'll be where's the 53s? 5300s at $5. If I can get them here at 530 for right now. We got one at 530, and if it dips again. Now that's probably a good place to get out of it. $8.50. Yeah, I'm gonna sell them here. 940. Right now at the 200. Yabba dabba doo! Old MacDonald had a farm, me-I-me-I-O. Yeah. Oh, yeah. Oh, Jim Howard had a farm, me-I-me-I-O. Fast scalps, man. That's the way I'm playing it now. And really, I think I'm going to go eat. That hit the 200. So anybody doesn't know how my strategy, that 200 right now, if like we hit it once, we came back and hit the 50 SMA, jumped in the trade. Then I got out here at the 200 EMA. Waited just a little bit longer, and once it broke it, I got out of it. Now we're coming back down, and we have a 1-2 Phoebus. And this previous high is support level, and that'd be a double bottom. So if I wanted to trade it again, I'd jump back in right now. But I'm going to let this news settle, because I think it's probably fake, the way people are carrying on. That was incredible. I don't think I've ever seen an option run so fast and so high in such a short period of time. And to nail that bottom, I wish I'd have held them two. Them two options for 1,000 would have netted me over $24,000. No, that's serious money. I gotta check my phone, see if I have any business texts. I need to check my blood pressure because I'm not really. I just want my glasses so I can see halfway decent. Might let myself relax a little bit before I take this blood pressure, but we'll see what it's at. And we'll see if I'm extended it. Yesterday I went to Bible class for the first time in over probably 17 years. It was interesting. Okay. We're at the previous opening high right here. This might be a spot to jump in the trade. So the 5300s are now at $3.80. It's dead. I got enough money where I can sacrifice a risk trade here. 3.80 calls. Yeah, I'm overextended my blood pressure. I'll do it here in a little bit after I eat. See what we done here? This was the opening high. We came back and we respected that opening high. We had that big breakout. So this is kind of an iffy trade right now. If we can still respect that opening high, we might be able to get it back up here to this expansion pattern. We have an expansion pattern. Well, no, we don't. We kind of do. Not much. Back to the 200. So if this thing breaks out, and if you're new to trading and you want to do little by little, get out now at 460. I'm risking this trade. This is all profit. As long as I maintain that previous high, that opening high. In fact, I had 2 confirmations to take that trade. I'll say it again here. We had the opening, which is 1, and then we had the double bottom here, triple bottom. is my second confirmation. And that's what you call pivot point. That's what I call a yin yang. Now I'm up $200 right here. I could sell it at 480. That's what you are. Unbelievable. There's 510. Now, if you are new to trading, I'd get out of it. $580. Thank you very much. 560 is my profit. Jimmy is out. I make it look so easy. Don't even pout. Yeah. Calls are flooding in. Ooh, yeah. It's all fake news. I'm waiting for my A+ at Magnificent. I still haven't seen it yet. If I didn't, I'm missing it. Promises made, promises kept. Fake news. Oh my gosh, there it did. It hit it. Ladies and gentlemen, it just went to 870. How dare you? Now the real news have come out. Jimmy called the megaphone, and there it is. There it is. So it's time for a celebration. Time for liberation. Time for aggravation. Time for starvation. And on this day, April 7th of 2025, a man come walking out of the woods. His name was Washboardjim. He stood tall, about 7'5", weighed 450 pounds. When he walked, the ground would shake. And when he sung, the birds would sing. It was Washboardjim, the amazing caller of the stock market. Never forget this day. It'll be the day that you'll always remember. It was Washboardjim that gave the independence and democracy to America. Amen and hallelujah. Boom, 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 boom. Boom, 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 boom. Woo! It's so funny. Damn it. Look at him. I left another grand on the table. It wasn't meant to be. Oh, that's too much. It made me even laugh. That's too funny. George. Oh God, she looks hot today.
This is a, blink and you might miss it type of.
I don't miss
so,
you.
we still
Oh
have several
man,
hours
you're
left in the
beautiful
session, but
today.
It seems like, these names that have been beaten down pretty hard, especially in
I
big
love
tech,
you.
are attempting to turn around. We'll see if they can hold it.
And we did see the S&P 500 drop to bear market territory, has come up off those lows of the days.
He's got a shit-eating grin.
Thank you both, Kevin Hanks, Caroline Woods, and thank you, friends, for being with me.
It's Kevin Hickey.
The NASDAQ 100, Dow Jones Transportation Average, Russell, and S&P have hit into bear market territory.
Uh-oh.
At least coming up out of that. We'll continue to follow all the stories for you. We have you covered here on Schwab Network. I'm Nicole Petalides. Thanks for being with me. And we have Trading 360 next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced.
Well, I'm going to go make my hamburger.
Also, because your investor checking account is
I think that's what I'll have today.
you can manage your checking and investing in one convenient.
Anybody see the pizzas I made this weekend?
Accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Do. I gave you fair warning, didn't I, Magnificent? Promises kept. Promises made, promises kept.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had a
Ooh.
Schwab before there were branches in the area.
Good job, franchise.
He worked hard, and after he passed away,
Your girlfriend will be very happy for you.
and my advisor Jennifer, she was with me with the jury, helping with the estate distribution. The two
Take her out to dinner tonight
their college
and tell her that I love her.
Someday it'll be their turn.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Woo!
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
I'll be back.
Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today. Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Good morning. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, filling in for Nicole Petalides. We are live from the floor of the New York Stock Exchange. Why don't we start out with the roadmap for today? Coming up on our show, in our 360 Spotlight, we'll dive into all of the roller coaster action we've seen throughout the trading day. Today's disruptor is Coinbase after Barclays slashed its price target on shares. And in our 360 round, we'll dive into the auto sector, how tariffs could impact the group. All right, let's take a quick check on where we are with the market action. We started out under pressure across the board. We had some news hit the tape that seemed to signal that we might see a pause. Then we had news coming from the White House suggesting that that was not true. We've had quite the, I don't know if we want to call it a 360, but we are seeing mixed market action right now. The S&P 500 just above the flat line, better by a couple points there. NASDAQ 100 up triple digits, rallying 0.8% there. Dow right now under some pressure, down 0.5%. Russell just above the flat line. Small caps catching a teeny tiny bid right now. All right, let's take a look at some of the other asset classes we're watching. We're seeing the 10-year continue to fluctuate right now, just above 4%. The dollar right now, a little bit higher, above 103 right now. Gold a little lower. Gold had been higher earlier in the session, but now under some pressure, off by 0.5%. Crude oil remains under pressure, heading towards $61 a barrel, off by 1% right now. Meantime, Bitcoin below 80,000, down 6%. It's quite volatile action that we've been watching. For a look at some of today's top moving stocks in the market, I'm joined by Alex Coffey, senior equities contributor here on the Schwab Network, and also co-host of Next Gen. All right, we're watching Dollar Tree. Shares have been rallying, even despite all this round trip action that we've seen across the broad market. Dollar Tree has had a gain since earlier in the session. It's adding to that advance. So what's fueling this?
Yeah, first off, happy to be here.
I know,
Good to see you. It's good to be in New York. Pretty historic, obviously, market volatility. But what's been consistent today is Dollar Tree, as you mentioned. Really nice performer. It's up 10% in real time. Now, granted, the moves across the board are just bigger in volatile markets like now. But Citi upgraded Dollar Tree to buy from neutral. Their price target is hiked up to 103 from 76. So pretty substantial repricing. But then you can read why. Yeah. It's actually pretty interesting because it's not all that positive. But we'll still hear why. So this is sort of a call on just market action and how they're shifting. So they say with 50% of the company's products subject to significantly higher tariffs, the market reaction was extremely and unsurprisingly negative. Okay, we kind of figured that, right? It's super tight margins, discount store, also has sort of that artificial price ceiling. Yeah. But what they say is this might kind of provide cover for them to then raise to maybe $1.50 or $1.75. But what I will say, and this is actually a point that I think the Treasury Secretary Scott Bessent has made, which is these companies, you know, it's in their best interest to be charging prices that they can get. It's not as simple as, oh, hey, our input costs are more now, we're just going to pass all this on to the consumer. I mean, in theory, if you could get higher prices to some extent, and you're still not, you know, damaging demand, you would be passing those prices on already, regardless of the input cost. So it does remain to be seen ultimately if this thesis plays out. But the market does maybe look at this and say, hey, this stock got just bludgeoned. Perhaps this Citi upgrade does make a little bit of sense. It's gained strength with the market. It's up 10 1/3% now. So we're watching it closely.
Yeah, you've seen Dollar General gain ground today, 5 below as well. You know, it would be interesting to to see if they can really raise those prices, because in the past you see some pushback when they try to go too far beyond the dollar, because it's a dollar store basically.
Exactly. Now there are some other thoughts as well, which is, you know, they are a little bit more in the staple camp, particularly a Dollar General being kind of more of a rural servicing, you know, almost grocery alternative on a lower price, more value-centric consumer. So if we are moving into more of a recessionary economy, perhaps, again, I might want to make that call, these are perhaps more resilient names, so there could be a little bit of that as well. But look, I look at this as a bounce back. You got NASDAQ up 200, and you got a name that was trading a little bit higher beta last week, bouncing back as well.
All right, indeed, bouncing back. Love to see a little bit of green on the board after all the red that we've seen over the past few days. Thanks a ton, Alex, for a breakdown on Dollar Tree. All right, let's get some insight on what's shaping markets today. For that, I want to welcome in Justice Palmer, founder and CEO of Fortuna Investment. Justice, so good to see you this morning. We've had quite the move here today. We started out under intense pressure. We saw some recovery. Now it feels like investors are trying to feel their way around in the dark. How would you characterize what we're seeing in terms of the price action today, and even where we ended last week?
Hi, Diane. Good morning, and great to see you again. And I mean, what I will say is I think these characteristics are inherently present in a bottoming cycle of a market. I'm not necessarily calling the bottom, but I'll give you a couple of data points for the viewers to consider. And I'm talking about the highest quality of companies, right? I'm talking about the S&P 500. The S&P 500 are the greatest.
Did I hear him say bottom?
Strong cash flow type of companies.
What did Jimmy tell you?
That the world has. And so historically, the S&P is compounded at about 10% a year.
Did I hear him say bottom reaction?
We're in a situation where the S&P
acting like
is down,
a bottom?
let's say, 20% this year. So one of two things is going to happen inherently. One, we're either going to go into a situation where it's a 2007, 2008 global financial crisis. I don't see that necessarily happening. Or it's the end of the world, and whereby you should go buy guns and canned goods and something, you know, like that to protect your family. And I certainly don't think we're there. So the probability is that this is a pullback. It's impossible to pick the bottom, but these erratic flows and curves are usually indicative of a bottoming process. I've been a huge buyer of the S&P. I'm still holding capital back in case that there's another bad announcement coming out of the White House, or you know, that there's a revision of the targets and things like that. But I generally think it's a good time to start legging into the market for no other reason than historically these are great ones.
Now, I've talked about how to trade the bottom. We'll have a breakout, and then we'll have a fake out. Like it'll come back, maybe have a new lower low. Not today, but this is just how you test bottoms. And I showed it on the diagram when I did the video yesterday, and I talked about it, I think, this morning. Hits the 200 EMA, breaks out, comes back, and then hits the 200 SMA, and then we have the huge run.
% tariffs. When he came in, he actually came in, let's say, 3 orders of magnitude stronger
On the
than that.
daily.
So these weren't $300 billion tariffs. These were 40 to 80% tariffs. These are jaw-dropping numbers. And so he came in at a number of, well, let's say $800 billion to almost $1 trillion, which is what really jolted the market and what we've seen in the last 3-4 trading days. And so, I mean, I would argue that a lot, if not everything, is kind of priced into this at this current range in 4,900 of S&P. I think any level of good news coming out of the White House, which, by the way, we almost kind of saw this morning, and you saw the price movement where even some inference of good news really spiked the market up the right way. And again, the key is, the idea is you're never going to time the exact bottom of the market, but generally speaking, if you can get in and around those parameters, and if you have the holding power, you're going to look like a very, very smart investor over the coming years.
What's your message to retail investors who may be nervous about where we are? There's a lot of trepidation around tariffs and how this all plays out. And for some, this may be their first, time experiencing a bear market. For some, this may be their second time because they experienced COVID. What's your advice to them to navigate through this?
Well, I mean, first of all, there's no substitute for experience. I've been in the markets over 20 years being a professional money manager, so I was there for the 2008 crash. I was there for Obviously the COVID crash and among other things, and I've been there for the pullbacks. And so what I would say is, it's easier said than done, but I would hold your emotions back. Try as best to check your emotions in the door, behind you in the door, and I would try and operate on logic. And that's why I'm trying to highlight some of these things where, although it feels like it's the end of the world, although it feels like things are not going to get better, although it feels like there's going to be bad news. I mean, look at the other side of it, right? I mean, the president really has 15 months to really get this thing dialed in. Because if he loses any level of support, he's going to lose the House. The president certainly does not want a bad administration, right? So I actually also believe if it continues to veer on, he's going to declare some victories. He's going to pivot the bus. He's still going to keep some element of, let's say, tariffs in there. Maybe it's in that 10 to 25% range. But any one of those individual things is really, I think, going to change the trajectory and the forecast of this marketplace. The marketplace is oversold. It's not to say that it cannot come lower in the coming weeks. I think it's going to be a very choppy coming weeks. This is not the bottom today. I think it's going to be a bottoming process, whether it takes weeks or a couple months. But I do think we're in and around the back half of the year, we're going to see some really nice catalysts, i.e. being the tax cuts, maybe Powell actually cuts interest rates, some good economic activity. And the other thing is you've already started to see a slew of countries, I beg your pardon, come to the table, whether that's India, Japan, Israel. There's been a handful of movement on that front too. So there's a lot of really good stuff in the horizon. It's just we've got to get through the pain and then we get there.
And really quickly, if you can give me just a 30-second response on this, Justice. We've got earnings in front of us. JP Morgan Chase releases theirs at the end of this week. Banks have been under some pressure. They're recovering some ground today. What's your expectation for this quarterly earnings season?
Well, I think the earnings are going to be pretty good. They're going to be very healthy, actually, to be honest with you. But the key is not to really pay too much attention to this earnings season because it's actually backward looking. The key is going to be the Liberation Day, right? That's when the A-bomb, the atomic bomb dropped. And so it's the next quarter. And that's why there's been all these revisions down from JP Morgan, Goldman Sachs, all the big banks. They're not looking backwards. They're actually looking forwards. And these tariffs, these punitive tariffs have really changed the course there. So that's the key here.
All right, Justice Farmer, Fortuna Investments. Justice, thank you so much for your time today.
Great to see you, Dan.
Good to be with you. Plenty more to come on Trading 360. Next up, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals, and Mike Shore takes us through the trades. That'll be Lamb Weston, Ambarella, and Skechers. That's next on Trading 360 on Schwab Network.
Oh yeah, I'm coming back for you. Here we go. 200 SMA. Randy. The 5,300 at $3.20. There we go. I'm in $3.20.
Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ladies and gentlemen, I'm back into the SPY. This is the SPX. $3.20. I'll be there in a second. Leave me alone. I said I'd be there in a second. Leave me alone. I said I would be there in 1 moment. Ladies and gentlemen, I'm playing the pivot point here. I'm here, Jake Paul. I'm here. I'm here. I'm here. We're now at $4. Some can make a business decision. To the 63, yes. Be sure to put a tight stop on it, Randy. That's what you are. Let's make this perfectly clear. It could be that time of day, too. The perfect hamburger. God. We're now at 4:40. Rookies, make a business decision. Now, you people on YouTube, I want you to listen. Listen real big here, right here. I make the perfect burger. And if I decide, maybe one day I might have me a little side business where I make crackle burgers. The perfect burger. They're back to 320. You gotta be careful. Make sure you take that profit. Man. I really can't believe I waited 64 years to eat a burger like this. Francisca, you like a man that can eat? You like a man that can cook? That's the perfect burger. Chomp, chomp, chomp. I'll cook you. I'll put you on medium. Make you super hot. Okay, Jimmy's getting ready to buy some more. Seems a little risky here, but I'm going to do it anyway. $2.20. To get in and out of these trades that time of day. 2.20. Now let's see if we can have the breakout that I'm looking for. Ladies and gentlemen, it's time.
It's my money and I need it now!
It's my money and I need it now!
It's my money and I need it now! It's my money and I need it now!
It's your money. Use it when you need it.
Come on, baby. Bring it. Show them that you still want it. Here we go, baby. God, come on. Where's the price moving in? We need some price. This thing ain't moving up much. Might just get out of it. I'm threatening you. If you do not drop your 34% tariff, I will get out of this trade. You better do it. You better do it now. That's what you are. Tariff war is happening. Old MacDonald had a farm, me-I-o. I need you to break up to the 63, me-I-o. I've got 5 of these at $220. That's $1,100 invested in this trade. Now, Jimmy could sell here at $260. This is something that I want beginners to learn. Now, you know, I catch myself a lot by getting out of the trades too early. But sometimes when I get out early, everybody else gets stuck. You know what? You know where I'm coming from? So as I approach the 63 EMA, I make a business decision. And you got to remember the first part of the day, Jimmy's at lunch with the fat cats. I'm just taking a little bitty fun trade right here. Now I'm at 275, 280. Now's the time to think about a decision to be made. $3. Uh-huh. What do? You answer the door. Hello, this is Brandon. Jim, now that I've left office, I've been following your YouTube channel, and I have to quite say that I should have put you as a cabinet member on my chart pattern squad. Because as you approached the 63 EMA, I noticed that you sold it at $2.95, which to me is remarkable. I've never seen such beautiful maneuvers in my whole entire life. I thought Hunter was badass, when I stuck him over there in Ukraine and he made 60 grand a month. But shit, I could have put you over there in China and you could have made 100 grand a month by teaching them Chinese how to chart. So that I'll make you the secretary of chart patterns and I'll pay you a salary of $5 million a year. Or 5 billion, excuse me. 5 billion. Not million, but billion. Jimmy sold it at $2.95. He got out at the 63 EMA. Jim, I was scared it was dipped down below $2 and I didn't know if we were going to make it or not. I was really, really nervous, Jimmy. Nah, I don't need to be nervous. Now we are at 340, frick. I got out of the trade too early. Hello, this is Washboardjim with a Sneaky Snake trading strategy. You are now on a recorded phone line. What would you like to say? Is this China? We're going to slap a 50% tariff on your ass if you don't drop the 34% tariff. Do you understand? Man, wasn't that delicious? To top this off, I'm going to go make me another coffee. I mean, that was really good hamburgers. I've never, ever made such a good burger in my whole entire life, and I've ate thousands of them. I got to really think about opening up a little restaurant, a little bitty food cart. Call it the Kraftful Burger Station. And I'll sell them for like $8. You'll get a half a cup of cottage cheese, 3 olives, and a burger for $8. God darn it, look at it go. We're now $4.10. God. I just left $445, $50 on the table. 500 something, I mean. They're now at 430. Richard? They're now at 480, Richard. I got it back. Oh, congratulations. Are we still friends? Are we still friends? For now? I mean forever. Okay. You are from China, aren't you, Richard? Are you Asian by any chance? Do we have any Asians in here? Go ahead and admit it. We don't care. We like Asian people. Punk, are you Asian? Hully. Okay. Now, I'm really having a good time today, especially when I'm up so big. So I'm going to go into the kitchen and spray wash my dish off so it won't catch any ants. And then I'm going to make me a cup of coffee and I'm going to come back and do it again.
Welcome back to Trading 360. I'm Diane King Hall, live from the New York
Diane.
Exchange. We're looking at developing stories this morning. I want to bring in Caroline Woods, a senior markets correspondent. All right, we're taking a look at Tesla. Tesla shares under some pressure after the biggest bull on Wall Street has, I won't call it a change of heart, but certainly a different perspective now. So tell us the details from Dan Ives of Wedbush.
I think that he's been having this perspective for quite some time, really since Elon Musk has been part of the Trump administration, since the tariff uncertainty has really hit. It's that he's finally acting on it. It was first just cautious commentary around Musk, really like the moment of truth, and now he's actually slashing his price target on Tesla shares. And as you said, he was formerly Tesla's biggest bull. Still bullish, still has a buy rating on shares, but he cut his price target to $315 a share, all the way down from $550, which was the highest on the street. So still sees upside from current levels. Tesla shares are trading around $230, so $315 implies about 35% upside from current levels, but Tesla is more than 50% away from the all-time highs hit late last year. So Ives does not see Tesla shares regaining all of those losses, at least in the next 12 months, based on what this price target implies. So he says that the lowered price target reflects softer demand estimates following Q1 delivery numbers, which he called a disaster. He was expecting less than, consensus, but still was proven wrong there. Ives says the economic tariff Armageddon unleashed by the Trump administration is a double whammy for Tesla. Yes, Tesla is less exposed than other U.S. automakers to those tariffs versus like a Ford or GM or Stellantis. But he says Tesla still derives a considerable amount of its parts and batteries from sources outside of the U.S., including China. The bigger worry, though, is he says China is the linchpin to the future success of Tesla. And tariff backlash and Musk's association with the administration will be hard to understate, he says, and this will further drive consumers, Chinese consumers, to buy domestic, such as BYD, NIO, XPeng, and others. He does say that, Tesla has essentially become a political symbol globally, and that is a very bad thing. And he says, we now estimate Tesla has lost or destroyed at least 10% of future customer base globally based on self-created brand issues, and this could be a conservative estimate. He says in Europe, that could be more like 20%, all self-inflicted by Musk. So still bullish on the longer-term Tesla story, still rates it as a buy. Keep in mind, Tesla shares are down, 43% year to date. But definitely scaling back that bullishness. Tesla was the worst performer in the Mag 7. Now Apple has surpassed it, but shares are still down about 4%.
It's a fight to, I don't want to call it the bottom here, but that's what it
Well,
seems
actually,
like
the rest of the Mag 7 NVIDIA, Meta, Amazon, Alphabet all higher right now. So
which is good compared to how they started the session. All right, thanks a ton, Caroline.
Sure.
That's Caroline Woods. Time now for the disruptors. We've got Kevin Green, senior markets correspondent, here with today's company. Coinbase in focus after Barclays cutting its price target. Give us the details here, KG.
Yeah, we're seeing Barclays lower their price target on Coinbase here, down from $328, and the new price target now is $169. They do maintain an equal weighting on these shares, though, but they do kind of highlight not only what you're seeing as far as volatility in equity markets, but we are seeing that volatility when it comes to crypto markets. And even though they might see an increase when it comes to trading volume, the decrease in prices for Bitcoin and some of these other cryptocurrencies could actually be something that really dampens demand over the long term when it comes to the brokerage side of the business here. They also call out volatility just in general could actually slow down M&A activity, which they could be a big partner in that, especially when we're looking at the crypto space and some of the speculation that comes with cryptocurrencies, and then also any type of IPOs in the market, which once again a downside impact when it comes to Coinbase. And then they have just the macro view here when you're looking at the Fed funds rate, unless we see that lower and the futures curve really trying to reset itself. They just believe that there are going to be a lot of headwinds, not only just for this company, but for brokerage houses just in general, not only for investment banks, but those that just transact or make a portion of their money just on trading volumes and bringing new assets to the business.
Okay, so now, KG, how would you proceed with an example trade for Coinbase in light of this?
Yeah, well, we are in a high volatility environment here, and you could actually capture maybe some of that high volatility by looking at a put, selling a put here. So looking at more of a longer term bullish position, I'm looking at selling the July 18th $90 put for $4.80. Max loss on the trade is going to be $8,520. That's if Coinbase goes to zero. Max gain is going to be $480. That's if Coinbase stays above $90 at the time of expiration, which is July 18th, with a break-even point of $85.20. If you kind of look at a longer-term chart, around that $80 to $85 level is actually a pretty decent consolidation area for Coinbase. So if you're looking for establishing a longer-term position, selling a put could give you an opportunity.
He's back.
To make some income in the event that
Randy's
the
probably
stock does
working.
not go below $90, and then you can look at repositioning the trade after expiration.
All right, that's an example trade for Coinbase right now. Shares down 2.8%. Thanks a ton. That's Kevin Green, senior markets correspondent. Appreciate you, KG. Coming up next, time for our 360 round. We're looking at tariffs and its impact on the auto sector. Trading 360. We'll be right back.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
Jenny Horn.
1 p.m. Eastern, only on the Schwab Network.
I'm Jenny Horny. Well, I'm Jenny Horny. May I help you?
Welcome back to Trading 360. Time for the 360 round. We're taking a look at the auto sector and the impact tariffs will have on that group. We're expected to see big impact. For that, I want to bring in our panel. We've got Rebecca Lindland, Managing Director for Allison Worldwide, and Anthony Sassine, Senior Investment Strategies, Crane Shares. Thank you both for joining us. Rebecca, I'll start with you. Give me your assessment of the auto tariffs and your expectation for the impact.
God.
Who stands to be hurt the worst? Who stands to benefit from your view, Rebecca?
Sure, thank you so much for having me on. So we certainly see Ford in a very good position. They have about 80% of their vehicles sourced in the U.S.
Ford?
Followed closely by Tesla. But really all manufacturers are facing some kind of vulnerability because so many of the parts go back and forth between borders, and also many of them are imported, particularly when we think about engines, transmissions, powertrain, even your infotainment system. Every manufacturer is vulnerable to the parts part in particular.
That makes sense, Rebecca. Anthony, I'm curious to hear your thoughts, especially because even Elon Musk said, look, they have some exposure as well. So Rebecca makes a great point about the parts component. I mean, we're going to see major tariffs on this sector. We're already seeing some car makers shift their plans. Jaguar Land Rover announcing a pause all shipments to the U.S. Your thoughts on the impact to the sector?
Yeah, we're in no man's land now. I mean, this is going to shake up the U.S. auto industry in a big way. Tesla have a very small impact here, especially from reciprocal tariffs from China. I mean, Chinese EVs probably are most disadvantaged with these policies. They don't have any presence in the U.S., but still they face the highest tariffs, followed by Japanese and European cars, the European car makers. The beneficiaries here, I agree, it's Ford, mostly because of its...
Shut up. I'm gonna go to my video. And I'm gonna look at Google and see what I said about Google yesterday. Oh, that ain't the one. I'm gonna go to... That is not the one. That's the one.
Right there.
Microsoft.
And start adding
NVIDIA.
Two trades.
Apple.
But
Google.
Right to that 200 EMA.
Oh.
And we bounced right off that 200 EMA.
Huh?
So if we can maintain 136.92, I think we can run this up and make a lot of money tomorrow. Jot these down on paper.
Do it. Do it now.
And we'll see if I'm right or not. That they're stuck in, or if they're right now here on the weekly. You see where the 200 SMA is, EMA is right here. I'm going to put a price line right there on that EMA right now. And then I'm going to take this to the 1 minute. I want to show you something. Bam. Right to that 200 EMA. And we bounced right off that 200 EMA. So if we can maintain 136.92, I think we can run this up and make a lot of money tomorrow.
Oh, yeah?
Jot these down on paper. And we'll see if I'm right or not. But you can see how precise that was. 136.92, I was 8 cents off.
Whoa. So let's have a little look at Google here. What? What? Woke up this morning, 136.92. Oh my God, look how many shit bounce. Look at that bounce. Look at that bounce. Unbelievable. That's what I am. Apple. Go Apple. Apple.
So let's look at Meta. We'll go back to the weekly.
Let's look at Meta. META. Oh. What? What happened? 478.98. Let's see what that resembles here.
And that was Google. So right in 137. And that's what you want to hold tomorrow if we dip on down. So here's Meta. Now, I've got the Fibonacci set on this right here, and I've got a 50% pullback on the 3-year run. So I'm going to put a price line right there, and then I'm going to put one right here on this here double bottom.
Write this down on paper.
Right there. And we pulled back Friday and hit that 38% pullback, which also means that's a support. And we'll make that resistance. So I'm going to take off the Fibonacci. And we're going to go to the 1 minute. So that 38% is right there. And we pulled back and we hit.
Uh-oh, I hear the horn.
467.95. So let's go back to the weekly or the daily now and see what the daily tells us. So right now we're at a solid support. Right around 493, 493.75. And I called 500 on this trade. And right now we're at 478. So we're right about in here. And that's in that gap. We're going to make that a red line. And go back to the daily 1 minute. So we're at a pretty solid support right now. We're at the third support on this knife, and we're now at that pivot point, right at that gap. So that's going to be your hard resistance tomorrow. And then if we can dip back down to a double bottom and hold that, you should be able to run this back up about $11 and try to hit that resistance, or we'll come up here and double top. And that's Meta. So that one, I'm going to watch it too. I'm going to watch it good tomorrow also.
So that's Meta.
Oh, we held the gap, and I said $11. Oh my God. $60 bounce.
What do you think about that, Mike? My voice is very distant. Was it because I was on a recording? How do I sound now, honey? It sounds fine to me. Sounds beautiful to Richard. Have you had your hearing test there lately, Magnificent, by any chance? Francisca, do I have a wonderful voice? Does it sound manly? Yes, very, very manly. Extremely manly. Man. Now you're making me blush.
Schwab Network.
Magnificent, I am blushing. Okay, ladies and gentlemen, prepare yourself in the name of the Lord. Should he continue with the 53s? No, they got cheaper, so we're going to move up the chain on the SPX. And I'm eyeing the 5220s. The 5220s are now in play. Oh, this is a SPY. Let's go to the SPX. Get them off there. They're still way out of the money. God. Those are way out of the money too. This might turn around and bite me, so I'm going to raise these up to the 5200s. Magnificent. Can you hear me now? Paging. Magnificent. Can you hear me now? So today's infrastructure commercial will be, can you hear me now? A classic commercial.
Want to take your minutes further?
Good.
Well, now you can.
Good.
Introducing America's Choice, the plan where all of your minutes are national minutes. Sign up on a plan starting at $35 monthly access and get an extra 3,000 national night and weekend minutes per month for life on the America's Choice Network.
Good.
And now save $50 to $100 on select Motorola phones. So make the smart choice and sign up for America's Choice.
Can you hear me now?
Good.
Verizon Wireless. We never stop working for you.
Can you hear me now? Can you imagine a phone bill at $35? Jake Paul, can you hear me now? I'm here. I'm here. Come on, Jake Paul, I'm here. These 5200 strikes are now at 580, and I'm watching them very closely right here. Can you hear me now? Let's get in them. Now, this is going to be a risky trade. So Washboardjim is now taking the 5200 strike at $5.80. SPX, risky. This is called the Lotto. How did I get way over there? Can you hear me now? I sound like a whippoorwill. It's April the 7th. Ooh. No. Strike at 5200. No. I'm in at 580. And I grabbed another one real soon. Okay. 520. If this doesn't work, I'm going to stop out. Oh God, that's loud. I don't know if I'm doing the right thing here. Oh, no. Well, looks to me like my last trade might be worthless. Oops. Whoops. Nancy, I need a volume right now. Hike. It was 420. Okay. Come on. Make a business decision. Well, it doesn't look too good. $3.80. Let's have a nice little bounce here, please. The average is 465. Now I'm even. I could get out of it now and be out of it, be even. Let's break the 9. Okay. Mike, are you here? No. Where is Michelle? Mikey, not Michelle. I should probably not compare you to Mikey. So I take it back. Michelle kicked my ass. Isn't that right, Michelle? Where is that Mike when you need him? We're at $4.80. Could make a business decision here and sell it and get out of the trade, but I'm not going to do it. Oh, he's here. $5.20. Now we're squeezing between the 9 and the 21. Oh, I should have sold it. Where's that Mike when you need him? You know, I was going to name you my... I was going to say something nice to you today, but I take it back.
Pushing your luck, little man. I cannot accept that course of action.
That's what I thought. We need a breakout, please. I have 4 contracts at $4.65, and I can't take it anymore. There's some indecisiveness going on in this room. Hello, this is the Breakout Squad. I'm looking to break the 21 EMA, please. On the 1 minute time frame. Blanket. That's very unprofessional, James. No wonder you're not trading with Vegas anymore. Francisca, I also manicure nails. So if you need your nails done, just ask me, and I'll fly and do it. You need your nails done? Okay. I've got it all, punk. I've got it all, buddy. We need a breakout, please. Oh yeah, don't forget about the singing. And the guitar playing. And I can paint. I also can paint. I'm an artist. You can't find a man like that. They're hard to find. I can also garden. I can catch fish. I can grow marijuana too. We're waiting for a breakout, please. Let me dip back down to my entry call here at 380. Snake breakout, pullback, higher low, boom. If somebody mentions tariffs one more time, I'm going to get mad and scream. Watch them talk about tariffs.
Now you got brand damage, that's going on. I mean, give me your take here on Tesla and the moves that we've seen.
God.
Talk about Tesla just like the way you talk about the rest of the market, Tom. Yeah. Overwhelmingly negative sentiment, overwhelmingly oversold on the Dow.
You shut your mouth.
Skeptical. What does that tell me? It would take any amount of good news. Anything. Elon Musk going back to Tesla. Elon Musk announcing the date he went back to Tesla. Elon Musk talking about something besides the car business and Tesla. All these things. It's like the low bar. Tom, this is the lowest possible bar. This bar's on the ground. Tom, there is no bar. So I think that Tesla...
I'm going to bar you right across the top of the head, you bald-headed pimp.
Number of things, but that's what you're looking for here in Tesla. So far, when Elon Musk talked about just going back to Tesla, the stock rallied incredibly well. We need something like that if you're long Tesla.
Alex, I'll bring you in here. Dan Ives from Wedbush lowered his price target from 550 down to 315 today. They keep an outperform rating on the shares, but it's calling it Armageddon unleashed by the administration.
God.
Double whammy for Tesla.
They're full of crap. I'll tell you that right now. Now let's see if Alex has something
Since
positive
he kind of
to
got
say.
in charge of Doge, has been negative for the stock. He's telling his employees to hold on to the shares. Give me your take here on this stock, which is, as we always mention, it's bifurcating across investors' views.
Look, Tom, this stock rallied from $250 to $500 in a couple of months, and no one said anything about that being a little bit obnoxious.
Yeah.
The stock's gone from now 500 back to 225. It had the conditions for this kind of a move, as did the overall market. Where it goes from here, I mean, unlike the overall market that's trading with like an 18, 19 forward earnings, you look at Tesla, it's 84. I mean, there could be significantly more downside in store for Tesla if sentiment doesn't turn. But I look at this as beta, as you guys said. I mean, if you think the market's oversold, it's going to turn around. If Tesla participates, it probably does outperform to the upside. It's just a more volatile name. I mean, you're just looking at more exposure to market beta if you look at a name like Tesla. But I do push back a little bit on Kevin's low bar. I mean, it was lower than it was, but at 84 times forward earnings, and this stock is priced like it's going to change the world, not that it's just going to produce more Cybertrucks.
Yeah, I think that's, what type of impact is. We got full self-driving. that testing coming in Austin in June. The humanoid robots that he keeps on, saying might be one of the biggest drivers of revenue moving
Alex says
forward.
it's overbought.
But Alex,
It's
I
better
just
than
looked at
cutting him
implied
down.
volatility levels in Tesla. We're at nearly 5-year highs in IV here, which shouldn't be surprising after a 53% pullback from those highs. How do you want to look at this one from an example trade?
Yeah, for all the things that I just said, I think risk definitions where you start and then sizing down, perhaps even to the minimum quantity for many is going to be a decision that you have to make if you want to get involved. But with the liquidity being a little bit worse in a market like this as well, I didn't want to do an overly complex trade. It's still a vertical spread, which is by definition a complex spread. But a little bit more straightforward, I think, in its construction. Drawing a line in the sand. Maybe $200 is that line. That's for the.
Yep, that's what I said.
Who's deciding whether or not they want to get involved to decide. But for my example here, April 25th, 200, 195 short put vertical. You talked about volatility being through the roof. This gives you a little bit more cushion. Collected credit. 198.5 break even if you collect $1.50. $350 in risk, 150 in max profit potential. Selling downside, leaning into the weakness, making a stand, but doing it in a risk-defined way.
We haven't been below the 200 level in Tesla probably since August of 2024. Taking advantage of the higher implied volatility with this type of strategy.
I'm still in it. I'm waiting.
Weekly cycle, so just about 2.5 weeks till
Making
expiration.
my last entry, 380.
By the 195 put. I think Alex made a good point. Say risk defined in this stock especially, but with a lot of these strategies that we're talking about, collecting roughly about $1.50 credit. There we go. $350 at risk.
Finally broke it.
Down to 198.50. Kevin, that's 12% below the current share price
Yeah,
of about
Kevin,
$226. So
dick
you
lick.
have that big cushion, but remember, earnings are on the 22nd of April, so this one might need all the bad news priced in here at this point, right?
Well, Tom, ironically, $26 lower in terms of a strike price. The probability of out of the money is only 61%. You would think it would be higher, but it isn't. There's 18 days, and earnings will probably, if I look at the breakdown of implied volatility, it looks like earnings are in that group, but they could be the next week. I mean, volatility's high across the board in Tesla, but this is a medium to high probability trade that is risk-defined, collecting a fair amount of premium, as you would think, with a stock that has moved.
Three white soldiers.
It's low risk, but not no risk, Tom. But it's risk-defined, which is the best thing.
Yeah, Alex, when you're looking at this stuff, and maybe this 215 over the last month has been a good base for this stock where it's bounced off it. You got a green candle today a little bit, even with the stock off 5%. This is one of those strategies where, you want it to go out worthless and keep that $150 that you collected per spread on this one. But at the same time, what if this thing, the market rebounds and this thing, the price of it gets cut in half to maybe 75 cents or 70 cents? Would you, is that an option to close it early because you still have that event risk coming up due to earnings, right?
Rhetorical. Of course, you have that choice, assuming the market is open and liquidity is there for you to offset that trade. And I think many would be right by doing that if they had the opportunity to lock in gains in a market like this that's moving around back and forth. You had a 9% rally, Tom, from the overnight.
There we go. 5:30. Thank you very much.
What the move was in Tesla. There's a chance that you could put a trade like this
560.
on, manage it in the afternoon,
I'm
and
out.
then put it back on again later on.
590, baby.
It's kind of back and forth move. I almost look at this though, if I'm just being straightforward with you. Sometimes trades like
Thank
this
you very much.
allow you to feel like you're getting involved.
Richard, I did it again. Unbelievable. That's what I am. $5.90. And you're my friend. So what'd you think about that? Were you scared? Were you nervous? Thank you very much. Almost $500 in my pocket. I'm also a poet. I can play golf. I can kill ants. I'm the perfect man. I can sleep in a waterbed. I can call dogs at a racetrack. I can wipe my butt with only one piece of toilet paper. I can drink coffee out of a cup. Too much information. I can wear glasses that are half broken. That's what you are. Oh, yeah. I did it again. They're buying the $5,300 calls. Rob just said they're buying the $5,300 calls. Ladies and gentlemen, Rob just stated that they're buying the $5,300 calls. Promise you don't spread the rumor. We just hit the 200 EMA. God bless America. And it's at $6. I did good. I did extremely well. For that, it's time for a song. And I got to think of a good one. I've got one. I've got it figured out. Ready? And then we'll get back on here again. Time for a commercial break.
Hey guys, if you're looking to elevate your mowing game, we have the perfect deal for you. Now until the end of May,
Brother bought a coconut, he bought it for a dime. Sister hiding out, I want you paid it for the lime. She put the lime in the coconut, shake it all up. Put the lime in the coconut and shake it all up. Put the lime in the coconut and shake it all up. Put the lime in the coconut and shake it all up. Said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. Now let me get this straight. You put the lime in the coconut, you drank and poured up. Put the lime in the coconut, you drank and poured up. Put the lime in the coconut, you drank and poured up. Put the lime in the coconut, you called your doctor, woke him up and said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, Doctor, put the lime in the coconut, you shake it all up. Put the lime in the coconut, you shake it all up. Put the lime in the coconut and drink and pull together. Put the lime in the coconut and you feel better. Put the lime in the coconut and drink and pull it down. Got lime in the coconut and call me in the morning. Brother bought a coconut, he bought it for a dime. Sister hiding out, she paid it for the lime. She put the lime in the coconut, she drank and poured up. She put the lime in the coconut, she drank and poured up. She said, Doctor, she drank and poured up. Put a lime in the coconut, she called the doctor, woke him up, said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, Doctor, I said, Doctor, you put the lime in the coconut, you drink and pour up. Put the lime in the coconut, you drink and pour up. Put the lime in the coconut, you drink and pour up.
Time for the Fed meeting.
Nothing I can take, I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, are you such a silly woman? Put the lime in the coconut and drink them both together. Put the lime in the coconut, then you feel better. Put the lime in the coconut and drink them both up. Put a lime in the coconut and call me in the morning. Yes, you can call me
in the morning.
Call me in the morning. I'll tell you what to do if you call
Call me in the morning. what to do. Call me in the morning, tell you what to do. Are we gonna break the 200? By Harry Nelson, The Coconut, 1971. Has anybody ever heard that song before? Do I have a link to that song? Yes. Has anybody ever heard it? It's called putting the lime in the coconut and shake it all up.
Trading about 460 now, Tom, so you can get it. If you want to move it down to the 57.63, you could, right? Strikes are a personal choice here, depending on what you feel. But this is risk-defying to the debit spent, and your target is the short strike, Tom, by Friday, frankly.
All right, yeah, let's break this one down. Just a 2-week wide call diagonal, $6 wide, buying the April 25th weekly options that expire in 18 days, the 58 strike call, selling the April 11th weeklies that expire in just 4 days, the 64 strike call. So bullish $6 wide call diagonal, paying roughly, we've got a $5 debit on there, as Kevin mentioned. Price discovery may be warranted on any of the spread that you use or any trading strategy you use at this point, just due to the wide bid-ask spreads that we have in the options. But if you pay that $5 debit, there's your risk, $500 per spread. Probably anything above the 60-61 level could be potential profitability on this type of trade. You do need a move though, right? As Kevin mentioned, stock's trading around $57 a share. You do need a move to the upside. Now, the apex of profitability on this strategy, you can see, is at or near that 64 strike, which lines up with what the option market's pricing in for Roku over the next 4 days. And as you get closer to expiration, Kevin, when you look at this, you can roll or adjust that short call at least once, possibly twice during this the duration of this spread, which if you're getting credits, that increases potential profitability and lowers that break even and risk, right?
Yeah, you have a chance at the end of the week, if you don't get a move, to extend duration on that short
Well, it's
call.
now 11:41. I think I'm going to go do a walk.
It's probably because of Easter. It'd probably be the 17th or...
Ooh, Roku at $57.
And chip away that net debit, what also chips away at the break-even, Tom.
Yep, and you do some assignment risk on that short call over the next 4 days into expiration on the 64 strike also, so keep that in mind. But a bullish call diagonal, and if you take a look at why is it $5 versus the $6 width of it, well, you're buying about 112 implied volatility on aggregate in that April 25th on the 58 strike call, selling about 142% IV.
And Sue comes in and brings normalcy back to the room.
Call that you're selling, so keep that in mind. That just
Sue comes in and brings normalcy, normalcy back into the room. Yeah, this looks very tempting. Roku. Knife on what? Call me, everyone. I hope you're having a great day today. Just don't call me Jim. Call me everyone else but Jim. I might have to kick your ass. Okay, prepare ye in the name of the Lord. Okay. Okay. I'll let this play for a little bit, and I'm going to take a little bitty break.
Trade, giving traders even more ways to
This
sharpen
could be
their
a spot,
skills with tailored
but
education.
then we could hit a triple bottom down here off the bodies.
Filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at CrowdStrike, let's get a quick market.
We got a flag
We're starting to see
on
a little
SPY.
semblance of consolidation here.
SPY's definitely flagging. Oh,
Don't get me
CrowdStrike.
wrong there. The S&P 500 down 1.5%. The Dow Industrials off nearly 800 points or 2%. NASDAQ 100 down just over 1%. And the Russell 2000, the small caps down 1.8%. But at least some of the swings have started to calm down here a little bit because thin trading. There's not a lot of depth or liquidity to some of these markets due to the uncertainty. And remember, a tweet, a headline can come out at any second, change the course of the direction in market. So keep that in mind with the volatility index, the VIX, still at the 50 level. So uncertainty remains elevated at this point. All right, let's get into a discussion about cybersecurity. We got CrowdStrike. We're going to take a look at that one. Stock's relatively flat over the last 12 months or so. Pretty good earnings report. Let's bring in a special guest here today, Rick DeCat, lead market technician. We're going to look at some charts in CrowdStrike on the pullback that we've seen. Cybersecurity not immune to the tariff headlines. Rick, you've got some charts for us. Break it off for us because I think you've got multiple ones for us to take a look at.
Yeah, it's quite a day here, obviously, Tom. And when we look at this stock, I like to start out by comparing it to its sector as well as the overall market. So in this case, meaning these broader sector situation here. But if we were to look at everything here, we can see that we've been in a downward trending area for a while here now. And if we were to pull up our CrowdStrike chart, we can see that we have come off of those 52-week highs here, notably. Now we've trended down for a while. We tested our confluence of our two moving averages, our yellow 21-day and our orange 63-day exponential moving averages. So we can also see that we formed a rather consistent bottom at our green line near about 308.89. That was the site further back where we had a gap up and then we bottomed out twice. So this area, 309 or so, seems like a key point to hold. We can also see, looking at the lower level on our screen there, the RSI, our measure of momentum here, trending downward, exhibiting a matching trend line along with the price activity here. So a situation where we're seeing some technical damage. We've fallen below our moving averages. They're starting to tilt downward. But for now, we're hanging on at this supportive area for right now.
Rick, tell our viewers what it means, the fact that, yes, in a down market, CrowdStrike is $20 off of its lows. It traded as low as $298 this morning and has rallied back $20. If it were to close in this area, what does that mean in terms of a candle, and what does it mean going forward?
That's a really good question. If we go to our next 1 year, 1 day chart, we added some extra studies here. We have our volume profile study and our standard deviation channel study. And what this does is it tells us the levels at which we would see a move we would consider extreme and how they would line up with the heavy trading areas. So you can see right about now, we're quite close to our -1 channel. So that's one standard deviation below that solid blue line, our line of best fit based on closing prices, our linear regression line. So right now that -1 channel comes in near about 320 or so. So that could be one area to overtake as we head into the close. To the downside as well, you can see that area near 272, that light green line. It lines up with another volume node as well as our -2 channel, our -2 standard deviation channel. So around 270 could be another supportive area. And if we were to take one last look at our next chart here, a 5-year weekly chart, we can see that we are kind of near that weekly linear regression line based on our 5 years of price activity. So we are kind of close to some notion of fair value for this name here on a longer term view, despite some of the big swings that we've seen. But for now, you know, kind of just staying between these two trend lines, one going up, a longer term one across the lows, a steeper, narrower one going down from those highs.
Rick, when you look at like today, it's a big green candle coming into play here today. Stock's now down about 1%, but it was positive earlier in the session. When you see like big flagging candles, whether it's red or green, if you're using a candle chart, what does that signify? That, hey, maybe the bottom is in and now momentum's starting to pick up to the upside, or is it like the reverse if it's a big red candle?
I think so. The type of candle that you would be looking for, perhaps if the bottom was in, would be like a hammer type candle, where you have a long lower wick and price manages to rally above the initial open there, suggesting that the buyers were able to swoop in and scoop up some shares here. But what we have here is we had a candle where we opened near the lows. We've managed to recover somewhat. We're still down on the day though, and we are also very notably off of our highs, thanks to the crazy influx of very attention grabbing, to put it mildly, news that we saw here today. So we did not manage to really make our way above the gap that we formed recently here near about 342 or so. That would be one level to watch.
Yep, we'll continue to watch that. Below it's 50. It did pop above its 200-day moving average, but now below that once again in a choppy session. All right, thanks to Rick Ducat, lead market technician here on the network, helping us break down a few charts in CrowdStrike. Kevin, one of the things I noticed in the stock as we get into my example trade here is the fact that implied volatility levels are at multi-year highs. That's not surprising. We're seeing that across the board in a lot of stocks at this point. The stock off of session highs. We hit 341 earlier in the session. We're trading 318. So yeah, it's been a roller coaster for this name too. So I looked at a strategy, Kev, you know, based on some of Rick's charts here, where we're starting to see some basing of the stock here, where I can take advantage of upside movement and be profitable. I can take advantage of it consolidates at these levels, be profitable, and even if it moves lower, but not too low, I can be profitable on this strategy. So I looked at buying a put butterfly here, where actually I'm going to collect a credit on this trade, Kevin, going out to the April 17th, really short-term positioning. 10 days to expiration. Buy one of the 310 strike puts, sell two of the 305 strike puts, and then we're going to buy one of the 280 strike puts. You're collecting a credit. We've got basically a $4 credit on there. You're going to collect over $5 and maybe $5.50 at this point. So the stock has pulled back since we looked at this about an hour ago. So you probably collect more credit and that'll lower your break even. But if you collect that $4 credit on this one, Kev, anything above 310, you keep the $400 in credit that you collected. Now you get a little kicker there at or near that 305 strike where you sold two options, and it takes your break even, Kevin, down to 296 to the downside on this type of trade. And if you look at the risk on this, you're going to have $1,600 in risk if you collect 400, but that's all the way below 280, Kevin. So it's neutral to bullish, but you get a little kicker on the downside.
Yeah, this is a downside put butterfly that actually is long deltas and has no upside exposure. So because you're long a $5 put vertical and short a $25 put vertical, that's why you get to trade this for a credit. Therefore, where's the risk? It's below 305, but below 305 and 280. In between there is where the risk comes in, Tom. But if it stays here, if it goes down small, or if it goes up, you're profitable on this trade, Tom, because you're doing it for a pretty good size credit.
Yeah, and as I mentioned, above 310, you just get to keep the $400 in credit, the $4 credit that you collected per spread on this one. I mentioned that little kicker at or near that 305 strike. The max profitability on this would be about $900, and that's if it pinned the 305 strike, which most likely won't happen. But what this does is it gives you some exposure to the downside where you can actually profit a little bit more, even though maybe, excuse me, on this type of strategy, you want the stock to go up, right? Because you get to keep that hefty credit due to the higher implied volatility levels, Kevin. But on this type of trade, it's a week and a half trade, Kevin, 10 days or so. Do you let this thing try to go out worthless? You do have to do some management if it's under that 310 strike on this one also before expiration, correct?
The ideal situation is for next week, not this week, next week, for it to grind towards 305 on the downside, where you put it on for credit, next week you take it off for a credit. Or you'd rather have the stock just go up and have the five, whatever the credit you take go to zero pretty quickly. And you could probably take some pretty good sized profits once this market realizes that it may not be going down significantly. So yeah, this is, remember, the risk is on the downside. It's a put butterfly, but it's a long delta spread.
Yep, 296 is the break even to the downside. That's about 63% probability of finishing out of the money at expiration, which is what you want on that one. You want it to finish above there. All right, so good look at the long butterfly for a credit to the downside. Gives you exposure in 3 out of the 4 scenarios. You just don't want it to fall out of bed and go below that break even at 296. Kevin, as we wrap up here, market's starting to weaken here again. SPUs are SP 500 down 1.7% now. I mean, what's your advice, Kevin? We've been through these scenarios in markets multiple times. What would be your advice to traders, investors watching?
I think you control your risk. I think you average in and put money to work at these levels, always cognizant of the risk, because it may grind lower, but if there's a news headline, Tom, as you know, it could air pocket higher from here.
Yeah, VIX at the 50 level, up another 11% today, so that's elevated, reflective of the uncertainty that we're seeing in the market. The bond market continues to sell off. The 10-year now 4.14%. Crude oil back under $61 a barrel, so that's a good point. But as you mentioned, Kevin, you got to watch headlines on a minute-by-minute basis because things can turn quickly, especially with that elevated volatility. All right, that's going to wrap it up for us today here on Fast Market. Make sure you stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more. with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab.
Schwab, a modern approach to wealth management.
Welcome to Next Gen Investing. I'm Jenny Horn, joined by Alex Coffey, who is coming to us live from the floor of the New York Stock Exchange. So we have right now some pretty substantial selling, although Alex, as we have talked about, I believe for the majority of this day, it has been a whipsaw of price activity as we have been far lower off the open, and actually looking at things right now with the NASDAQ nearing, actually not unchanged, but nearing some basically hopeful, more positive price activity. It's been definitely a volatile session with VIX actually sitting now just below 51, also surging on the session.
Somebody's got to be talking right now, or there's a social media post, something. We just moved like 80 points in the S&P 500, and I just saw the NASDAQ green for a second. It's back down 50. So something's breaking in real time. We'll get that information when it happens. But Jenny, you know, I go to a couple, events here in New York, and everything falls apart. What's going on?
I know, everything does feel a bit like it is falling apart, but you're right. As I was watching, I was like, not only is the market moving, but it's like my brain is now breaking as I'm looking at things. Yeah, something must be happening as far as some update on the tariff news. Of course, today's whipsaw activity could be described as first we got reports that we could actually see the U.S. scaling back on some of these tariff measures, particularly to those in China, and then we saw the White House basically say that was fake news, and the market bounced accordingly. So lots to get through today. I do know that this will definitely dominate the majority of our coverage throughout the next hour, as we will talk equities, but a lot of which and how they pertain to some of these tariff developments. Of course, what we have seen is much steeper tariffs than expected to be unveiled by Trump last week. Then we saw retaliatory tariffs from nations like China, lots of conversation over the weekend, and right now we know that it's seemingly going to be the narrative that we're just looking at for quite some time. So yeah, Alex, not sure if you got a chance to see if anything specific is going on here, because we are moving at the noon hour here in Chicago.
Yeah, I got a newswire up. Nothing is really dramatically sticking out at this moment, but I will update, of course, if I do see anything. Jenny, I do think it's important, though, as I look, when we were about to start the show, I had looked. We had the heat map up. There was only 50 minorly green boxes on the screen before the show. There's now about 100. So it is improving, but it's volatile. It's swinging around. So expect that to continue. This isn't something that's just going to go away, overnight. I mean, this is turned from maybe a dried out forest that had a spark to something that's fully ablaze now. So we have the catalyst. We know it was the tariffs and the uncertainty, but this is now beginning more selling, Jenny. This is a situation where there are distressed sellers in the marketplace that perhaps had over-levered positions and are no longer able to hold those positions. That's why you're seeing the just rapid movement back and forth. So this is the importance of knowing how big small is what I've been saying all day, and knowing the positions you have and stress testing and having an idea, in these, I don't want to call this a black swan, but let's use that for lack of a better term, crash-like scenarios. How's your portfolio going to perform? Having cash on the sideline has had you underperform in recent years, but it gives you a lot more peace of mind in times like now and allows you to be offensive in these big moves as opposed to defensive, or even, forced, like a turtle going into his shell in times of uncertainty. So a lot going on, a lot to explore, of course, as the day rolls on. That little pop is already unwound. NASDAQ's back down 200, S&P is down 87. So it's constant, relentless volatility. But what I would say, all things considered, is, keep the size in check.
Yeah, keep the size in check. I think mitigate your risk. And also, right now, there's a lot of passion, a lot of feelings, I think, involved with people's conviction on what they think that tariffs will mean for the economy. And I just from reviewing X over the last hour or so, you can see people that feel either this is a risk and a gamble that will pay off, and then there's the other camp that obviously does not. I think important to note that no one knows what is going to happen. No one has lived through this exact specific market ever. We're all doing it for the first time. And so it's just important to keep, I think, your head on straight in terms of your emotion, and the ways in which that impacts, of course, your investing and trading. But as always, on this show, we'll step away from some of that macro discussion, although not entirely, as of course it does still dictate a lot of the equity moves we're seeing today. We'll kick things off with upvote and downvote. We'll be charting and trading our upvoted names. For FOMO today, I mean, of course, we closed out last week with Tesla for FOMO. We're kicking off this week once again with Tesla for FOMO, as it is actually one of our most notable names moving to the downside of the Max 7. It's down about 5%, or just shy of 5% on the session today. We will also be looking into the latest with banks and some re-ratings we're seeing from the street as far as the financial sector is concerned. Mind you, we do get earnings starting this week, so we have that to look forward to for a lot of these financial stocks. We'll also get a better picture on the overall economy, as well as more so how we're looking at another banking space, and that's SoFi, with actually some higher price activity, even though we're seeing some analyst news that is not favorable. So kicking off upvote and downvote here, Alex, starting off with Starbucks, down about 5% today. And hey, here's the thing with Starbucks is Baird downgrading shares. I think that matters to the narrative, but I also think that when you have right now so many of these inflationary concerns, especially regarding the restaurant and food space, these companies have already taken it on the chin for quite some time with how they're seeing their profitability eaten up by higher costs. I mean, labor is expensive. The narrative for Starbucks, unfortunately, has been one that's been of pain now for years at this point.
Yeah, this is always tough, right? Like, today's clearly a macro day. Today's clearly a day where the overall market's volatility is building on what we had at the end of last week. But that doesn't mean that these stock-specific stories and these narratives that follow them can't be impactful and can't influence decision-making for what might happen in the coming months, coming weeks, coming days. And so it's an interesting point by Baird here. Obviously, a pretty drastic price target adjustment, but still implies over 10% of upside from current prices. So something to consider when you're looking at this. But I think your point is well made, where you're looking at a name that's already been under pressure. It's under more pressure today, much like the overall market, though, Jenny. So there's not a lot of places to hide today, and Starbucks certainly isn't one of them.
It is certainly not one of them, as it does feel, yes, like we are in quite the opposite of a hiding space right now. Now, our next name today is Delta Airlines, and I do think the airlines narrative has been really interesting as of late, because what was actually getting a pretty nice lift post-election. I mean, a lot of these airlines were almost euphoric, caught up in that election hype cycle we saw. Now have given back some of that and some, and Delta, we're down about 1 3/4% today. But amazingly so, even with this downgrade out of UBS, which is too neutral from buy, also right now reducing its price target pretty substantially as well, to $42 a share from $77. There's still this overarching theme of like the sell side really liking Delta Airlines. This has always been one of the top rated names among the airlines within overall the analyst coverage. That is still true. We do have 23 analysts that cover this name and 22 buys and just 1 hold. So there is still this thinking, yes, economic right now outlook and right now the sharp downturn in sentiment regarding the faith of the U.S. consumer is notable, and they're adjusting their price to accommodate that. But also, I mean, how much deterioration do they really see when they're just taking on a more neutral stance?
Yeah, obviously oil coming down a lot is going to help some of these airlines as well. It's going to alleviate some of those pressures. Services largely aren't going to be tariffed, so that's something to consider when you look at what the impacts will be. Delta, though, one of those names that told us things were a little bit more downbeat not that long ago. So we forget that this market was already under pressure long before tariffs were the word that we're saying in every other sentence. So yeah, DeepSeek. You had companies like Delta warning about maybe more disappointing profits not that long ago. So tough looking chart, but maybe approaching a pretty critical level of support as you look at it back to those lows that we saw in the middle part of last year. Let's talk some Target, though. This is another name that's been volatile despite what's going on in the overall market. Throw in some of these macro headwinds. Again, not a place to hide.
Yes, speaking of long-term pain, unfortunately that has been the case for retailer Target, that has faced so many of the most difficult of an inflationary environment. Also, we know they mentioned elevated shrink, where they were starting to see mass amounts of theft actually impact their quarterly financials. And then there was the whole narrative of some missteps specifically from Target, and then the pulling of their DEI programs, and now even more of a mass protest. I mean, there's just right now a lot of themes right now that do not paint a happy consumer with Target. And I know this is one that has its very tried and true loyalists, but even some of the biggest Target enthusiasts I know as of late have taken on a stance of trying to spend a bit less at the big box retailer. All this to be said, I mean, add tariffs into the mix, it was already one that I think was losing again some of that severe loyalty that was the reason they were somewhat insulated for years. So Baird today actually downgrading both Target as well as our house from outperform, or excuse me, to neutral from outperform, while also upgrading shares at the same time of Williams-Sonoma. And they do recommend reducing their exposure to retailers with more relative risk to this discretionary demand, saying that Target sells essentials, but its discretionary categories in home and apparel tend to play more meaningful roles in attracting visits and consumer spending. So I definitely think that is the case, and actually something I think is interesting is now we look at retail. What works in retail and what doesn't. Now, next name today, and to close things out here, is Roku, with Redberg and Atlantic actually upgrading shares to buy from neutral. I believe this is the only positive analyst note I've looked at all day, Alex.
I saw one for Dollar Tree, but then you read it and you were like, it wasn't that positive to begin with. But it's nice to see some green on the screen, especially in a name like Roku. Maybe not the first place I would have thought would be acting a little bit more defensive today. So quite interesting, and it's funny that they use those exact words within this note, talking about defensive attributes regarding sort of their balance sheet strength for this company. I've always been impressed by Roku's ability to pivot and kind of stay ahead of trend. This is a company that was a stopgap in its product, and it found its way into the software space and remained relevant, and really has leaned into what I would call a consumer favorite within its UI of managing the streaming platform. So kudos to Roku, but still a tough market, and obviously a stock that is going to not be immune from pain, and it's been down a lot in recent years. And maybe that's a little bit why you're seeing a little bit more of its outperformance today, is just simply because it front-loaded so much of its sell-off. I mean, this is the stock that was almost $500 a share back in 2021.
That is very true. And actually, I just also wanted to know that Netflix also actually still hanging on to a modest gain, up about 0.9% here. So somehow I'm still now in a double Roku household, right? 2 Roku TVs. I never thought I'd see the day that I have so many TVs in my life. But yeah, I guess I'm a Roku supporter, just given the fact that it is the device in which I constantly stream. So I'm thankful for them for that. But we will leave it there for the top of our show here. We'll be diving more into our upvoted names today. We're looking at Starbucks as well as Target with our chart master coming up next.
Coming up next. That's her. Jay Horney. Okay, I think we're about ready to break. And Dow hasn't done nothing since I've took my little bitty nap. You ready? I think we're ready. The 5200s are at $4.90. $5. Yeah. Uh-oh. There we go. Again. Let's break it. Pull back. Boom. La.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email,
there she goes.
Chat. Trade brilliantly with Schwab.
The 5200s with 6.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Damn, there she goes, man. Jimmy's right.
Welcome back to Next Gen Investing. It's of course now time.
The 5200s, $5 to $6.60. Unbelievable, that's what we are. These things ain't holding up very well once they break out. God, I want my glasses so bad. I hope these don't break on me until I get them. Oh man. Come on, lens crafters. I wonder if I can check on my order somehow. Oh boy. Eyeglasses. Boom. $5,200's now hit 7. Ain't that nice? Just wake up from a nap and get in one at $5 and sell it at 7. April the 7th, strike. That's what you are. Jenny, where'd you go? Good job, Rob. Are you people done bad-mouthing Tesla?
Not been read as hugely optimistic of tariffs from economists at this point. So now looking at another name that does have that consumer exposure, that being Starbucks, which these markets keep this up. Rick, I'm going to need Starbucks maybe more often before I become a coffee drinker with all of the volatility of the session. Walk us through this chart as we're down a bit more substantially to kick off this week, about 4.2%.
Okay, we're going to listen to him about Starbucks.
Ourselves near a potentially very interesting point here, because if we were to look back further,
We're going to listen to what he's got to say, then what I got to say.
all the way back here near our green line here, where we had a heavy spike on big volume here, and then it brought us up eventually to these 52-week highs near 117.46. From there, we did trail off, though. We have fallen rather sharply from that point. We have formed a bit of a sideways range here with the purple 252-day exponential moving average seeming to provide a bit of downside support here, but things eventually did fall apart. Now, price just is flipping back and forth, positive and negative on the day. We're struggling to hang on here right around this level, near about 78.43. So a notable point to consider today as we assess this rather difficult trading environment. So now as well, we can also see that RSI has declined. We failed to retake that 50 midline. We are still following our downward sloping trend line, a reading of 19.4. Really a quite low reading for the RSI, which only goes from 0 to 100. So this is a very low reading for this particular indicator, suggesting the trend is stronger to the downside.
And I would say that unfortunately that has also been felt very much in some of the news updates we've even heard from Starbucks. So now as we zoom out again here, look more at the big picture. Another name that is definitely exposed to the consumer, and oftentimes I think there's a degree of staple nature to
She's got the weirdest.
your morning routine.
I just don't like that arch, the way she arches back. I mean, it's scary.
We're also now in a pretty saturated market.
Yeah, that's the tough part, is because we maybe don't want to give up those little luxuries, but they may become increasingly hard to
She needs to eat or
and
something.
to fit into your budget here. That would be a tough situation for this particular stock. But now we can see as well, when we look at some of our price activity here, we had our green line that was our gap. We did move a little bit below that, but we stopped in another notable area. You can see we have this volume node right here near about 76 or so, 75, 76. So we touched into that area, but we managed to recover. So this was a heavy trading point. This could be a point where the bulls might try to make a stand and flesh out some kind of bottom here. If we were to move higher once again, -2 standard deviation channel comes in near about 84. And then we also would have this notable low point here lining up with this volume
84.
node near 87, 88 or so. And when we do look at our long-term chart for this particular name, really a rough decline here. We can see that we are near the low end of our 5-year range here, a long-term volume node here. But look at how consistent this low
That
has
ink
been.
already
Near about
gone?
the 72 level or so, 70, 72, a point where frequently a bottom has been established. So if we start getting too much lower, it could be an interesting place to keep an eye on.
Yeah, absolutely. Especially given today's move here, actually giving up some of its losses on the session, but down about 4% now for Starbucks. But we so appreciate it. Of course, Rick, our chart master for today and every day. And now going back to Alex here with an example trade in Starbucks. Alex.
So he didn't sound like he was too 84, 86, 87. So Washboardjim versus the chartist artist. This was me yesterday. Monday. You could swing this and break resistance at right around 86. This is Disney. And that's a head and shoulders. You've got your left shoulder, your left shoulder, your right shoulder, your right shoulder. And this ain't Starbucks. Here's another one. Everybody likes to drink coffee. I won't pay what they're asking for it. I'd rather. I might change my coffee habits. I grind my own beans. I did it for years. I buy the best coffee money can buy, and that's Blue Mountain Jamaica coffee. So coffee's real important to me. And right now I'm drinking decaffeinated. I've kind of got a little bit older, and coffee's kind of getting to me now. I got to get my sleep at night. I sleep better by not drinking it. So I can drink the heck out of decaffeinated all day long. And I'm drinking instant. So I've dropped my... Come on, get on with it. I drink the best coffee for years. And I just don't go out and I don't buy it anymore at a convenience store or at Starbucks. But many people do, and they got too involved in politics, they got too woke, and the company got screwed up by going woke. So it had a huge sell-off. So on the 3-year time frame, I'm going to draw a trend line. We got a double bottom here, and then we've got this thing right here. So this is a weekly, and I'm going to try 2 different experiments here. First, I'm going to clean this up. People will buy this one too. This one had new management, and look what's happened. It had a good run. New CEO, and then we got into Trumpville in China. So there's a reason why this is pulled back. I think they have too many stores, personally. And we're going to take the body right here, and we're going to run it up to that body right there. And we've had higher low. So this is called an underlying support. So I'm going to put a price line right at 73.64 area. This thing dropped down to 78. So we got a little gap right there. We'll put that right there. And then we'll pull this up on the daily. You see that bottom of that candle? That's a gap. He mentioned that gap. So I think this thing could... I'm going to put this one on watch next week too, because this is their little baby. And they're going to be piling on this stock for a swing to try to run it back up. They were pumping it at 110. Go higher. Big time. And when a market goes into a correction, a lot of stocks will follow it. It doesn't mean it's a bad stock. It just means that everybody, don't want to get stuck in it, and they're going to sell it out and let it dip. But they're also going to pile in on this stock. So we got a double bottom coming Monday at 77777777777. Did you get that? 77777777777. See if I can get it. There it is. 77777777777. If that can hold, we can run this back up $3 or $4. Maybe get back up here to Friday's high for a swing trade, right around $85 long. Chartist artist, and I agree. Maintain 76.57. What was that low support? Let's go back to the weekly. Yeah, somewhere in this channel. This could dip on down and be a very strong buy here at $74. And go long all the way to 85 as a swing trade. As a swing trade. And your resistance to break would be right here. Right where we pulled back. I mean, this is a good spot where it pulled back Friday. It really was. But now that we had another correction, we could easily run back up to the top of this mountain right here. And that's going to be a major one to watch, that number right there. 81.62. 81.62 all the way to $85. That's going to be your resistance channel. And this thing can run back up to the 200. Remember what I said about the 200? It's bearish. Let's take this to the day. I like where this is right now. I really do. We can easily run back up there and hit that. And we're at $78. So that's going to be your hard resistance at 81.62 all the way back to 85. And it can run up more. This is a good one to watch to put on your long list. Anybody else have any? Yeah, I have a question. What's the price at it now? Oh. 76.70, and we hit 777777777. We pulled back to 7777777, and we hit it again, 7777777. And we did hit that very important number at 8162. So yeah, I think this could be in play. That's a head and shoulders right now. Well, Washboardjim swing it? That's the question. Let's look at the option here. Silence, please. April 17th. The 85 strike. Let's go to the end of the quarter. May 16 to the $85 strike. At 335. Well, $100. The $100 strike for May 16. I don't know. I had to think about it. Caroline, should I buy it? Damn, you're hot today. I gotta listen to what she's got to say. Whatever it is, she's getting down.
Pretty immense implied volatility. We just talked about the range being like 20% high to low today on one single session. And we're not talking about some micro cap company. We're talking about a company that is hundreds and hundreds and hundreds of billions of dollars in market cap swinging around. So it is not for those with the weak stomach by any stretch, but what really alarms me, and this isn't nothing to do with any of the narratives one way or another. You could be the biggest bull in Tesla or the biggest bear in Tesla. I've always had concerns with, best case scenario, absent some of the other product.
Alex, do you have a problem when you sit next to her getting hard on? Let me know.
What scares me, I just keyed this in. Forward earnings valuation, 86 times price to earnings on a forward basis. And this is after
Tesla's
falling
down 40+% this year.
Well, here's the scary part. And I know they got this other stuff that make it traded at a premium. But at its lows in December of 22, it got down in the 13 range.
Yeah.
So fast math, 7-8 times, based, it's still off that. I mean, this is a stock that, if you do that math, I mean, we're talking about Gordon Johnson maybe being right.
He's been wrong for quite some time, and he's certainly in the minority with that 24 whatever dollar price target. I do think that the bulls do continue to hang their hat on the FSD story, the AI and robotics story, and even Dan Ives has always
She's talking about Tesla
on that opportunity. But I did mention that he's scaling back his delivery estimates as well, softer demand estimates. I was confirming with him. Previously, he was at 1.9 million for 2025. Now he's at 1.7 million.
So I was close to my support.
That's a 10% adjustment.
Right, and it goes to show that Tesla, at the end of the day, does make EVs, and those delivery estimates are important to, to a degree.
And even if you're looking at this for what Tesla could be and what it's working on and what Elon's going to bring this company to potentially be, how are they going to fund that? Deliveries of these cars. So the plan has always been at Tesla. It started with make this really expensive luxury car so that you can then finance making a little bit more affordable luxury car, and then ultimately that mass consumer model. But now it's take those proceeds, those earnings, reinvest them in the company in becoming the leader in full self-driving, robo-taxi, AI, and robotics, and all these things. If the core business struggles, I mean, Tesla, it's going to be hard for them to be a leader in those things because they have to have a runway of some
And there's multiple reasons why the business could struggle too. It's not just the fact that there's this brand issue. There's the fact that people who previously may have wanted a Tesla or were interested in EVs are now saying, I don't want to associate with that. But there's also the fact that, recession keeps entering. Right, the recession keeps entering the people's forecast as well. If the consumer is going to pull back and Teslas are only going to get more expensive based on tariffs and the fact that parts and batteries come from, outside the U.S., that could also dent Tesla sales as well. On top of
they don't understand. Tesla will not raise its prices because of the tariffs. They just get this guy all wrong.
Last thing I do want to point out, which I do think is pretty notable, is the fact that if you take a look at the median price target, it's $317.50 now, and that's actually higher than Dan Ives' is $315. So right, so he's not even just not the biggest bull on Wall Street. He's pretty much in the middle. Yeah, I mean, if you take a look, yeah, he's a little bit less than the middle.
Basically the median, but that's still quite incredible. I will balance this out and say, hey, the stock rallied immensely post the election. It's down about 10% from where it was going into the election. That's reasonable given all the volatility. We know that the full story isn't necessarily painted there. And look, at some point the market's going to rally. The Nasdaq's higher today. Hard to think
SPX rejected
in the market that as high beta as Tesla is, it doesn't at least get a relief move. I don't know if that's going to happen or when that's going to happen.
Jimmy.
But then I think if you're trying to find the bull case, maybe that's the best we got right now.
But if people bought at the highest, it has to rally quite a bit.
Nvidia, Bitcoin, everything. So yeah, it's always tough if you're the guy who bought the high. But Caroline Woods, I appreciate the update. It's a pleasure to join you here at the exchange, and looking forward to being back soon.
Thanks.
We're going to look at an example here for Tesla. Looking at, again, a short vertical spread as
things are at 780
for all of our examples today. Low basis, risk-defined, high volatility. Tesla fits the bill for all of those once again. So looking at, again, drawing a line in the sand. And again, it might be Tesla, it might be something else, but this is a strategy to help you do that. Looking at the April 25th, 200, 195 put vertical. Looking to collect about $1.50 on this. That would be 30 cents on the dollar of risk. So 150 in max profit, 350 in max loss. And as much as the market's moving around, look, I sent this in an hour and a half ago. This price might be long gone. It might be even better price now. That's how quickly things are moving. So you can kind of get an idea into how I was approaching this, and then adjust whether that's in Tesla or something else if the idea resonates with how you were thinking about it. But to me, the most important thing about a day like today is that it's a risk-defined strategy in a name that, of course, can move. It's at an almost 20% intraday range. So know that when looking at this. But that's actually going to do it for me today from the New York Stock Exchange. I'll be back in Chicago if all things go according to plan tomorrow, joining Jenny back in studio. But we'll take a short break. When Jenny gets back, she's going to dive into some of the bank analyst moves as earnings season is slated to kick off. Can't believe earnings season joining now. We get no relent in this market. News every single day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Pedalese, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device. For free. Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Next Gen Investing. I'd now like to welcome in Diane King Hall, the host of Morning Movers, and of course a frequent guest and sometimes co-host alongside me on this show. So Diane, we have some split analyst activity on the banks. We do have a downgrade at Morgan Stanley. Goldman, thank you, on Morgan Stanley, as well as Bank of America with an upgrade. So walk us through the difference right now in analyst convictions on these banks.
Yeah, so this is Morgan Stanley taking a sweep across the banks right now. And you can imagine in the context of the market action that we've been seeing recently, we'll continue to see these adjustments to valuations and views and re-ratings in the context of the current environment, especially since we saw that massive sell-off. So they're more constructive on Bank of America and less constructive on Goldman Sachs right now. And a lot of this is fueled by the concerns about, say, recession risk, along with just the tariff environment and the implications for that. So with regard to Bank of America, they've upgraded it to overweight from equal weight. Their new price target is $47 a share. That is actually down from their previous price target. They had it at $56 a share. It's down because, again, they're going across the spectrum and looking at what's happening in the banking sector. And so they basically, the way they see Bank of America over at Morgan Stanley, that its underperformance makes it more attractive on a relative basis. Overall, the economic outlook is
$9.50
from their point of view. They're worried about slower GDP, rising uncertainty. We continue to see the uncertainty in the market today. And then just a delayed rebound in capital markets. There was this big expectation coming into this year that we would see the unlocking.
We're coming up to resistance.
We're talking about IPO activity, M&A activity, but it has been slower to materialize. And in the face of tariffs, it
I
just
traded the
becomes
shit out of these today.
So overall, they've downgraded
No,
their
I don't want to
industry
clear the
view of
drawing.
sector to just in line. Amid this just heightened
We're about to hit the top of the
recession.
megaphone.
For Goldman, they've downgraded it to equal weight from overweight. So previously they were more constructive on the.
We're about to hit the top. There it is. We just hit the megaphone. Ladies and gentlemen. She should drop right here. $9.20. $10. $11.50. Thank you very much. Remove. Remove. That's what you are. You took a lot of put here. I just got out of mine. My last one. remove, remove. The crowd is going wild here at the sports arena today. You remove that one, then you come back up here and you hit the edit button. Then you go right after the 5 and you hit enter. And then you hit OK. Boom. I'm going to say we could see a double bottom, or we could hold right here at the 21. I'm going to show you my glasses I bought. I just want them and I want them now. As a child, I was always Chester-sized and called Four Eyes. Can you imagine what that's like growing up? People calling you Four Eyes all the time. I was bullied, so I became a pro boxer. And I started whipping ass. Oh, here comes Four Eyes. Hey, Mike showed up. Yes, I've been making dough. You want to see it? That was pretty funny, wasn't it? Magnificent. I still have it. The question is, are we going to hold the 21 like we did here before, or are we going to drop and hit the 63, Richard? Are we going to stop at the 21 or are we going to stop at the 63? Question was asked. We're going to blast through it. Okay. If you're listening to CNBC, you'd probably think, God, why are we bouncing? Another Trump lie? Let's see what they're saying right now. I can't stand these snobs.
Economically, he's really going to suffer under tariffs.
Oh,
Walmart's,
tariffs.
Home Depot's, Costco's.
I'm not on here for even 3 words, and the frickin' words mentioned. You know what? CNBC, you suck.
Since KWEB has basically zero revenue exposure to the United States.
These people get it wrong all the time. Let's make that clear. So we'll go back to Schwab. I can't take but 3 words out of their mouth, and I have to change the channel. And then I have to listen to Jenny. God.
Markets correspondent for the network. And Kevin, I know that we are focused today on SoFi, but just quick one to also get your thoughts right now on the overall market, because everything is tied, I think, so close to the macro. It's an important discussion.
Yeah, I mean, at the end of the day, what you're seeing is very low liquidity when it comes to these markets. It doesn't take much to really move prices, and we're just looking for news headlines. So we are green for right now, but I mean, Jenny, if you kind of look at those China tariffs that
Kevin.
Trump says he's going to put on, you're talking about 104% in totality.
Kevin.
There, and I think that's a huge risk, but the market's discounting that for right now. So continued volatility, and we're still
we missed a good chance here.
I know we'll talk about this here, but it's up 4% in today's session. So you're seeing maybe a little bit of short covering taking place, maybe a little bit of risk on appetite for the most part for now. And when you're kind of looking at SoFi, Morgan Stanley actually lowered the price target for this stock down at $6.
Oh, God.
The previous price target was $13, and they have an underweight rating on the shares. Once again, tying it back to the macro. If we do see these tariffs being put in place, that could also slow down the.
Morgan Stanley's full of crap. $6? You got to be kidding me. $7.55 is what I would say, but no $6. If we hit $6, I will personally wear a dress.
% on the session. I mean, Kevin, like, what is the risk right now with the economic uncertainty that, I mean, obviously still exists for a name like SoFi, but not exactly directly tariff impacted, which is somewhat of maybe its strength?
Well, if prices go higher for the consumers, obviously we might pull back on spending, and if we do pull back on that spending, we could see maybe a lack of liquidity in the market. Also,
we're at the 21. It's either do or die. The crowd's gone silent. Kevin thinks we're going to drop down and hit the 63. I mean, Richard Nixon does. Thank you very much. If I was president now, us and China would be best friends. I would not give them any tariffs at all. In fact, I would ask him to come over and eat hot lai with some cashew. And we'd eat with chopsticks. Yeah. That's what you are. La 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 la. You missed out on a couple good fun days. The crowd's really going wild here. I think Jim's done beat Richard already. We held the 21. Now the question is, are we going to break the resistance line or are we going to give up here? Uh-oh, Richard. Did you see this here? 21, 21, 21. As long as we stay above the 21, we're still bullish. Now we hit a double top in the crowd, triple top. And we broke the triple top. Make sure you tell everybody you know that my name's Washboardjim, and I'm the founder of the Sneaky Snake Trading Strategy. And that you've never seen a trader like me before. You'll say that to someone tonight. Oh, good job, Mike. Always clean janitorial. This is Washboardjim with a Sneaky Snake Trading Strategy. You are definitely on a recorded line right now. Translated throughout the whole world. Oh, why'd you hang up? I don't understand. Woo-wee! I think you would have too. Everybody's freaking out on it. I wasn't. I'm definitely not freaking out today. I've nailed it. Today was a lot better than Friday and Thursday put together. At first it wasn't, because the options were so expensive, but once we bounced, it was like, wow. I've never seen an option chain like that before in my life. Can't wait to try my new glasses on. Oh boy. Is that RB or RX? Oh, these are RBs. Bleh. Okay, this might be coming down now. Now Richard's right. Yep, that's what I think we're going to have a little breakout and then another pullback like we did before when we had the last dip. A little bit lower than the last low. Get ready, Richard. Oh, boy. Oh my God, shipped in one business day? Right to the 50. I'm watching them close. I ain't traded it yet. Next resistance is 514910. If we break this 510491, damn, these things are really nice. $7 to $9.70. Mike, what'd you think of my burger? Yeah, I did. Look above. Look up. Scroll up, Bane. Don't make me post it again, because I will. You would eat it. You'll eat what I tell you to. That is a healthy burger. Olives. Olives with garlic on the inside. Each one of them has a garlic on the inside. Oh, there's your 63, Richard. Oh, yes. The crowd's going wild here at the sports arena. Are we going to dip down to the 200s? My question. Checking it out. Checking it out. Mm-hmm. We're watching it close. Okay, I'm going to go out to my car real fast and get something. And start my laundry.
Help our trade balance situation. Weakening the dollar helps emerging markets first and foremost. So there's a lot of good reasons, valuation-based and economically, to potentially move offshore for your investment portfolio.
Oh, really?
Right. Thank you so much, Rich Weiss. Good to see
You're
you.
a dumbass.
Chief Investment Officer, Multi-Asset Strategies, American Century Investments. Thank you. Good to see you. Coming up Options Corner. Tom White is standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news of Intel, Taiwan Semi.
It says he'd go offshore and look for investment opportunities. And I'll be right back. Oh.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
The dog's funny.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Tom White, host of Fast Market, here to take a look at a few names and example and trades, actual real trades that he's found. And we want to hear more about that. I will say the only thing certain today was the uncertainty, and that is the back and forth action. Not sure which sectors may perform better than others. The negotiations are underway. It certainly has felt a wild ride, but I know you're talking about chips, and I just saw an article that talked about the chips bouncing back, and then you'll see that group of up arrows today, which people didn't necessarily expect. So some of your thoughts.
Yeah, I think you take a look at the market action today. It's all headline based. We snapped back pretty significantly with the Nasdaq now positive, the S&P 500 positive. Is it capitulation? I'm not sure. If you look at the technical levels, we were oversold on all four of the major indices. The RSIs were below 25 to start the day. We were down over 5% on the opening on Sunday evening. So maybe it's that capitulation day where maybe people are starting to dip their toes into this market. Now you got to remember, it's really thin trading out there. You're getting moves on a minute-by-minute basis that you typically don't see, just because there's nobody sticking their neck out. There's no depth in the markets at this point. You're seeing bonds sell off pretty significantly. Those yields are rising. I think the 10-year's up 16 basis points. It's off 30 basis points from its lows from earlier in the session. So is this a full capitulation day where it's safe to go back in the water and put risk on? I wouldn't say that by any stretch of the imagination. But you're getting tech leading here to the upside, where some of these Mag 7 names are helping propel the overall market, even though maybe it's still a little bit unhealthy with the VIX above the 45 level and still reflective of uncertainty out there in the markets, Nicole. I think it's, we don't have any clarity on any of the decisions from the administration at this point, and that's going to, weigh heavily on risk on assets. But it's nice to see a little bit of green on the screens after 2.5 days of red.
Yeah, for sure. I mean, it was tough to stomach because people weren't expecting such a sell-off and having it be so fast. And so, really, the dynamic, the size of it all was huge, right? When you see 8, 9, 10% of the major averages, and now all the major averages have hit 52-week lows today, it just happened really quickly. And maybe had it been a little slower, people could have digested it a little better. So let's hear some of your thoughts here on Intel, for example. You found a bullish trade there. Let's hear a little bit about the Intel story and the trade you found.
Yeah, it seems like at least once a week I'll find some unusual option activity in Intel. It's a cheap stock. People try to take shots in this name, looking for some good headlines, right? But, they've been getting their lunch eaten by AMD. They've lagged as far as innovation on the AI side. The new CEO is trying to turn the ship around. We'll have to wait and see on that, if that takes place. There was an announcement late last week that executives from Intel and Taiwan Semi reached a preliminary agreement in their joint venture where TSMC is going to own a 20% stake in the new venture. Then Citigroup came out with a note immediately afterwards and said, nah, it's not going to be accretive to Intel at all. So it was positive news, but not positive news at the same time. But not surprising, we're seeing some bullish activity in here today, even though the stock was doing a little bit worse than some of the other chip names in the space. Trader bought out in the January monthly cycle, so 284 days to expiration. So long term from this trader, they bought 14,000 of the January 20 strike calls, paid an average debit of about 370. So that break even at 2370 over the next basically 9-10 months. That's about 20% above the current share price in there, with IV levels at the highest that we've seen in Intel in basically about 5 years. So implied volatility levels with the VIX around that 45 level. Not surprising that they have to pay a lot of option premium. But I think the key here with this trader, what he's trying to do is set up some bullish momentum, but he's given himself plenty of time for things and markets to work themselves out.
Yeah, and what's interesting, and I want to hear the Taiwan Semi because that's part of the story too. I want to hear the trade that you have there, which I believe is more bearish. But the big picture here is just shows how quickly the market can turn on a headline. We had a headline that was reportedly false, but the market took off. I mean, it literally took off. It turned from negative to positive in a big way, and every single sector was in the green, all but one.
Yeah,
it shows that with one headline, you can move this market.
Yeah, and Nicole, you make a great point. And I mentioned that earlier, the liquidity, there's no depth in the markets at any point. And when you're at such extremes as far as oversold levels in such a quick period of time, you mentioned that the velocity of the downturn over the last 2.5 days that the market's been open has been pretty spectacular. I haven't seen it in my 30 years as far as pullback here. And that sets off triggers when you get, even though the headline was false and the White House denied it, that they're going to delay some of the tariffs for 90 days for some of the countries besides China. Even though it was false, it still puts, I think, some semblance into investors and traders' minds that, hey, when we're extremely one way in the markets, which is oversold, any positive news or thoughts of positive news can kind of turn momentum. That doesn't mean it's going to play out well, Nicole, by any stretch of the imagination, but it does, affect the, the thought process in the markets here when we're oversold by such extreme levels, and we still are.
Right, understood. And I did have one managing director message me and talk about the market structure, ETFs, some with leverage, has equitized credit markets, allowing investors to see real-time values. I mean, I just think everything is moving faster, and you have program trading, and you have algos kicking in, and I mean, there's just the swings, I guess, the velocity. You make the great point. I mean, you could be down 4% and up 3% in the blink of an eye. Yep. Okay, and so Taiwan Semi there?
Yeah, same thing here. I think if you take a look at the tariffs, I think this is a big headline for Taiwan Semi because nobody expected, the tariffs that got slapped on them. When you take a look at what the U.S. put, 32% tariffs on Taiwan, That's a lot higher than what the market expected, and that's why I think you've seen that big, massive pullback. It's down 12% so far this month, off 26% so far this year. So we pulled back from those all-time highs that we saw just a few months ago. Now, Taiwan's president did come out, offered zero tariffs as a basis for the discussions with the U.S., pledging to remove trade barriers rather than imposing reciprocal measures. That's probably a positive, even though Taiwan Semi still struggling here a little bit today. And this comes after the fact that Taiwan Semi pledged $100 billion in U.S. investments over the next several years here. Is that going to be just a promise, or is that going to come to fruition? We don't know, but the joint ventures with Intel and them currently building fab facilities here in the U.S. is probably going to benefit them. But you'd like to get that tariff removed for the future, for discussions, and maybe to see a little bit of bullishness here in Taiwan Semi. But I did see some unusual option activity, and this is to the downside. And this could be somebody speculating. This could be somebody protecting a long stock position, although implied volatility levels are really high. So protecting those long stock positions is going to cost you a lot of money. But this was out in the June monthly cycle, so 74 days to expiration. Trader bought 7,500 of the 135 strike puts earlier today. Paid an average debit of just under $11 per contract. So that break even, where this trader starts to profit, is below 124.10 over the next 2.5 months. That's about 14% below the current share price in Taiwan Semi. So yeah, some bearish activity, not surprising in Taiwan Semi today.
Yeah, understood. And that's what we were talking
It
about.
just seems like it's going to give up here soon. I mean, we keep going up and down, up and down, up and down. And we got another megaphone here. So this time it could break the 200. Or it could go higher. One or the other. Because we also got a head and shoulders right there. I don't know what I want to do. We could have a nice little breakout. Or we could have a nice little pullback. And I'm going to go for the pullback. Yep. Okay, get ready. And the time is 1:27, so we're pretty far out of the money right now. This is a tough call because these options are so freaking high. And for me to want to, have a decent price, I'd have to go to the 5200s again. And then I get so far out of the money and we're so close into close. That's where it gets a little risky. What do you think? Are we going to hold this here support, or are we going to break it down? Because I might try for one, and if it doesn't hold, I'll add another at the 200 EMA. Because it is getting that time of the day where you just got to be a little bit skeptical. The devil says, do it. $4.20. We will find out in a hard way. Uh-oh. We're going to find out. The crowd's going wild. There's quacks in the marketplace. I'm no quacker. The SPX pulled back to while the upward trend line. Do you see the megaphone? That's the question. Okay. That's the question. I mean, it can easily pull back to either one of these moving averages. And I'm so far out of the money, so I got to be real. I got to watch this close and not taking naps. And then I'll call lens crafters and find the size. I wish I wrote that down. Size of my glasses, so I can order another pair online, cheaper. This one company says I can get it within a day. Okay, come on. It's kind of risky, so don't know that if you enter this trade, you're taking a risk. But if you can count to 4, you just might make a little bit more. We didn't reach that megaphone on the last high there. Oh, 490. Now if you're chicken, you get out now. Oh. Come on. Always Clean Janitorial, Retail Traders.
Hi, this is Joe with Senior Care Services. How are you doing today?
I'm doing okay, Joe.
I'm reaching out because our records shows you might be eligible for special state-regulated offers. May I confirm how old are you?
No, I'm not telling you how old I am. It's none of your damn business. Especially if you sound like a robot. I'm 64, Joe. Whatever your name was. I'm a dying old man. I played rock and roll and bluegrass and I lived in Memphis. I was born a poor white child in Sacramento, California, in a black community. I got laid when I was 16 years old by my mother's best friend. My teacher took advantage of me when I was in 3rd grade. Her name was Mrs. Johnson. And I dated a cheerleader at Central High School and a Vicette at Parkview. We're now at 5:30 and I'm making a business decision. This is called a megaphone. And Joe, I'm trading a megaphone pattern right when you called, and I was inside of a trade. I didn't want to be bothered at the time, so I apologize for hanging up on you. Oh, God. Washboardjim, may I help you? This is the sneaky snake trading strategy where I chase women in the day and they chase me at night. May I help you? You're on a recorded phone line, and I'll contact you as soon as possible. We have 3 white soldiers off the bottom of the megaphone. We have a snake breakout, pullback, high or low. If you can count to 4, you just might make a little bit more. Come on. Let's do it. Let's get a Trump tweet. $5.40, maybe. There it is. It's having a hard time doing it. There it goes. 540. Woo! $5.50. Thank you very much. That's how you play the megaphone. What'd you think about that, Mike? Are you proud of me? You think you lived in Sacramento at one point? I was born in Sacramento Hospital at 1961. That's a tough town. That's if you've been in San Francisco, that's not a that's a tough town. You were born there too? Huh. Oh, interesting. Doop, doop, doop. Here's the envelope to my birth certificate. Let me see if I can pull out my birth certificate and see if not give too much.
Danger, Will Robinson.
You're going up a little higher. I haven't lost a trade today one bit. One of my biggest days ever. I wish I'd have held them 2 calls I had at first. That'd have been 20 grand. 24 grand. Just 2 calls, $1,000. I remember when we were outside of Sacramento, when I was a little bitty kid. I laid up, hid under, it was at night, and I heard these motorcycles, and I went and hid under a bush, and I think I was there for 45 minutes or so, and motorcycles, just Hell's Angels. And it was weird. I mean, I'll never forget it. The bikes, just hundreds of them. Probably thousands. And I hid under a bush just to watch them go by. It was loud. It had been about 1965, maybe 66. Oh, I don't think I've had my face on here. There we go. Well, that was $130 added to my portfolio. So this is kind of something this is interesting to note. You have that pullback, and then when it broke out, it came back again, but it created a higher low. And I notice a lot when I see that higher low, that they usually break out. If it would have like pulled back to a lower low, I'd been more skeptical of it breaking out. But that higher low kind of gave me an extra, soothing, like we could go ahead and continue up a little bit here. And then you had the 3 white soldiers right after it. Now it's respecting the 63, as you can tell. Looks like we're coming back down. Snake breakout, pullback, another higher low. Okay. We're waiting. Let's see what the... Oh, hello, honey.
Tech, a lot of worries about tech and the outlook for tech. We'll be right back.
Yuck. Back down to 330. Last time I got them, they were at 420, and we were a lot lower. Yeah, see how they're depreciating. We're experiencing technical difficulties.
Planning all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there
Dad.
were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Welcome back to the watch list. Our panel is ready to talk all about the tech sector. Pence Capital Management, and Young-Woo Ma, Chief Investment Officer at Beam Wealth Management. Thank you both for being here. Dryden, I'll start with you. So much concern about tech. Someone like Dan Ives has said this has set us back a decade.
It's just unbelievable how expensive these things are when we're down here at the bottom. Sometimes I don't understand these. I mean, right out of the money, they're almost $3,000. See, if I was going to buy them again, I'd do it right here. But God, they're so far out now. I get that, that little nervous where I don't really want to buy it. Or hit the 200 even. I got a double confirmation. Let me see. Yeah, I don't know. On a normal day, I'd buy them here, but they're so far out of the money. I'll just wait. Let's see if we hit 200.
I think there are a few questions now, given this new tariff regime. Is one, which companies have potential to see profit margins squeeze or more difficulty in terms of whether it's shifting production or geographies in terms of where they generate their profits. If that is at risk, I think there is a new calculus at hand. But overall, the major trends are going to stay largely the way they were. And we do think that the first wave of the selling in the tech sector was everything goes down. And the second wave is some of the more stronger names, which we'll probably see during earnings season, start to stabilize and hold up a lot better. So I do think there are bargains to be had, but that doesn't mean right now it's wholesale bargains out there.
So what kind of names would you be buying? Let's go over that. I mean, there are names that may be most exposed to tariffs that you want to stay away from, and others that may be best positioned. Dryden, what would you maybe buy today, or you're watching to buy soon?
Sure. We're looking at companies that are least affected by tariffs. I mean, the entire market was taken down by this. Everybody kind of threw the baby out with the bathwater as what we believe is an overreaction. And so when you look at companies like Meta, we have a forward PE of 20. They basically get 44% of their revenues within the United States. Or you look at Salesforce with a PE of 22 now, where they're getting significant revenues in the United States, and even Google. So companies that have a lot of their revenues in the United States that are more in the software realm and area, they are going to be least affected by these tariffs. And so they've been most affected by the overreaction. They'll be least affected by the tariffs. And so we think that there's opportunities in this. We've always said we want to take advantage of volatility and not be its victim.
Yeah, and Young-Woo, what would you say? Are there names that you like that may have potential opportunities, or on the other side, the ones that are so much exposed that you wouldn't touch it?
Well, I think the advice you just heard is very sound advice, that thinking about the names, I don't do individual stock picking, but thinking about the names that fit that profile, that are more exposed to the U.S., that are not likely to have margins shrunk in terms of what they're importing, that tend to be software focused or have intellectual property that is very robust and has a big moat around it. I think those are the names that you want to look for. The ones that could be subject to tariffs, perhaps rely on China more, perhaps would have profit margins squeezed due to tariffs and a shifting regime where they might have to shift production around, and it's uncertain how much of those new costs could be passed on to consumers. I think that's where you want to be more cautious here. That doesn't mean that bargains can't eventually show up, but probably the first wave where everything goes down, you want to look at those things that are actually going to be least affected in this new environment.
Yeah, and you mentioned, by the way, Dryden, thank you for that, Young Yu. You mentioned Meta, Salesforce, Google as your picks. Also things that are in the software realm. Anything hardware?
Okay, here we go.
Waiting to see on that.
I think you have to wait on the hardware because right now we're waiting for negotiations to take place. Who's going to come to the table first? What's going to actually happen? So the math is very foggy at this moment. So I think you have to wait a little bit on hardware, but I think we're probably in a period of time where fairly soon you're going to see some key responses from either the White House or the various countries. I mean, I think that there is a trade.
The 5150s right now. This is a little risky again. Calls, Lotto. Lotto, do, re, mi. That's not good. It's hard to pick them because they're so expensive. 11 Delta. You tell me I should sell it? Come on, baby. Do me a favor. It's very risky. $420. Come on, give me $5. There's 440. Ooh, 510. Okay, there you go. 690. I'm out. 670. What do you think about that, Mike? Are you impressed? Say yes. Unbelievable. That's what I am. I'll take it any day of the week. What'd you think about that, Richard? Am I the master trader? Magnificent. Go ahead and give me a good grade. Oh, very good job, Francisca. You can pay for the wedding. Bravo. She gonna pay for the wedding.
It's all fake news. It's phony stuff. It didn't happen.
That's what you are. Are you learning anything, Francisca? I think that was beautiful. That's off the 200 SMA to the 63, just like clockwork. Tick tock, tick tock, tick tock, tick tock. Oh, very good. Rob. That's what you are. That was a nice trade. less than 5 minutes. 5 minutes, I made $300. Five minutes. $12 times 300 in an hour, that would have been 12 times 300. Let me see, 5 minutes. Yeah, $3,600 an hour. Now we're back at the 200. But you know what? Fool me. I got away with it the first time. But can I do it twice in a row? And we've got 6 minutes after power hour. You think I'm crazy? Wouldn't I rather buy the dip from here? It's all about the time of the game. So always look at the clock before you take any trade and see what time it is. Because sometimes it can be a very long day, or sometimes days go by fast and you think you're still halfway through the day and you get in it and you got 5 minutes left till the market closes. But I have a watch. I have, every monitor has a clock on it, so I always look at the time, or I try to. Whoa. While I'm waiting, I'm going to go put my laundry in the dryer, and I'll be right back.
It seems like a rite of passage here, Caroline.
Yeah, I think he really points out that the bigger worry is just that he thinks that China is the linchpin for Tesla's success, and he thinks that Musk's association with the Trump administration and also the tariff backlash could make some of those Chinese customers buy domestic brands, because we know there are several competitors that they could buy: BYD, NIO, XPeng. You know, there's quite a few options there. I do think it's important to note, though, that despite the fact that he slashed from 550, the highest on the street, to 315, he's keeping a buy rating, and 315 still does imply about 35% upside from current levels. So not back to the highs, but that's still a bullish call.
It absolutely is. And it was same to be said for Apple, actually, where his price target, even though reduction, is still well above where we're currently trading. So both price targets don't necessarily say head for the hills, sell your stock by any means. And that's, I think, important context. There's still a lot of enthusiasts of this name. I heard Alex Coffey making jokes earlier that Gordon Johnson has been correct. But hold on, wait a second. To that, I say absolutely not. Tesla is still 69% off of 52-week lows. So nearly 70% off 52-week lows. We touched 138.80 a share almost exactly a year ago, April 21st, and we're still well off those levels. It just goes to show what can happen in 12 months of trading in Tesla shares. Hang on for the volatility. That's all I can say.
I do want to defend Alex. I think he said if that was the case, Gordon Johnson might be right.
Oh, it was to you.
It was to me, yes. And I will say also, Dan Ives did scale back his delivery estimates for 2025. He emailed me saying that previously they were at 1.9 million. Now he's forecasting 1.7 million. So, scaling those back as well. I know you also have Dollar Tree and Dollar General on your radar today. Dollar Tree actually the second best performer on the S&P 500. Fill us in on what's driving those names.
And we were laughing at last week how this was our only upside catalyst, but now that we're in week 2 of this pressure and it's still hanging on, I'm no longer laughing. I'm saying this genuinely more seriously because of all the volatility, finding these safety nets and oftentimes more defensive type names, I think is hugely important. And many are saying that will be the case for these discount dollar store or discount retailers per se. So with an upgrade today, Dollar Tree upgraded to buy from neutral. Well, we also did see Citi actually raise its price target to 103 from 76 a share. So would apply some healthy upside. We were trading at around just shy of $73 a share. But Dollar Tree, the story there was, I mean, they couldn't have not released better timing on this news of divesting that stake in Family Dollar that has been the biggest black eye of this brand for, I mean, now the last 10 or so years since they've taken over Family Dollar. So ridding themselves, hopefully, of the assets helps right-size their costs and cost structure. I also do know that right now with tariffs also concerning many consumers with price, we've talked a lot about the strength of the U.S. consumer that's held up the markets for years at this point, but what does that look like now with more pricing pressures, more expectation that we could see the trade down effect? It could see finally some of these Dollar Tree and Dollar Generals benefit. I find it very interesting because the market has not been a friend to either of these two names in the last year or so, and so I guess given the environment and maybe get, again, more pricing concerns, it now brings more of that trade-down impact, but we just haven't seen it yet, frankly. And you have Dollar Tree that even though it's higher now over the course of, I mean, it's still well off lows, it's also fallen so considerably. And I think that has been what is so interesting about the way we've shifted so quickly on some of these more traditional value names. Like Dollar Tree, for example, off lows by 20%, but still off highs by almost 45%. Dollar General has been a bit of a stronger performer because we are actually now up almost 22% on the year. So both these names looking like outperformers, at least on a year-to-date basis. I also do think it's an amazing fact. I know I say this every time we mention them, but the store footprint in the U.S. of Dollar General in particular is astounding. I mean, it's bigger than Costco, Target, Walmart, Kroger, Albertsons, and I believe it's Dick's Sporting Goods all combined because it has 20,000 retail locations. I mean, that's crazy to me.
I remember hearing you say that on air, and really, that's kind of a shocking statistic. There was also that UBS note last week that said that Dollar General has much less exposure to China, likely why it's still up so far this month, whereas Dollar Tree is still down about 3% so far in April after the big sell-off of the past few days. But both winners today with Dollar Tree up 7.5%. We'll leave it there. Jenny Horn, thanks so much. All right, let's discuss those tariffs a bit more. And this is a good segue because we're going to talk about the chances of a recession. And we know that Dollar Tree and Dollar General both could outperform if that is in fact the case. Joining us for the conversation is Paul Grunwald, Chief Global Economist at S&P Global Ratings. He joins me now at the desk. Paul, thanks so much for being here.
Great to be here.
So we certainly know the market impact so far of the tariffs, but I want to talk about the economic impact.
Right.
Obviously, there's still a lot of uncertainty in terms of what we actually will see, in addition to what we already have right now. Is there negotiation? Could there be even steeper tariffs on China? We heard President Trump threaten. But what do investors need to know at this point about the economic impact of these tariffs?
Yeah, well, we're watching exactly that, right? We had this seismic shift in trade policy. We had the market reaction. And now what we're watching in my team is this going to translate to the real economy? We already had a slowdown this year, right? We had the soft landing as our baseline. The question is now, is the uncertainty and all the tariffs and all the the volatility and then the wealth decreases from the stock market correction, are those going to spill over? The key nexus to watch is consumer spending in the labor market. That's been hyper resilient since the peak of COVID a couple of years ago. If that starts to crack, then we're going down the road for a recession. That's still hanging in there, but that's the key thing to watch.
Well, to your point, recession has entered the conversation more and more. We're seeing several people up their chances of recession. I think Goldman Sachs is at 45%. Right. We heard BlackRock's Larry Fink at the Economic Club of New York say that most CEOs he talks to would say we're probably in a recession right now. What do you think about that?
That's a little bit premature, right? Because a recession is a real economy thing, not a financial economy thing. So we would need a broad-based, significant downturn in activity. I don't think we're there yet. We would agree with the assessment that the risk of that has gone up. We didn't hold it. Forecast around 2 weeks ago, which was refreshing. In that one, we had the recession risk in the U.S. of about 35% over the next 12 months. That's almost certainly going to go up after what we've seen in the last, let's say, week and a half.
Okay, so 35% chance before the tariff, the sweeping steeper than expected.
Right, but we're not ready to make the call as recession as our baseline. We're still in the camp where the recession risk is rising, but we're still in a significant slowdown rather than going full on into the recession call.
Okay, but that will change.
That is to be continued, right? The risk to.
You know what I think? I think we've already had it. I think the economy wasn't what quite they thought it was during the Biden regime, because we kept printing money and hiring government help. Just thousands and thousands and tens of thousands a month, government employees to feed their DEI quotas. It was one of the biggest scams in American history. And we were lied to, if you remember, about the unemployment numbers. They were like 1 million off one year, and I think it was like that every single year.
We're not really ready to make the recession call yet.
Okay, and how should we be thinking about the inflationary impact of those tariffs?
This is the big question, right? So tariffs are a tax on imports. The price level of import is going to rise. The question
Trump talking?
Is that an inflation rate? Is that going to continue to
Watch
rise, or
market.
is it just a level thing? If it's a level thing, the Fed should be looking through
Thank you,
that.
Sue.
They'll be looking at inflation rates, not the level of prices. And then they're going to be watching the labor market. So they have their dual mandate, right? So if we get to a state of the world where labor market is slowing, looks like recession's more likely, they might focus more on the labor market and start cutting. But right now, with inflation above 2 and the labor market looks good, we think the Fed's going to be very cautious. Maybe one cut in our baseline with an eye on, if the economy goes weak.
Eye on.
They've got room to cut if they need to, but, if we're not slowing, they're not going to be cutting very quickly.
So the market's pricing in 5 cuts this year, so not realistic.
5?
We were here this time. Remember, we started in 2024. We had 4 or 5 rate cuts.
5 cuts. What? Where'd that come from? May I say, bullshit. How do they know if it's pricing in 5 cuts? Give me a break.
Going to be a jump. We think the headline inflation rate's going to be 4-ish by the end of the year, with the Fed's target at 2. But again, the Fed and other central banks should be looking through just jumps in the price level and looking at demand pressures in the inflation rate. That's a really tricky spot to be in for the rest of the year, so we're going to be watching all that closely.
I'm getting the rat signal, so we have to make this quick. But President Trump was quoted saying, "I don't want anything to go down in terms of the market, but sometimes you have to take medicine to fix something." Do you look at this as an economy that has to be fixed?
Sometimes you don't have to take the medicine.
That needed to land, and we had a soft landing. So U.S. growth speed limits around 2.
Caroline,
so
you're upsetting me.
Decelerate from 3-ish, which is where we've been.
You're starting to piss me off.
2-ish, without undershooting, with a slowdown or recession. That was the good scenario. That one's now iffy.
Yeah.
Yes.
But Carl will get credit for a soft landing if we do end up in a recession eventually?
I would call that a head and shoulders yes. Not that trend line, but yes.
So maybe he's taking notes
we'll talk
now.
about that next time.
Yes.
Okay.
Thank you so much for joining us. Really appreciate it. All right,
Not the
that's
trend
Carl
line,
Wall, Chief Global Economist
but
at S&P
above it.
Global Ratings. We're going to take a quick break, but coming up
On
we'll
the-
dive into
on the
a couple big
interday.
tech names moving in the opposite
Yes.
direction today. It's Amazon and Tesla. Market on close. We'll be right back.
The answer is yes. You see where I'm talking about?
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations.
3 white soldiers. My dad left me millions, and I didn't have to work. Right to the 63 again. 1, 2 bits, freebie, Boom. 1, 2, 3. Boom. I make it real simple. My philosophy is the simpler it is, the simpler it is. 1 bits, 2 bits, 3 bits, 1, 2, 3 out of the trade. 3 white soldiers, hammer, out of the trade. Back to the 200. Now, if we're going to squeeze, we're going to do it now. But I'm done trading. I really am. I'm burned out. What do you think about that, Randy? Oh, somebody just bought 1,165 contracts for today. Watch. We're going to push. Ooh. Very interesting. That's what you are for me. Can we come back for 4 and make a little bit more? Okay, get ready. The options are a lot cheaper now. Still expensive. Man, they're just so expensive. I would never think this, if the market would dip, you'd think they'd be cheap, but they're not. Seems like they're cheap when they're at the all-time highs. This has been a learning. This has been one heck of a day. I don't think I've ever. You'll never know what kind of day you're going to have, but I can never recall since I've been watching options go from $5 up to 120 in a run. I don't think I've ever seen that. Never so far out of the money. I sat there for minutes thinking if I was going to take them, complaining and whining because they were so high and I was so far out, and if I should take them or not. And I don't think I've ever had a day like that. When they were, I'm talking about 30, 40 points out. 30, more than that. They were 40 lines out. They were way down there. Out of the money. A lot. I don't think I've ever took a stock that far out. Actually, an option. I don't think I ever have. And to watch it turn around like that and not be in it and have to scalp it on the way up, you're just going, sheesh. And buy one at $1,600 and sell it at $3,000 in a matter of minutes. Or if I just held the 5, I could have took it and ran it to 120, 130. Two of them. Ugh. Just think about it makes me sick. 5100s. Boom, baby. Rob. That's what I am. We have 27 minutes left. We'll get some water. That's the way you do it. Look. Now they're so much cheaper. see what time I've got left. Okay. There's no discount. 2:40, 20 more minutes. Time to call it a day. Pulling back.
More than gold? Is it strictly just because it's 16% away from the highs?
So I did up until about a week, up until this big pullback here. In comparison, yes, I thought gold was very, very overpriced compared to silver. Now, with the way that gold is pulled back here, I would flip that actually. Even with silver falling towards, you know, that year-to-date low here, I think gold is the better buy, and I really like the upside.
God.
Okay.
Gold
All
is.
right. So a little bit of a dip today to buy. No flight to safety in Bitcoin either. Has traded quite a bit lower today, around 74.6.
Oh, that's cheap.
Currently trading higher than that, around 78,400. Did you buy that dip? I know you wanted lower, but you did get a dip here.
So actually 76, the 75.5 to 76 area was that area I've been talking about for quite a while, and I did dip in a little bit. Fortunately, it was just a little, and when it dipped lower than that, I did not do anything. But this was, I believe, a buying opportunity. You know, Bitcoin had held in there. There were so many people over the last week or so as the market had really sold off, and Bitcoin didn't follow that. They were really saying, "Oh,
yeah,
it is, you know, we're back to this is the you know,
we're back at support
safety that we want. This is, you know, the store of value that we want." And then we saw this fall off, and I think that the retraction here in Bitcoin is very similar to what we saw in gold. Is people were finally just liquidating what they could to raise capital.
But there was so much money being taken off the table, and it wasn't going into Bitcoin as that flight to safety. So you look at it as a positive sign that Bitcoin hasn't seen an even bigger sell-off versus maybe Bitcoin isn't the flight to safety or store of value that the bulls were hoping for.
I really do, because Bitcoin could have easily traded down to 62.5 or so. That's really the next really big area down below, and it hasn't. You know, maybe it still will. You know, we don't know what is in store next week. We don't know what's in store an hour from now, quite frankly. But I do think that even though we saw over the weekend and today,
my desk is better than your desk
in relation to the equity market and others, that it has held in there pretty well. I think that is a pretty positive sign.
But Scott, what's the positive catalyst for Bitcoin going to be? What's it going to need to get back to some of the higher levels?
There really isn't one right now. All the talk of, you know, the Trump administration having the reserve, that's all gone by the wayside right now. I think people are just looking at it now as value. Listen, it all still comes down to supply and demand. It's not a use case. It's not that we're putting Bitcoin to use in our everyday lives right now. And all of that narrative of what may happen, you know, to Bitcoin with the reserve, with the new ETF, that's all gone. So you're right. From a fundamental basis, it's hard to see why anybody would want to be in crypto or Bitcoin right now, other than the fact that the supply and demand is still there. Maybe once that dynamic shifts, okay, that's a different narrative. But for right now, I think people still are looking at it as, well, you know what, it's 25, 30% cheaper than it was a few months ago. So there we are.
Okay, speaking of supply and demand, let's talk oil, because oil prices are once again lower, down below $61 a barrel right now. Is that where it should be based on the fundamentals?
Probably not. It should probably be mid-60s, as you and I had talked for a long time. Even when crude was trading in the 70s, you know, I was looking for, you know, mid-60s or so, just based on that supply and demand. Well, now you throw in everything else going on globally with recession fears and everything else. Yeah, that's why we saw the panic-driven, you know, lows below 60 here. I think the fair price right now is right in the mid-60s here. So trading 61. You know what, do I want to be long it? Yeah, I want to be long it a little bit. I don't want to be all out into it right here, because there's just too much uncertainty around the entire global economy right now. But I think that 65, 66 area is really the fair price.
Okay, what about in terms of the stock market, Scott? Lots on sale right now. There's been plenty of opportunities to potentially buy the dip. You comfortable putting money to work right now, or do you think that there's more weakness in store?
I think this is still a sell the rip scenario, right? It is so enticing to want to go in and buy, you know, you can make your shopping list, right? Any of your favorite stocks that are down 30, 40, 50% here. But until we know anything, until we have some sort of clarity, even the smallest bit about what's going to happen with tariffs, it is very hard to touch it. And that's why I really think that any rip that we get is sellable at this point. It wasn't like that up until about a month ago or so. But right now, there's just too much extraneous news coming out here on a minute-by-minute basis to say, wow, Google looks so cheap here, NVIDIA looks so cheap here. From a price point, it sure does. And you know what? If you had to buy it and close your eyes and say, where is it going to be a year from now, 2 years from now? My guess is it probably is higher, and probably significantly higher. But that's not how we trade. That's not how we do things.
All right, I was going to ask about what rip, because especially with the Mag 7, we haven't seen much of a rip at all. so far in 2025, and a lot of the Mag 7 are actually negative if you take a look at the one-year charts as well. So, Scott, what do you need to see in terms of, catalysts or in terms of more certainty that will flip you from sell the rip to, okay, now it's time to buy the dip?
I want to see the VIX trade around the 20 handle for a period of time, 2-3 weeks. So you may look at that right now and say, oh man, we're not getting back down there. VIX is 40 plus right now, it's 45. VIX can be 20, 22 in a heartbeat. All it takes is, again, some clarity coming out of the White House right now. But just because we get that clarity doesn't mean that
clarity
the following day. So the signal to me is not really a number on the S&P or a number on the NASDAQ. It is really, to me, as a trader that lived and died in the VIX pit, in the S&P pit, where is that VIX going to be? Where can it settle in for a time being? Where can we see this market just consolidating a little bit? And that, to me, would say, you know what? Maybe it's not straight up from here, but I've got a much better sense that we can grind it back higher than the uncertainty we're facing right now.
Okay, far ways away from 20 right now. VIX trading at 48. Scott Bauer, CEO of Prosper Trading Academy. Always appreciate your insights. Thanks so much.
You sure do, honey.
Coming up, let's close out this market session and get the big picture from the team at Charles Schwab.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to
That's
start
right.
the day, from volatile overnight.
It happened today.
To the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Market on Close. I'm Caroline Woods. Just a few minutes left in the trading day. It's time for the big picture. Let's welcome in Liz Ann Saunders, Chief Investment Strategist, Charles Schwab. Liz Ann, thanks so much for joining us.
Thanks for having me. Nice to be here.
Great to have you. So first, I want to get your take on today's market action, because we're off the highs, but we're also off the lows. We still have 8 minutes left, so anything can really happen. But what do you make of the wild swings we've seen today?
Well, if we close near the unchanged point for the S&P, it would sort of be the epitome of a violently flat day because we've been all over the place. And I think maybe aside from various headline triggers for the moves up and down, you did have an intraday earlier in the day. The weakness in the S&P did bring it into bear market territory, and that was already bear market.
Stifle it. We're going to go over my little watch list. Stocks that I watched over the weekend. I had told everybody to watch. We definitely, the SPY. And we'll put this on the 5-day 1 minute. Today we had a bounce up on the SPY. Nailed what? I get an A+, don't I? Magnificent. Tesla bounced. Talked about the double bottom. We had Apple. Apple kind of consolidated and bounced. We had a higher high from pre-market, and we created a flag. Let's go 5-day 1 minute. Yeah, I can't see a 5-day 5 minute, so we do 5-day 5 minute. Then we had Google. Double bottom, Jimmy called out this morning to the top off that moving average that I called. Perfect. That was beautiful. That was just plumb beautiful. And Nike. Head and shoulders. Held, went sideways. Starbucks. Will bounce off this morning. I think about anything you could have took today and it would have bounced on you. Talked about JP Morgan. Just a real summary of it, not much really talking about it. They like Salesforce. Boeing I talked about. I said Boeing could be a good long. Really, because it's had a real hard sell-off, and they're pumping this up there when it was at 180. And now we're down here at 130. You know, this would have been a perfect trade today. If you come in and watch my video and watch the morning. Then we had Disney. Disney dip. Last night. This morning. Hit my resistance of 85.95. And we had the China. Talked about Target. I think we talked about Target. Pretty sure we talked about it. Maybe. I have to go back and watch. Lulu seems to me like the Lulu, my excuse for Lulu going down is a lot different than what theirs was. They blamed fears of recession. I blamed that people were going back to work and it's really not appropriate to wear Lulus to work. That was my reasoning. But these people are too dumb to realize that. And Tesla. And GME. GME bounced up to my resistance levels. If you're listening up out there, Jimmy nailed GME. And you watched my video. And AMC, Mikey's little stock, not Mikey, our Mikey, but Punk Mikey. The pumper. Mikey the Pumper. He probably shit his pants when the stock ran 30 cents today. Tesla bounced off by support level. Perfect call on Tesla. It's going sideways now. Don't take a lot of that rhetoric from these idiots. Tesla's a great company. It's an innovator. It's everything that the liberals wanted in a stock. And there's all kinds of CEOs that get into politics, and they got lobbyists. They go up to Washington. Zuckerberg was one during the Biden regime, and look how it ran. Speaking of Zuckerberg, Meta was another one we talked about. But he's a kiss ass. Meta had a good run today. Really was impressed with Meta, how it bounced back and hit that red line and then took off. 50 points. So that's it. I'm getting out of here. I've had enough. My laundry's just, timer's going off to go check my laundry. And, okay, I hear you. I think we all had a pretty good day today. If sat and listened to the room, and there's some good call outs in the room today. Good job, Rob. Good job, Magnificent. You never did give me my A+. You said you'd do it yesterday. You're still in denial, huh? That's all right. I'll get you back one day. Very distant with my voice. Everybody else said they heard me good, man. What are you talking about? Maybe I gotta do some adjustments. Rob didn't say that. Okay, well, I'm going to get out of here. I want everybody to have a good night. That looks like an actor. And we'll catch you all later.